Lady, are we live? Wait for it. Wait for it. There it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say it live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on that video. Make sure you're subscribed. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream Alerts boot camp and real estate course. But, ladies and gentlemen, welcome to day 2 of PHILO. You're going to have PHILO before the House Financial Services Committee. This will be day number 2, especially after what happened yesterday. We have a lot to deal with. You even have a lot of people in the market talking about a potential 6% rate, which is wild. We did get jobs report this morning, or part of it, the ADP which one was it? It was an ADP employment change. That came in really hot. You could kind of see it here on the drop. Then we recovered because a lot of people realize ADP is not the non-farms, and there is a big difference in the sample size. But then we also got mortgage applications. They ended up doing good. And then the trade balance came in slightly above what was expected, but nothing too crazy. All in all, though, the market is looking at the rate hike odd percentages. We're waiting for Powell, and then now we are setting up for Friday and the non-farms, and then Tuesday you get the CPI. And did you know on Saturday you got the Fed blackout period too? Oh man, it's Chad, the ball is rolling. Welcome to March. Welcome to Wednesday morning on March 8th, 2023. I hope your morning is good. I hope you're ready for another one. In Chattadonia, good morning, baby. How you living? What's going on? What's up, Tez? What's up, Joe Ross? What's up, Malcolm King? It's Ad Wednesday, Stafford. Tell them. Open face sandwich ready to go. What's up, Trevor? What's up, David? Lateral, Vincent, Mars, Kurt McGart, Tim Whitman, baby. Oh, good morning. Owen Osborne, Flame. Oh, Ted's again. Cavius, Tony Garlinger, Music. Ovidia, Keanu. Good morning. What's up, Craig? Flame, you ready to play? Oh, PNC is in the house, baby. PNC is in the house. Live and direct. Bright and early, baby. Let's get it. Battleborn 702. Let's show them how it's done. Good morning, Nick Dean. Good morning, Peggy Williams. She waiting. Ready to go. Cameron Watkins woke up bright and early. Smoking section. Gang, Chad. Good morning. Good morning. What's up, Doppler? What's up, Trey? Oh, it's your birthday? Let's go. I already got the horn on deck, bro. Happy birthday and good morning. Let's make it an awesome morning. What's up, Jack Grace, Laker, Jay, Asher Poland, Rob Canton, Norman Tron, Nepal. Oh, good morning. Wandering Strange, good morning. Armando, good morning. Chris Kite, Theo, Emmanuel, Lucky Soldier. What's up, baby? Data Junkie. Oh, Danny's in the house. Danny ready to go. I know Danny ready to go. He in the house, baby. What's up, Lucky J? Freedom. Oh, I like freedom. Freedom's good. Say freed. What's up, baby? Mother Liquor, good morning. Picky Yodi, good morning as always. Amor Fati Trav, let's get it, baby. Let's get it. It's a blessing. Good day to have a good day. What's up, Vela Trade? And Charlie and the tree. Good morning. Good morning. I'm ready for day 2. You know that? After yesterday, I was shocked. It was exciting, but I'm ready for day 2. I'm ready for March, Chad. I hope you are too. Good morning, and God bless you. And let us now get into the news, huh? Who's with me? Honestly, man, they're already talking 6%, bro. That's it. You already got people talking 6% today. All right? Get off that 6% shit. I'm on that thing shit. I ain't on that. No, okay. I was listening to the Lil Wayne in the morning. That's what happened. I'm sorry. Okay, I'm sorry. Okay. Anyways, to get to the news, Jerome Powell is up again today after ruffling markets with his hawkish Senate remarks. City forecast a 50 basis point hike this month, and Fed swaps are now showing a 75% chance of that. Still, Bob Michelle at JP Morgan Assets said any reversion to that would be pretty confusing. Such a move is on the table if Friday's payroll print is strong, but that's a pretty high hurdle to get once you've downshifted. I hope they don't do it. Private employers added a consensus topping 242,000 jobs in February. The ADP has reported more than double the January revised total, and and underscoring persistent demand for labor. The Fed's Thomas Barkin said the labor market has been unbelievably resilient. The JOLTS jobs report for January may show openings fell to 10.6 million, but Bloomberg is expecting the closely watched ratio of job openings to unemployed to stay historically high. And we get that here today, too. That's 30 minutes after the bell, pretty much right when Powell begins. Powell is going to be at 10 a.m. here again, Eastern, but that is when you will also get some data. The rate-sensitive 2-year Treasury note extended the climb above 5%, while longer 10 years fell. The dollar was steady. Futures lacked direction as traders awaited Powell's reappearance. Oil was lower. More traders are hiding out in credit markets as stock markets take another pummeling. They're finding refuge in top-quality bonds, especially short-term securities. Global IG credit funds have absorbed over $70 billion this year, making it the biggest inflow for this part of the year since EPFR data started tracking in 2017. Boeing is close to sealing an order from Japan Airlines for at least 20 of their 737 MAX planes. Izzy Englander's Millennium Management changed their terms to ensure clients always pay a minimum fee of 1% of assets, even if the hedge fund loses money. Tesla is under investigation by U.S. regulators over complaints that the steering wheel can fall off on certain new model year vehicles in use. Credit Suisse, they obtained license in China to launch their wealth management business in the first half and expand onshore security trading. The Bank of Canada is set to become the first central bank to hit a pause on rates. They are expected to hold at 4.5% today, ending a streak of 8 increases as pledged in January. The RBA's Philip Lowe said he has completely open mind, but it's an April decision that will be guided by data on whether or not to raise or hold. Cotiviti may be allowed to pay a whopping 50% of interest on a $5.5 billion loan with additional debt in the largest ever buyout financing arranged by private credit. In a major concession to win the deal, private lenders are discussing giving Veritas and Carlyle a payment-in-kind option, meaning they could finance interest with fresh debt for a maximum of 2 years, people said. U.S. crude inventories registered the first drop in 11 weeks. The API is said to have reported, halting recent gains that boosted stockpiles by more than 60 million barrels. Stockpiles fell by 3.8 million barrels last week, while those of gasoline and distillate expanded to a combined 3.7. New York City tops the list of places where the super rich are snapping up properties. Data from Altrata says a total of 21,714 ultra high net worth individuals worth over $30 million own either a primary or secondary residence. London and Hong Kong are next, with LA and Miami rounding the top 5. Aspen has the highest concentration of wealthy residents in the U.S., with the density 15 times greater than New York. 10 a.m., you're getting Bank of Canada rate decision. 10 a.m., JOLTS jobs opening. 10 a.m., Jerome Powell testimony in the House. 10:30, EIA crude oil inventories. 11:30, U.S. to sell $36 billion of 17-week bills. 12 p.m., USDA March WASDE report. 1 p.m., $32 billion of 10-year notes. And Joe Biden is expected to propose a 5.2% raise for federal employees in tomorrow's budget, the largest increase since Jimmy Carter was president. The Washington Post reported the boost would go into effect in January. The U.S. may relax COVID testing requirements on travelers from China this week. People familiar said a significant step towards normalizing links as the pandemic recedes. U.S. mortgage rates increased for the 4th week to the highest level since mid-November, according to the MBA. The contract rate on a 30-year fixed rose 8 basis points to 6.79. Debt ceiling pushes new Biden budget in the market spotlight. Ignacio Visco openly criticized ECB colleagues for making statements about future rate hikes when officials had not agreed to give such guidance. The rich bank must substantially tighten policy for a significant period to get inflation below 2% to hit their goal. First Deputy Governor Anna Bremen said, and Norges Bank said they may need a raise by 50 basis points due to a weaker than expected krone. Euro area GDP did not grow last quarter in the final reading, compared with an initial estimate of 0.1. German industrial output rose 3.5 month-on-month in January versus consensus of 1.4 and a revised negative 2.4 for the prior month. Hungary's inflation slowed for the first time in 19 months to 25.4%. Poland's central bank will keep their main rate unchanged at 6.75. The PBOC has set a stronger than expected won fixing as it weakened towards $7 per dollar after Powell's testimony, setting the fixing 56 pips stronger than consensus. Bloomberg calculations show the offshore yuan snapped 2 days of losses. Japan's current account balance flipped from 1.9 trillion yen to a deficit of 1.9 trillion yen to a 33 billion surplus the month before. Indonesia's central bank intervened in the forex spot and domestic non-deliverable forward markets as they saw quite high pressures on the rupiah. And the Bank of Thailand said the baht will remain highly volatile. Australian PM Anthony Albanese starts a 4-day visit to India. China's copper exports are set to jump in the coming week, signaling a tepid recovery in local demand. At least 4 major smelters plan to deliver an additional 23,000 to 45,000 tons of refined metal to the LME depots in Asia. The Bloomberg Commodity Index is testing a historically significant zone under which bulls risk serious capitulation, with an objective around negative 10% at 92. Wheat and soybeans declined ahead of the WASDE report. The world's Platinum Investment Council raised their deficit forecast for 2023 to 556,000 ounces from 303,000 ounces, citing a surge in Chinese demand. Mine supply on a top producer in South Africa will also be curbed by worsening power outages. The price of Russian crude is rising for buyers in Asia as a pool of bigger customers from China and India expands. Offers for Urals and ESPO grades rose by as much as $2 from last month, making it one of the steepest jumps since sanctions were imposed on December 5th. Adani Group repaid a $500 million bridge loan due tomorrow. People Familiar said the latest in its bid to restore confidence. Toys R Us owner WHP Global secured $375 million in growth capital from Ares. The transaction values the company at $1.6 billion. Advent and CVC are among PE firms eyeing a minority stake in Lufthansa Technik. Fragrance firms, including IFF, risk potentially hefty fines after prosecutor raids over concerns that they colluded over prices to supply scents and ingredients. Unannounced inspections were carried out on the premise of Gavaudian, Cymrus, IFF, and Firmatech. Swiss, UK, and U.S. regulators were involved. Adidas slashed their dividend, missing estimates, and offered no concrete plans for disposing of $1.3 billion in Yeezy gear. CEO Bjorn Golden said he will plan a return to profitable growth in 2024. BNP Paribas plans to move a bulk of their Hong Kong staff out of CBD offices as soon as next week to cut costs. Deutsche Bank, Bain taps Goldman and Morgan Stanley for Schenker sale. Walmart says they plan to invest in MXN 27.1 in 2023. Norway's health fund to vote against Apple executive pay. Microsoft strongly disagrees with CMA findings on Activision deal. Salesforce is adding OpenAI ChatGPT to business apps. And then BioCytogen agrees to non-exclusive licensing pact with Janssen. That's J&J related. And then SUVs don't often generate fiery odor, but SUVs aren't usually made by Ferrari. The $390,000 Purosangue, Italian for thoroughbred, is the automaker's first four-door vehicle, and it's a smoldering bulk of heavy metal, carbon, and supercar heart. But can it knock the $230,000 Lamborghini Urus from its position as the best performance luxury SUV? A Twitter employee is trying to gain clarity as to whether he was was mocked by Elon Musk, who chatted openly about the worker's disability status to other people on Twitter. Before apologizing, he said Holly Thorlefison, who has muscular dystrophy, is now considering remaining at the company even though he was just fired a day earlier. A growing divide. Never married women are the fastest growing cohort in the labor market. Yet as their ranks have swelled, their wage gap has too. The group's median weekly earnings are 92% of what men who have never married make. Wells Fargo found the gap had increased from a decade ago when they brought in 95.8% of what men did. Grey Goose Vodka made John Frank a fortune when he sold it to Bacardi. He used that fortune to build a 17,000 square foot mansion on 19 acres in Greenwich, Connecticut, in what the architect dubs the high Gregorian style. 14 years later, Frank has decided to sell the listing for more than $33.8 million. China is cracking down on the practice of paying wedding dowries to the bride's family as it attempts to boost its flagging birth rate. In some cases, the bride price amounts to tens of thousands of dollars, a multiple of annual income of the groom's family. That increase, thus increasing unaffordability of marriage, may explain why fewer people get married and have children. They have a dowry, Habibi. That is how you do in Middle East. Wow. Look at the China. So advanced. So advanced. Welcome to the Wild West of biological research. In the wake of the pandemic, there are more high contaminant labs than ever before, but fewer safeguards to ensure risky research is done properly. The international research community is finding less common ground around transparency, accountability, safety, and security. And then on this day in history, Scottish writer Kenneth Grahame was born in 1859, but didn't actually produce much until middle age. His best-known books are The Wind of the Willows, with the imitable Mr. Toad, and The Reluctant Dragon. He worked on the Bank of England from 1879, but retired in 1908 due to ill health, which may have been brought on by a shooting incident at the bank in 1903. He was shot at 3 times, but the bullets all missed. He died in 1932. Kenneth Grahame. I don't know who that is. I have zero idea who any Kenneth Grahame is. I have no idea. I'm sorry. I'm sorry, Chad, but it's okay. Today's his day. It's your day too, man. It's your day too. Yes, Powell is speaking 30 minutes after the bell. So we are getting day number 2, baby. Day number 2. But in the meantime, I got some pre-market movers for you. CrowdStrike, they gained 5% after the cybersecurity company reported fourth quarter results that beat expectations and gave a first quarter forecast that was above analyst consensus. Edward Life Sciences, EW, slides 2% after Wells Fargo cut their recommendation on the medical tech company. Lifetime Group, LTH, rises 5% after the operator of fitness recreation facilities first quarter adjusted EBITDA topped expectations. I know Lifetime. Is that the little gym machines that say Lifetime, or is that like Life Health? That sounds familiar. Maxion Solar, MAXN, they jumped 23% after the renewable energy equipment provider delivered fourth quarter results that were bullish in the first quarter forecast. That beat estimate, with Morgan Stanley analysts saying margin and order improvements are quicker than expected. Mesoblast, MESO, shares jump 11% after the FDA accepted the biomedical services firm for resubmission for their stem cell product Remestis L, with Piper Sandler saying they're confident in the therapy's approval. Micromatrix Medical, Miro, is down 40% after pricing in 6.25 million shares via Piper Sandler. Miso, I like Miso. I want to look into that one. Nordstrom's rises 2% ahead of the bell after Argus analyst Christina Ruggeri raised her recommendation on the department store operator to buy from hold. Regal Therapeutics surges 23% after the biotech's earnings per share and total revenue for fourth quarter beat average analyst estimates. Shoals Technology, SHLS, falls 9% after they offered 24 million shares priced at $24.70. SoundHound Sound fell 10% after the artificial intelligence company reported a wider net loss for the fourth quarter. Stitch Fix, SFIX, slumps 10% after the online personal styling platform posted guidance for the third quarter that implies a continued decline in users and said CFO Dan Jetta would be stepping down from April 3rd. Tesla shares now have less upside potential and more limited room for disappointment, Berenberg says in a note, cutting the EV maker to hold with the stock sliding 1.3. Weight Watchers is cut to sell from hold at Craig Halliam, which said Tuesday's 79% surge response to the company's acquisition was an overreaction. WeWork shares gained 8% after the workspace rental company said to be in talks to raise hundreds of millions in capital. And Zymeworks shares jumps 10% after the biotech company's revenue for the fourth quarter beat estimates, with Stifel highlighting that net income was better than expected, and the development of the company's esophagus cancer drug zanidatamab is on track. I don't know that's how you say it, but it was fun to say. Zanidatamab. I'm just going to stop. But Chad, God bless you. Good morning. I hope you're ready. We already got a little bit of data. You also have a lot more at 10 a.m. Bank of Canada, all the way down to jobs opening, and then Jerome Powell. So I hope you're ready, Chadadonia. I hope you're ready. We still got a little bit more of our morning session here. So hopefully you're not too tired. Let me see. I think it's time to go on a potty break. I think I'm going to go on the potty break. I love you. God bless you. We'll give you some news to listen to. And then follow me on Instagram at The Trading Fraternity. I love you. And get ready for another day.
390. Yeah, 390 is below long-term average. Forget, any recession average. And it has been, as I said, our view has been that the economy will be in the short term more resilient. And that's what we're continuing to see. And so, yes, balance sheets were generally strong coming into this. But no, high yield spreads have no business being down there. And as you see more and more of these kinds of deals that are short-term, high coupon, right, just kind of a Hail Mary last ditch attempt to try and stave off a refinancing. When you see deals that come to market and promise to pay you in kind as opposed to pay you back in money, these are all harbingers of wider spreads, down the road. So stay tuned. There will be great opportunities in credit.
Just not yet, from your perspective. Victoria, from the equity market perspective as well. It's interesting to see the move yesterday in rates and then see the equity market drop lower by 1.6%. Now, Lisa was saying earlier on the program on Bloomberg Surveillance that 1.6% in the grand scheme of things, given what happened in the bond market, not much. High yield spreads yesterday basically unchanged. What do you make of that resilience?
Yeah, I think we have to look at the elements within the market, right? When we say that the market was down 1.6%, but what about the NASDAQ, right? The NASDAQ didn't get near as large of a hit as the rest of the market. We actually were trying to figure this out in our investment committee yesterday afternoon. What are the different parts of the market telling you? So maybe the fact that the NASDAQ was performing a little bit better yesterday is telling you that long end of the curve that we mentioned a little bit earlier. Maybe that's saying, okay, some of the market is looking through the journey that the Fed is taking, and they're saying longer term, the Fed's going to do what they say. They're going to tap down inflation. That means longer duration assets actually performed a little bit better yesterday. That's some of those tech names. It's those NASDAQ names. I think you can see the same thing in the bond market. A lot of our clients are concerned and saying, do we need to just go all in 6-month or one-year bills in the market right now and capture that yield? Yes, I think you can do part of that, right? With part
build yield. Chattadonia, good morning. I hope you're feeling good, man. I hope you're feeling blessed. It's a wild morning already. I've had a lot of tension. I'm telling you, they were talking 6% rates now. Everybody's getting ready. Everybody is getting ready, Chad. So I hope you're ready. I hope you're locked in, loaded. So God bless you and good morning. But Chattadonia, tell me, man, what do you got? First play of the day. Keep it on track. Keep it serious. Let me know what you playing. We need to source that info. What do you got, Chattadonia? I got a couple of plays for you, too. I got a couple of plays. What do you got? Short Disney. Good morning. Or is that GM? I don't know. Cash. Praying. Yang. SPY calls, Roblo puts, Tesla shares, holding my SPY short, SPY calls, SPX, Apple calls, China demand, short bonds, I still on NVIDIA, Pfizer long, NDX shorts, DVN calls, First Solar puts, waiting for Powell, Tesla scalp, NVIDIA short, Meta puts on everything, short JPM, short NVIDIA, SPX long, SPX coin calls, NVIDIA 310 puts, Meta puts, riding my AI puts, boy oh maybe, SPY calls, being patient, Boeing short, NVIDIA short, Tesla short, SPY puts, JPM ports, Merck puts, a lot of puts, shorting NQ, 0 days, ES bear flag puts, JPM ports, short Tesla, SPY and SQQQ, short SQ, Palo Alto puts, Sox S, Costco puts on Raul, FRTX long, watching NVIDIA short, NASDAQ buy, Tesla puts, SPY 4100, 0 day, long term, Tesla covered calls, add every 30 minutes, holding SQQ, buy puts, shorting NVIDIA, Bank of America calls, looking for Raul, Costco, Holly Jolly, oil, gold puts, short. That got me confused. Rita calls. TRKA ruined my life. Shorting Solana. Olay. Shorting the market. Tesla, NVIDIA. Holding cash. Saving for the long term. Save 10%. Watching for the short level. 41.5. SPY puts. SE puts. Crowd puts. Morning Chads. 23andMe. Cover Snap. Short Raul. SPY puts. Calls on Edgar. S-Bucks calls in the morning. Google on. Do the ads every 30 minutes. Short port. That's a tongue twister. SI Gambles. Better Call Saul. 23andMe. Roblox calls. Chad short. Josh calls. Tesla calls. Call your mother. Calls on God. And then EPV calls. I love it. Wow. What an ending. What an ending. It was like call your mom. And then shout out to God. And then it was like don't forget about Europe in the turmoil in Europe that is potentially brewing. I like it. I like where your head's at. That was a great order. That was great teamwork right there. That's what I'm talking about, Chattadonia. So good morning. Good morning. So I do have a couple of plays for you. NVIDIA from yesterday, we took the late short on that one, and I think a lot of people are looking at NVIDIA, so that'll be interesting. Crowd, just depending on how the market plays out, if Powell causes a lot of drama here or not. I want to see if any of the earnings plays kind of do their own thing. Then Palo Alto post-earnings, as well as a crowd sympathy play. Max N, that was a solar play. If you remember, I even have Enphase on my list too, but the other day where Enphase went up like 10% or something, Max N was running too, so that one's up 20% on a series of upgrades today, so watch out for them. McDonald's, I may be going for revenge. It all just depends on how defensive stocks play out here. And then Netflix, I still like. I have those 10 shares that we got, and I want to see how they perform as a lagger or a leader. And then Nordstrom's got that upgrade, and then I'm still in those. And then Meso, biotech with pretty much a resubmission, so that one may get a little bit more long-term. The ad money, I don't know. It has like a day or two delay, so we will find out. But if I'm using the same settings as yesterday, so you may be getting it. But like the video, I'm hoping if you like the video, the ads won't come around. I mean, that's the best we could do. That's the best we could do. But either way, we in the game, Chad. We got a couple of minutes here, actually. Here are the key levels of the day. 40.50 is your March 7th high. Your 100-day moving average is going to be at 39.36 on the SPX. 39.40 is the 200-day. So ironically enough, your 200-day and 100-day now are pretty much sharing the same spot. And then everything else, I mean, 39.80, this is where we were. That's crazy. 39.80 is the March low, and 40.50 is the March 7th high. That was a crazy day on March 7th. Oh, wait, that was yesterday. So what you got, Chad? You got like 1 minute. If you could squeeze in any questions right now, you got 1 minute. Otherwise, it's game time. It's game time, and you ready for it, man. You ready for it. Welcome to Wednesday, middle of the week. Even got some co-real estate today, too. Oh, I hope they feel me. Bright and early. Bright and early, lady. I'm growling. Did I growl? I didn't mean to growl, but like I got a growl in me. I don't know. I growl from time to time. It just gets me, you know what I'm saying? It gets you ready. Gets you ready, baby. It gets you ready. So I don't think we have any pressing questions here. So let's get into it, Chad. But I have something very important every day, man. It's an honor. It really is. And I hope you honor this very special group of people that we're about to mention here at the Cult. Before we do anything, we like to pay homage to a very important set of people in our American society, man, and it is the veterans of the United States of America. So on behalf of the Cult, the people here, the people not here, we want to give a huge special shout out all the active servicemen, past servicemen, anybody who has served this country, and even a special shout out to the families and everybody who made that sacrifice. God bless you. Thank you for your service. I hope you know you're appreciated, and I hope I can remind all of you to appreciate your veterans day in and day out, baby. God bless you all, and thank you. And shout out to anybody helping out in society, too. Giving back to the community, the doctors, the nurses, the teachers, the firefighters, the police officers, the trash men, the janitors, bro. Show some love. The people volunteering with the nonprofits, the people helping out their community. Maybe you helping kids set up a game. Maybe you helping grandma with the groceries. I don't know, man, but you doing something out there. That's what I'm talking about. You appreciate it, too. We love you. God bless you. Oh, donate blood. There you go. That's a new one. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Senators! Oh, it's game time, baby. Or nah, let's go. Oh, it's Wednesday. It's Wednesday. Pal in 30 minutes and more jobs data in 30 minutes. Oh, my gosh. Oh, my gosh. I hope you're ready. Oh, man. Oh, man. So, Chattadonia, it's game time. Oh, Lynn says, subscribe for 8 months. Let's go. Bring it home to the Twitch. Hey, man, you ready, Twitch? My Bulls and Bears alike, y'all ready? It's going to be a good one. It's good. I'm excited, man. Let's see. Let's see what Powell does. Powell is either going to unwind everything or he's going to come back with a vengeance. Powell's going to come back with a vengeance. That would be awful. Complete disconnect between short and long-term yields. Yes, the yield curve is now triple digits, and that's simply because the Fed controls the short term. So, you know, right now the long end is dealing more with market pressures and how people view the future, not to mention even quantitative tightening too. But for the most part, just any short-term rate increases, the Fed controls the short end of the curve. When one change happens on the shortest end, it factors all the way into the other 2s and 5s and all of that. But usually the 10-year, there is a gap. And it's just showing shorter-term risk, longer-term looks a little bit better. That's why the yield curve flattened so much, because the 2-year yesterday, it shot up a ton, but then the 10-year didn't really move much, or the 30-year, it kind of stayed in the same price. So even now, the 10-year yield is going down, and then short-term interest rates go up. Even if the bonds go up on the 10-year today, you're going to get more inversion. So we will see. And yeah, the 2-year is above 5% right now. So the 2-year bond is now gone above 5% for the first time since 2007. So, Chad, we got about 45 seconds left. Oh, my God. Oh, fucking Edgar. Edgar. Oh, nah. Let's go. What is what? Bro, 50 memberships? That's it. Bro, this your king has arrived. He has came to lead the way. Edgar, what the hell? Edgar coming in hotter than the Fed futures. Bro, Edgar, I'm going to check in the Fed futures because of you, Edgar. I'm like, did that move up? I was like, dude, oh my gosh. Edgar, you going to mess up the non-farm payrolls. Edgar, you going to mess up the CPI, bro. The CPI component of memberships, bro. Edgar, God bless you and thank you, my friend. We got 5 seconds, Chad. 4, 3, 2. Round 1. Fight. Damn, Edgar really coming in clutch. God bless you, Edgar. God bless you. That's what I'm talking about. All right, Chad, we have opened up SPY is surprisingly in the green right now by 0.05. Dow Jones is negative, and the NASDAQ is up by 0.2. Wow. Dude, look at the memberships are still going. God bless you. Thank you, Edgar. Straight up, day in, day out blessing. Let's go. Let's go, my friend. Microsoft's in the green. Apple, Netflix even went up a decent amount. Edgar Frizzle. He deserves a peach, baby. Amen. He deserves a peach. Amen. Oh, the ads, all right. Well, I guess we're right on schedule then. So welcome, Chattadonia. Like the video. Only you could prevent forest fires. NVIDIA is up. Did we short at like, what, 232? And then watch Nordstrom's as well. Let me see where Maxen is. Yeah, you're down like $2-3 a share now on NVIDIA. Where was it? MAXN. Max, damn, that thing's up 25%. Google's making a way up. Again, NASDAQ is up 0.23. So, or 0.27. NASDAQ actually has really good gains. NVIDIA's on the high right now. United Natural Foods sinks by 35% at open. UNFI. That thing is down 35% right now. That's actually crazy. Google's moving up. It looks like all big tech is doing good. Worst on the day is consumer discretionary by 0.29. And then best on the day is tech once again at 0.45. Damn, bro. Roblo's on the high. MaxN. See, if MaxN sells off, that could be a good one. Otherwise, I'm going to wait. Is Walgreens in the green? Walgreens is even moving up. Gold is flying. The bonds are up 0.5%, actually. 10-year bond is up a lot. EWZ is moving. I don't know the news on United Feds. I'd have to look, but I'm sure something happened. Rate hike odds are at 75%. SPY is up a quarter. Would you look at that? 3,996. Futures are approaching 4,000 again, but that's not really too hot. That's still kind of one of the deeper lows of yesterday, so we'll see. You didn't even really get a gap effect, but even then, that candle's still not the easy candle. Not the easy candle. Dollar's down 0.12. McDonald's, Altria is going up. McDonald's is down 0.5%. That's actually down a decent amount. Baba's even down. China didn't do too good, but Japan did good last night. UNFI had earnings. Microsoft tells UK it will license Call of Duty to Sony for 10 years. What was the other one? Crowd. Boeing's on the low. Crowd's still holding up 7. It was up 5% earlier. DoorDash is on the high. Remember, they had news yesterday with New York. That affected DoorDash and Uber. Uber's in the red. And then DoorDash is in the green, I think. Man, my charts are slow. No, DoorDash is still red, too. Yeah, Tesla got a downgrade. So Tesla had the vehicle recall on the steering wheels this morning. Or I don't know if it was a recall or an investigation. But then they got downgraded by Bernstein or something. They were like, nah, there's not that much upside. I'm a little beat. No, they didn't say that. Bank of America going up. Watch financials. Financials barely green right now on XLF. So a lot of things are in the middle. Even NASDAQ here in the last minute and a half, you went from 0.3 to 0.15 now. So watch out if this flips. There really wasn't even a gap effect. So any sort of filling the gap today is going to be kind of futile. The yen has bounced up a lot, though. So the dollar's not down too much, but the yen has recovered a decent amount. Tesla's still dropping. XOM and energy. Energy's number 2. Tech is actually number 1 on the day, but this is the first morning in a while where tech or energy's up. We usually have been starting with energy down, and then energy would go up throughout the rest of the day. OxyRip, watch Walmart. Consumer staples are struggling. Consumer staples and discretionaries. Discretionaries are the worst now, still at 0.5. OPK and Merck agreement. What was the other one? Miso? So Miso is an interesting biotech play. I want to look a little bit more into it, but pretty much they did a resubmission So it's going to take some time before they get approval. Small cap stocks taking the hit. They're matched up. The Russell's only up 0.04 and Dow is up 0.4 and then SPY is up 0.04. So low key, like everything is up the same except tech. So now you're technically filling your baby gap down to 3986. Remember, 3980 is the low, then 3974 takes you back to June of last year, and then 3958 is some of the December lows. So baby gap has been filled. And low tickers ticking up there. Amazon, Unity on the low. Yeah, Tesla's getting mollywopped. Apple's up 0.7. Jeez. SPX 3980. Yeah, Bank of Canada rate decision starts the same time as Powell and our jobless JOLTS jobs opening. So remember, we still have data here today. And then Fed Barkin is speaking right now, I think, too. So be on the lookout. You will be getting some other comments here. I think we reacted to some of them in the morning, but just in case. UNFI. So they had earnings. Did UNFI, do they pay a dividend? Because that looks nutty. No dividend. But yeah, I think UNFI was their earnings. Verizon, Nvidia up every single day. SPY is about to go red now. NASDAQ is only up 0.06. So you gave up about 1/3% of gains here. Verizon's on the low. Nvidia just hates everybody. Solid 1%. Even AMD's up 0.5%. MaxN, that's up 32%. That's the solar play. Enphase is on the high. So is Oxy, or Oxy's on the high. Excuse me, not Enphase. Rita, do you love me? Wow, Walgreens has been on fire today. They're up 0.6. So is Altria and Abify. A lot of defensives are doing good. Surprising low. Staples are red, but barely. Airbnb red. Financials are starting to dip. If financials, materials, and what was it? I think discretionaries. If they start going down like yesterday, we're screwed. Dix has a new high. Oh my gosh. Remember, that thing moved up like, what, 10% yesterday? Same thing, and then SC was up like 15. Tesla, 182. Damn, they just hate me on Tesla. 2 points, yeah, Tesla's getting mollywopped. And then Apple is somehow almost 1%. Microsoft's in the red. Amazon's in the red. And then Google's in the green by 1%. And then Meta's still down. So Meta really had no reaction from job cut news yesterday, if you think about it. Etsy getting smacked 5%. What was the news? We had something on it yesterday. I think they were speaking before it. FAA is recruiting workforce to meet demand, Nolan says. Rita's on the high, $85. XOM and Energy once again. The dollar's trying to come back up. It's barely down. Surprisingly, the yen is recovered, though, a lot today. And you're pretty much right where we closed. What is that? 3986? 3987? That number sounds so familiar. TikTok ban. It could happen. I don't know if they'll do it. And the ads, we still don't know yet. I'll find out in 24 hours. I will let you know. But in the meantime, if you already got to add 30 minutes today, it's probably going to do it again. Yang is on the high. Yeah, Baba no good. Baba no good. Bond auction today. There's a lot today in a weird way. And then tomorrow we still have more data. And then really Friday is going to be the number one. LMT popping. Yeah, damn, is that 487? Yo, low key, they're working their way back up here. It's a big level on LMT. It's weird. I guess they're kind of catching up with Boeing. LMT. Amazon. I'm going to keep up Nvidia. Boeing on the low. Tap takeover note from Gordon Haskett. Jesus is posting that. They're only up 2.5. That was big volume. I don't know. I feel like that one could actually move. And there's a lot of call buying on that one yesterday. Good morning, my friend. Tap, 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 tap. Let's see. Yeah, 54 seconds ago. Okay, top tick, Josh. And I'm going to try to go for a flip on that. I grabbed 200 shares of TAP at 54.06. It actually didn't feel me bad. I just hope they don't get the risk is they give up 2%. Otherwise, if they even outperform here, again, all the red candles on the market. It's just straight rumor, though. Not really even talked about yet. And then all there was call activity yesterday. NVIDIA, they say cores have received takeover approach based on language in 10K. Oh, the P&L's not up? I got you. Let me make it smaller so it's not chunky. I don't like chunky P&L. I don't know. Does that... if you know, you know. If not, that'll sound really weird to you. I got to make sure. I forgot to put it on here. Is that good? Yeah, don't even look that chunky today. I'm very proud of the lack of chunkiness. You know what I'm saying? Some days it just you wake up and it look all chunky. I don't know. A good call on that news, Jesus. So that's moving for now. It's just holding up there. It looks like it's playing with the market. You got 3%. And I guess near the highs was at what, 55? And NVIDIA is moving up here now. Watch out for that. When Palantir volume, any news? Let's see. Not really. It doesn't look too crazy. They do look like they're holding up a little better, though, which is good. SMH is on the high, and then energy still one of the leaders here of the day. Energy is now outperforming tech. NASDAQ hasn't gone red. SPY, small caps, and Dow have, but they're barely red. That's TNG. Chunky P&Ls need love too. VST. Vistra. They're 0.7. They had a little pop and lock. AN. Where's Broadcom? Damn, Broadcom's still 628. And then Enphase is down. Rita's on the high. Max N, very good solar company today, but it's already up a ton. Like, it is already up a ton. Yeah, TAP's starting to run now. We got good gains on that. I already got $1 per share on there. So that's looking decent for now. I think they just had earnings not too long ago. Too much optimism on NVIDIA. I don't know. NVIDIA, the valuation's high PE, high everything, but they even did that. If they didn't drop on the offering, that's the only thing that worries me. But I went short just because the risk to reward. I mean, just quite simple. It's like they have $30 up to the high, or you could get $30 just coming down to the low. It's actually quite interesting. So like $30 higher, you get back up to some of its highest points it's ever been at. You go down $30, you're just pretty much at the last level of support. Yeah, Jerome Powell is going to be in about 17 minutes. We have Jerome in 17 minutes, and then JOLTS jobs openings, and then Canada rate decision. So you actually have a bunch of stuff all here in the next 10 to 15 minutes. Yeah, Sound got clapped on earnings. SPY's trying to hold up here. It's back to green alongside the Dow. Small caps are red. NASDAQ has not gone red at all. There's Domino's. They're on the high ticker. They're holding. A lot of defensives are doing good. Tech and energy are number 1 and 2. Real estate and industrial are next. And then discretionaries are the worst on the day. Oh, then Nordstrom sold off even after the upgrade. Where's Tessie? They got a downgrade. They were not being taken care of today. Why do we have Jerome? Just day 2. It's a 2-day thing. pretty much Powell makes a tour around Congress. Yesterday was at Senate Banking Committee. Today is House Financial Services. Pretty much going to go talk to everybody. Airbnb's on the low. They're actually flushing through. SPY just hit VWAP and then coming down. Where are we at? Still only 0.04. Now NASDAQ is matched up with S&P. Enphase on the low. CrowdStrike is not holding. That's actually quite surprising. So for post-earnings, CrowdStrike is giving up some. They look like they're moving with the market. Tesla is on the low as well, too. FNGO on the high. SPY, a new low as well. 3983 or 3 points away from the low. And then that will also be the next level. And then anything below 3980 will be 3974. But so far, kind of just a slow meltdown. You only had 3 candles go up here. Otherwise, we've been kind of just chilling out. I think we're going to wait for it. Total Energy CEO CERAWeek session interrupted by protester. This guy. Total Energies. That TTE or something? Yeah, down 0.5. Edible, EDBL on the high. I just say it is edible. I don't know if that's the company. Amazon's down 0.5. All right, little bounce there. Again, Walgreens in some defensive. Tesla's flushing right now. Yeah, Tesla's clapping. And then Coors TAP rises the most in a year. Call options surge. And then that Gordon Haskett news is coming out again. So you got some confirmation, but it's still a rumor or just a note. Yeah, Total Energies. Energy debate is becoming religious. Dude, Tesla 180 down 3%. Every time I buy it, I got child support payments, man. Come on, Elon. And then SPY's right below VWAP right now. Barely down. Barely. Oh, Square flushing. Yo, check Square. Or is that QuantumScape? I think Square. That was a decent candle there at the low. Or is that 919? They got a price target raise in the morning, but Square just had a pretty big red candle there. It will back off hawkish today. We'll find out. Only 13 minutes remaining. Microsoft, check Square. And TAP is still working good. KMX on the high. Watch 238 on the Nvidia. Yeah, that is the level. And they're holding. I mean, they're still up 1%. AMD's even up just under 1%. Your chip makers are looking solid. Even Broadcom earlier. Tesla, greedy short. Honestly, even though I'm holding shares, I wouldn't be opposed to it. Your only risk is that you're down 3%, but pretty much you break in between here. I think you break like, what, 180? You break 180 flat, the door opens up to like 160. Pre-written state. It's probably going to come out right when he gets out there. That's what happened yesterday. Remember, we didn't get any pre-written statement until his ass sat down and then started speaking. So, and then unfortunately, 10 a.m., everything's going to you're going to get a data dump. So in the next 12 minutes, you're going to get Bank of Canada decision, JOLTS jobs opening, and then chances are that pre-written statement for Powell is going to come out as well. And there's no change in the pre-written statement. That's what Danny's saying. So you may not even get a big shift here, considering he already had one yesterday, which I could see. Okay, decent bound. Where's the volume at? Volume's 5 million here for the first 15, 18 minutes. Dude, Tesla's getting mollywopped right now. This week, I think every week is most important. I mean, it's hard to say. I think this one, just because we just had Powell tweak out and the Fed futures are tweaking out, I think this week has a little bit more importance. But when it's all said and done, I mean, CPI is probably what people are going to react to. And only reason why CPI is important is because Jerome Powell reacts to it. So they kind of have their own order, but I would say this week has a little bit more volatility. Otherwise, I would argue CPI is more important, and then Powell, and then non-farms. But considering we are on the cusp of a very dramatic reaction yesterday, I would say Friday's event holds a little bit more weight. McDonald's on the low. Tesla's still dropping here if you're going to go for that greedy short. Yeah, just over $1 per share on tap. These are your first red candles since the news. Oxy 4. Buffett purchased 6 million shares. Really? Is Oxy up 4%? I just saw energy was up. Yeah, Oxy is up 4%. Jeez. Oxy moves crazy. Oxy's doing great. McDonald's at the low. Nordstrom's had the upgrade. They didn't react. Materials are on the high. That one's interesting. Is Apple still up 1%? Amazon's down 0.67. Nah, Apple came down a little bit. Then Nvidia just hasn't moved. And then Tesla's getting destroyed. Let's see. You need, again, 180 is big level on Tesla for the downside. Or it could even lead to a nice bounce. Reuters cites Canada Natural Resource Minister in interview. NVIDIA trending up. NVIDIA already up, man, 1%. But it is getting ready. We're down on that short there a little bit. And then, of course, the Mickey D's went. Good old defensives. AMD. McDonald's dropping a decent amount, 1% almost. SPY, first time above VWAP here in a while. But you're still within the opening candle. So let's see how far this takes us. Don't forget about Crowd. That was post-earnings. They kind of sold off a little bit here. They were up 7%, up 5 in the morning, then came back down. So they're kind of all over the place. NVIDIA pop. Little bit. LMT. I can't, is LMT still up? Nah, yeah, you got it. I was going to say 487, bro, is like the breakout range. It doesn't like to trade up here too often. And then it sells off any other time. But watch them, because middle of the day, if LMT could get above 487, I mean, there's a lot of upside there. But it just usually doesn't move. Microsoft 200 a day. Microsoft's down 0.5%. They're kind of showing the most weakness alongside Amazon. I haven't checked Meta and Netflix, though. Meta's down. I'm surprised job cut news yesterday didn't help them out. XLF is green. That's good. Very good sign. Banks need to wake up a little bit. X on the high. Lila. UNFI is bouncing. They were down 35% at open. Bolivia, PPL. What time is it? 8 minutes till Powell and jobs data and Canada. Rito are still in it. Pretty much the same gains on it. It's like $3,000 to $5,000 depending on where we close that covered call. And I haven't rolled over yet. Why would you hate NVIDIA? A lot of people like NVIDIA. I just, I'm here to trade it. It's not even that personal. But NVIDIA has been fascinating since their earnings. Tap, tap, tap. NQ flat. Yeah. And the Dow too. And the SPY. And the small caps. Everything. It's like everybody's just waiting for the world's most important man to talk about money. Of Canada, no rate. People are expecting them to pause. So that's where it gets interesting, because if Canada pauses today and then yesterday we are now pricing in a bigger rate hike, it just that's just tearing both sides apart. Because usually we've all been working in tandem. As other countries would raise, we would start to raise. As we would go higher, they would go higher. As they slow down and pause, we slow down and pause. But now you got Canada pausing, and then we're about to rip it to 50, maybe higher. Then now we're in an interesting middle ground with the other countries. But as Powell will tell you, they are not concerned with what other countries do. So find out on the next episode of The Market Hates You. NVIDIA moving towards the high here. Chips have been leading all day. Now NVIDIA is doing better than AMD. Broadcom kind of slowly selling. Intel, I don't think they got too much love. Edgar Granados. I know. God bless you, Edgar. Thank you. PPL units, preliminary estimate of storm damage, 80 to 100 million. The Fed futures, yeah, we've seen it move that much. I mean, it's not really about it getting to 75%. What should shock you is the pace. So like I brought up yesterday on the watch list, hopefully you weren't a watch hole, But the last time overnight where, like, going to 50 basis points, the odds jumped up. This is just for March, so it definitely has played out different as we were expecting higher and lower rates. But the last time you saw Fed futures go from 0% to a 30% increase, just like yesterday, we went from 20% to 70%. Last time that happened was October 13th at the low. So pretty wild. Amazon low, Tesla new low. Tesla's getting volume into the low as well here too. What is EDBL? Is that edible arrangement? Edible garden? They're killing it all day. I've been seeing them on the high ticker. Tesla. Crowd is on the low. That's no love for the earnings. Google. I think the random play was Google. 100 calls. Tesla flushing 180. So just watch if it breaks 180 low, even Meta on the low. It's interesting what's holding us up now, because now SPY and Dow are green and then NASDAQ is red. This morning, SPY and Dow were red and NASDAQ was up. So very interesting. Google it. AMD, new favorite saying, watch hole. It's a good one. It's a good one. Don't be a watch hole. Watch the watch list every day at 4. God bless you. NVIDIA is going 236.90, 237. Tesla getting a 180. I didn't think that downgrade would have hurt him that bad. Tesla very sensitive. October 13 with a massive green day. Well, it started off red, but yeah, it turned into that. And then the next couple of days after October 13th, we ended up bouncing. So that's why I'm like, there's good and bad when you look at this. But last time the rate hike odds, were moving like this, you were at a bottom and it caused a lot of volatility. I mean, pretty much October 13th, you moved between 340 and like 370 or 368, which is wild in one day. Big pop AMD, Tesla, you're getting more volume. This is the low. AMD is having a big pop now, 1%. Now NVIDIA is going back to 2. Dude, NVIDIA is already up 1.8. Very hard to stop this guy. Then McDonald's going down. Skyworks on the low or on the high. I think TAP is coming down. No, it's kind of holding. And then dollar's still red, but barely. I mean, the 10-year bond was looking solid today. Yeah, still up 0.5%. And then SPY is now getting back to the opening candle here. Have not seen this in a while. Yeah, you got 3 minutes here, Chad, so let's get it set up. But 3 minutes, you got all of the data coming out and Powell, and we are going to be getting prepared. Honestly, in 3 minutes, too, you're probably going to get an ad. So brace for it, you know what I'm saying? That way you know it's coming. You're not going to get too shocked. And breathe in deeply and make sure you like the video. That's what you do in those situations. Okay, brace for ad packed. NVIDIA wants that 238. All right, is this a high of the day? Almost. Come on, LMT. Pfizer long term. It's yielding 4 again. Is it 52-week low? We saw it at like 39 the other day. I'd want to wait a little bit, but it's definitely there. But, let's see how these next couple of days play out, because then we'll be really ready to go. And the video, 238 now. He's ready to go. I look forward to seeing every morning. God bless you. I love you. Amen. God bless the Chad, man. God bless the Chad. Let's have a good day today and get ready, because it's probably about to get crazy here in about 1 minute. 1 minute, Chadadonia. So people were talking 6%. Bank of America economist Michael Gapin just published a note today reiterating their view that the Fed is likely to do 25 basis points. He says, we've argued that the bar is high to return to a faster pace. In our view, risk management concerns support staying at a lower pace of hikes. and let the policy do the works with long and variable lags. Growth in economic output. Oh, Silvergate shares fall more than 10% on talks with regulators. But Michael Gapin says a 50 basis point rate hike would open the door to greater probabilities of a much higher terminal rate than is priced into markets presently. And then people are saying Powell's prepared remarks are likely to be the same as Tuesday. People will be listening whether there's any awareness that comes forth, if it's likely to be a long question and answer session with the wave of criticism and surprise that emerged from yesterday's hearing. All right, here it is. Bank of Canada holds interest rates at 4.5. Bank of Canada pauses. They said they're prepared to hike again if needed. Hold on, we got a lot of things. And then jobs openings, they came up. So that's better than expected. Stronger jobs market, dollar popping, Canada pausing, and then get ready. Powell's statement. We haven't had a, oh my God. Oh, Raul, that's a big drop right there. I don't have the pre-written statement just yet. So that's just right off of job openings. Job openings came in hot. I don't have the revision. It was only 300,000 hotter, but usually we've seen it come in a lot hotter. Honestly, I thought that wasn't, I don't think the jobs was that bad. Oh, but they revised last month to 11.2. So I think with revisions, that doesn't look too hot. So they revised last month to 11.2, 200,000 higher, and then jobs came in 300,000 higher on job openings for now. They fell to 10.8 million from 11.2 the month before. So month over month drop, but they didn't drop as big as expected. That one's, I don't know. I'd say 60-40 bearish. 60% bearish on there. But again, the market's already just puked 1/3% and 2 candles off of that. Because it's a lower month over month pace, but still slightly hotter. But then again, lower than the last one. But now you're just dying. Even NVIDIA took a candle. A couple things still holding up here, though, which is quite surprising. Amazon took a fat candle. SPY, you are starting to dump a little harder. Tap. That one's still holding. Tesla 180. Even Apple took a big candle. Apple's about to give up the 1%. I just wait. NVIDIA and AMD again. Dude, Tesla's down 3%. Tesla's about 50 cents off of the level. NVIDIA even came down most on that. But initial reaction is negative. We don't have pre-written statements yet. And then again, Bank of Canada just paused interest rates. And then they said they would be willing to go higher. So you got a lot of things affecting this. And that's why I think the dollar is moving like that. Well, let's see. Get ready for Powell. Fed fund expectations, I still believe they're around 74%. Slightly higher than yesterday. Even from when we made the watch list, it was at 69. I'm saying, even for the data, I'm giving it 60-40 bearish, but I would think the month over month, people might like that the fact that it's dropped. It was slightly higher than expected, but it did go down lower than last month. And then they revised last month by an additional 200,000 jobs. Bank of Canada statement drops the January language about economy remaining in excess demand. So Fed Chairman Powell should be live. Here he is.
And he will not be to committee on time.
Bro, where's the pre-written statement?
Hey, how are you?
So Powell's about to speak. We don't have his statement yet. So this is interesting. Get ready. I'm ready. You hear that? She said ready? I feel like we've been picking up on hot mics way better lately. Well, I think there was the statement in the morning, so take it with a grain of salt. But as of now, we're just going to get right into the speech. Powell has already been seated. They're taking the photoshops, the photo ops, and we go from that. Order. Okay, I'm going to turn the volume up a little for y'all. It should be kind of loud already.
Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. And I'll note at the outset that this hearing has a hard stop of 1 p.m. This is traditional for the Fed chair, which we intend to strictly observe. I now recognize myself for 4 minutes to give an opening statement. Thank you, Chairman Powell, for your
Nothing's going to
testimony
happen
today.
in 4 minutes.
This week, you stated that the Fed will, quote, stay the course until the job is done, and that is to restore price stability. This is positive. But you know as well as I do, you're facing a very strong headwind from the political left. Democrats are pressuring the Fed to stray from its narrow mandate. It's a page out of their same old progressive playbook. When they don't have the votes to achieve something here in Congress, they turn to regulators.
Back dramatically.
And now, Chair Powell, they're looking at you and the Federal Reserve. President Biden's kowtowing to the far left is what got us into this inflationary mess. I urge you to reject the ideologues who put their social agenda ahead of economic prosperity. High prices continue to eat away at workers' wages and retirees' incomes. Since President Biden took office, we've experienced inflation at rates not seen since the late 70s and early 80s. Inflation rapidly accelerated after Democrats passed their so-called American Rescue Plan, which poured nearly $2 trillion of inflationary fuel into the economy. By June of last year, the Consumer Price Index showed inflation skyrocketed from below 2% to nearly 9%. And personal consumption expenditures, the Fed's preferred measure of consumer prices, ballooned to 7%. Instead of being rescued by Democrats, Americans were punished with pain at the grocery store and sticker shock at the pump.
Crowd is still
While
flipping.
inflation is now believed it is now below its mid-2022 peak, it is persisting at rates well above the Fed's target. It remains broad-based and continues to hammer Americans' pocketbooks. In fact, a recent Gallup poll shows half of the respondents say they are worse off financially than a year ago. It's clear that there's still a long way to go in the effort to bring down costs. I look forward to hearing you reaffirm your commitment to that work today. Republicans also want to hear from you regarding some concerning developments at the Federal Reserve on the regulatory front. Recently, the Federal Reserve's Vice Chair for Supervision announced a quote-unquote holistic review of bank capital in the Fed's regulatory regime. However, it seems that only a small group within the Fed knows what this means, what it entails, how much review is being vetted by the full board, and the type of quantitative analysis the Fed is performing. The Fed shouldn't operate in the shadows, especially when the regulation in question can have broad and significant economic effects. It's also unclear the motivation for the Fed's holistic review, particularly when so many board members have stated that the banking system is very well capitalized, and any review of capital standards should be targeted. It also appears the Federal Reserve Board is laying the groundwork for climate policy to be implemented through the Fed regulation with an opening salvo to quote-unquote scenario analysis. Addressing an issue like climate change is important, but a policy that should originate here in Congress by the elected representatives of the people, not the central bank. As you said, the Fed needs to stick to its knitting. I agree. There is concern from many that the Fed is picking up new needles and knitting partisan sweaters. At such a precarious time for our economy here at home and the global economy, that would be a mistake.
Partisan sweater.
Thank you for being here today. I look forward to your testimony and the questions by our members. The chair now recognizes the ranking member of the committee, Ms. Waters, for 4 minutes for an opening statement.
Thank you very much, Mr. Chairman. Good morning, Chair Powell. Since your last visit, our country, under the leadership of President Biden, has made major progress to improve economic conditions, including adding a record 12 million jobs, reducing unemployment to its lowest rate in 54 years, while also reducing the deficit by $1.7 trillion. Unfortunately, many families are still struggling to afford basic necessities because of inflation. What's more, interest rate hikes are making borrowing, especially for mortgages, outrageously expensive. Since I raised this concern for you in a November letter, the rate hikes continue to have an outsized impact on housing costs, which are, as you know, a primary driver of core inflation. But, Mr. Chair, I think that you will agree that Congress also has a role. That's why I'm somewhat disappointed that after 2 months, Republicans have taken no serious action to address inflation. By this time last Congress, House Democrats had passed the American Rescue Plan to provide relief from the ongoing pandemic, which included our committee's efforts to provide $70 billion for homeowners, renters, businesses, and first responders. If Republicans are looking for ideas, committee Democrats have put forth additional bills, like the Build Back Better Act, to bring down costs for Americans, especially housing costs. Even more concerning, we're just months away from an economic catastrophe beyond what we have ever seen.
We are?
Including spiking interest rates,
Wait, what?
massive job losses, and global instability. I'm talking about the threats by Republican leadership to force a default on our nation's debt if we don't agree to their demands to cut Social Security, Medicare, or other critical programs. You've urged Congress to take immediate action to raise
you hit the same high candle as earlier.
But rather than focusing on this very real issue, the first bill that committee Republicans brought to the floor instead suggested that Social Security and Medicare are socialist threats to America. Since then, we have considered legislation related to deregulating securities and banking laws and countering threats from China, but Republicans have completely ignored the biggest economic threat to businesses, consumers, and our economy, defaulting on our debt. Last month, I wrote a letter to Chair McHenry urging him to take this matter seriously and hold a hearing, but I'm still waiting for a response. I hope Republicans will listen today to the real consequences that even the mere threat of a default would have for everyone in this country. And finally, I'm so pleased that we're finally making progress on diversity and inclusion for key positions at the Fed, including last year's historic confirmation of Dr. Lisa Cook to serve as the very first Black woman on the Federal Reserve Board, with the board's vice chair and Kansas City Fed president positions vacant. I think President Biden and Kansas City Fed Board should build on this
progress. Futures haven't gone above 4,000 all day today.
By seriously
Again, you're dancing near the high of the day, but you can't get past
positions.
it.
With that, I yield back the balance of my time.
The ranking member yields back the balance of my time, asking him his consent to submit for the record my letter to Secretary of the Treasury Janet Yellen from February 28th, asking for an update on the ex-date for the debt ceiling. I also ask unanimous consent to submit for the record the latest CBO long-term budget outlook on the unsustainability of our debt, the most recently released. And without objection, so ordered. I'll now recognize the Chair of the Financial Institutions Subcommittee Chair, Mr. Barr, for 1 minute.
Thank you, Mr. Chairman. And Chairman Powell, thank you for being here today to discuss the Federal Reserve's monetary policy actions in a time of economic uncertainty, mixed economic data, historic inflation that continues to plague families and businesses around the country. It is paramount that the Federal Reserve remain vigilant on reducing inflation, anchoring inflation expectations, and restoring price stability at the Fed's 2% target. I also look forward to discussing the Fed's regulatory and supervisory activities. As the Fed reviews the bank capital framework, it needs to consider the impact to the real economy and our global competitiveness when raising capital requirements and sidelining capital would work at cross purposes with monetary tightening, constraining the supply side when we need more, not less, investment to fix supply chains and reduce inflation. Tailored regulations are required of the Fed by law, and a one-size-fits-all approach would be the wrong path to take. Finally, I urge the Fed, in your words, to stick to its knitting and not attempt to be a climate regulator.
Don't make a
partisan
partisan
Gentleman's time has
sweater.
expired. We'll now recognize the ranking member of the Financial Institutions Subcommittee, Mr. Foster, for 1 minute.
Thank you, and thank you, Chair Powell, for being here today.
Okay.
Today is the 15th anniversary of when I was first elected to Congress and placed on the Financial Services Committee, just as the economy was about to collapse. And so that was my trial by fire, the emergency response to rescue the economy, and the legislative response, the Dodd-Frank Act, that successfully stabilized our financial system. So 15 years later, as I take my place as the ranking member on the Committee of Oversight over U.S. banking and monetary policy, I recall the solemn oath that I swore to myself back then to make sure that this kind of calamity never happens again. The monetary policy report that we're receiving today is largely a narrative of a return to normal. And lead times to manufacturers are back to pre-COVID levels. The job market retains supernatural strength, and inflation is responding more or less as predicted to the usual measures. And by far, the largest threat on the horizon is a repeat of the 2011 default crisis. Congress has the power to avoid that, and we owe it to the American people to do so. And I yield back.
Amen.
Today, we welcome the testimony of Jerome Powell, Chair of the Board of Governors of the Federal Reserve System. Chair Powell was reappointed and sworn in for a second four-year term as chair on May 23, 2022. Chair Powell also serves as chairman of the Federal Open Markets Committee and the system's principal monetary policymaking, which is the system's principal monetary policymaking body. Chair Powell, we thank you for taking the time to be here. We will recognize you for 5 minutes to give an oral presentation or testimony. Without objection, your written statement will be made part of the record. Chairman Powell, you're recognized.
Chairman McHenry, Ranking Member Waters, and other members of the committee, good morning. And I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. My colleagues and I are acutely aware that high inflation is causing significant hardship, and we're strongly committed to returning inflation to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our tightening so far are yet to be felt. Even so, we have more work to do. Our policy actions are guided by our dual mandate to promote maximum employment and stable prices. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. The data from January on employment, consumer spending, manufacturing production, and inflation have partly reversed the softening trends that we had seen in the data just a month ago. Some of this reversal likely reflects the unseasonably warm weather in January in much of the country.
This is what he said yesterday.
Still,
that clapped us.
The breadth of the reversal, along with the revisions to the previous quarter, suggest that inflationary pressures are running higher than expected at the time of our previous FOMC meeting. From a broader perspective, inflation has moderated somewhat since the middle of last year, but remains well above our longer-run objective of 2%. The 12-month change in total PCE prices has slowed from its peak of 7% in June to 5.4% in January, as energy prices have declined and supply chain bottlenecks have eased. Over the past 12 months, core PCE inflation, which excludes the volatile food and energy prices, was 4.7%. As supply chain bottlenecks have eased and tighter policy has restrained demand, inflation in the core goods sector has fallen. And while housing services inflation remains too high, the flattening out in rents evident in recently signed leases points to a deceleration in this component of inflation over the year ahead. That said, there is little sign of disinflation thus far in the category of core services excluding housing, which accounts for more than half of core consumer expenditures. To restore price stability, we will need to see lower inflation in this sector, and there will very likely be some softening in labor market conditions. Although nominal wage gains have slowed somewhat in recent months, they remain above what is consistent with 2% inflation and current trends in productivity. Strong wage growth is good for workers, but only if it's not eroded by inflation. Turning to growth, the U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Although consumer spending appears to be expanding at a solid pace this quarter, other recent indicators point to subdued growth of spending and production. The activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment.
So nothing, the reaction's definitely
Despite
smaller.
the slowdown in growth, the labor market remains extremely tight. The unemployment rate was 3.4% in January, its lowest level since 1969. Job gains remain very strong in January, while the supply of labor has continued to lag. As of the end of December, there were 1.9 job openings for each unemployed individual, close to the all-time peak recorded last March, while unemployment insurance claims have remained near historic lows. Turning to monetary policy. With inflation well above our longer-run goal of 2% and with the labor market remaining extremely tight,
oil is flipping.
The FOMC has continued to tighten the stance of monetary policy,
energy's negative now,
raising interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time.
They're getting into the low
candles. In addition,
from the
we
data.
are continuing the process of significantly reducing the size of our balance sheet. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy.
Dollars here.
It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee slowed the pace of interest rate increases over its past 2 meetings. We will continue to make our decisions meeting by meeting, taking into account the totality of the incoming data and their implications for the outlook for economic activity and inflation. Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If, and I stress that no decision has been made on this, but if the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace.
That's why you reacted to that. Hold on.
Restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run.
But that little
historical record
emphasis
cautions
there
strongly against prematurely
definitely took off some of yesterday's softening up yesterday for sure.
To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Interesting. I know that one.
Thank you, Chairman
It may
Powell.
sound nonsensical to some
I'll
of you
now
guys,
recognize
but
myself
there's
for 5
a reason
minutes
you had that
for purposes of
reaction.
questioning.
Let's see,
Chairman
it's
Powell,
stupid,
there's
but
been
we'll
a
save that
lot of
hold.
discussion over the last 24 hours about the effect of rate increases on the economy. A lot of debate about what you said yesterday in the Senate.
This is going to get good.
But no one asked you this directly. We have a March meeting coming up, Open Markets Committee meeting coming up in 2 weeks. How do you think about the March meeting? What's your approach to that? What are we likely to see?
Thank you. So I won't repeat what I just said in my testimony, but if I turn to the March meeting, I guess I would say that we have some potentially important data coming up.
Yeah, headlines coming out. Powell stresses no
One of them
decision
came out at
made on
exactly
pace
10
of
o'clock.
hikes.
That would be the JOLTS report, which of course I haven't seen, being sitting here at 10 o'clock. But we're also getting a jobs report on Friday and a CPI and PPI inflation report next week. So those will be important and we'll scrutinize them. When we say that we're going to be looking at the totality of the data, which is what I said, that does include these reports yet to come. They're going to be important in our assessment of the higher readings that we have very recently received and of the overall direction of the economy and of our progress in bringing inflation down, and we'll be carefully analyzing them. Again, we have not made any decision about the March meeting. We're not going to do that until we see the additional data. The larger point, though, is that we're not on a preset path and that we will be guided by the incoming data and the evolving outlook.
But you've also said higher, longer. Is that still the case?
Yeah, so, and as I said in my testimony, we look at the data since January and also the revisions to the November and December inflation data, and they suggest that the ultimate level of interest rates is likely to be higher than we'd expected.
What are those economic factors?
So going back to January, as I mentioned, the softer inflation readings of November and December were revised up. We got a very strong inflation report for January. We got an extraordinarily strong employment report, very strong consumer spending, strong manufacturing data right across the board. As I pointed out, some of that may have been affected by the very warm January weather, but nonetheless, all of it pointed in the same direction.
Okay, let's move to regulation. Chair Powell, in January, the Federal Reserve put out a policy statement noting that digital asset custody is a permissible activity if done in a safe and sound manner. However, if a bank can demonstrate to the Fed that it can conduct that activity in safe and sound manner, the capital impact of the SEC's staff accounting bulletin effectively precludes banks from offering digital asset custody service at any scale. Are you aware of this staff accounting bulletin by the Securities Exchange Commission and its impact on custodial services?
This is still
I am aware of it. Of course, it's an SEC accounting bulletin. This is SAB 121, I think, and
that's right.
Certainly aware of it, and we do follow general accepted accounting principles in our
yes.
capital regulation.
Okay. Well, without objection, I'll submit to the submit for the record my letter to the bank regulators about this. So while the Fed says it can be done in a safe and sound manner, the Securities Exchange Commission has regulated it so that it cannot be done. Next question is certainly about bank capital standards. You got questions about this yesterday. Chair Barr has announced a holistic review of capital requirements. As I said in my opening statement, there are a lot of questions about this process. And previous statements by members of the Fed governors about the adequacy of current capital standards. And so while the Vice Chair for Supervision has announced that the Fed will engage in a holistic review of capital regulation, is that Fed staff? Is that done at the, at the governor's, the board level? What is the process? There are a lot of questions that people have about his statements. And so we want to understand why it's necessary for the Fed to conduct a holistic review and what that process is. So, my general question is, do you still agree with your previous statements about the adequacy on a generalized basis of our financial system? Or are we to read into this that we're not adequately capitalized and there's a high level of risk in the system that we're unaware of at this point?
Thank you. So the why really just is that as a new Vice Chair for Supervision, Vice Chair Barr has launched into, he's taking a fresh look at everything, including capital. That actually is typical of the last two people to have this job. So that makes a lot of sense. In terms of the process, it's certainly conducted under Vice Chair Barr's leadership with input from the staff and discussions with governors on that committee.
But right now, we're just reacting to Powell's
broadly apprised about what's going on. But the bottom line is nothing has been proposed to the board. Nothing has been formalized at this point. It's a lot of work that's going on.
Keep going
I think discussions are going on, meetings with industry and that kind of thing. When we get to the place where that's appropriate, the board will be carefully briefed. Ultimately, we'll vote on a proposal, and that proposal will go out for comment, and we'll solicit comment from any and all commenters, and we'll look very carefully at that. So it'll be a wide open process in the sunshine.
Thank you. I yield back. Now recognize the gentlewoman from California, the ranking member, Ms. Waters.
Thank you very much. Chair Powell, I agree with what you said on February 1st, that Congress must raise the debt limit because of what you described as the highly risky consequences of failing to do so. You are perhaps the most important expert on the debt limit, which is why I find it very concerning that your recommendation to raise the debt limit in a timely manner is being ignored by my colleagues on the other side of the aisle. I'm also concerned that the consequences of this brinksmanship are imminent. Fitch Ratings said this week they may seriously look at downgrading the U.S. debt based on the escalating brinksmanship they are observing, even if Congress ultimately addresses the debt limit at the last minute. This is history repeating itself. Standard & Poor's downgraded our debt back in 2011 when Republicans last controlled the House and threatened default. The Bipartisan Policy Center later found that the 2011 debt limit debate cost us $18.9 billion in higher borrowing costs, even though we never defaulted. To put that into perspective, that could have been leveraged to provide up to $200 billion in loans to small businesses through the State Small Business Credit Initiative, or to provide hundreds of thousands of people down payment assistance to buy their first home. So I want to emphasize that House Republicans, including most of the Republicans on this committee, had no qualms about paying our debts when Trump was in office. 3 times they addressed the debt ceiling in a timely manner without holding our country hostage. But Republicans are ready to tear down the hard work of Americans everywhere to weather the pandemic and build back a strong recovery. Chair Powell, can you describe for us the risk you see if Congress continues to delay action on the debt limit, both for our economy and for individuals and families?
Let me start briefly by saying that we have no role and seek no role in what is really at the heart of fiscal policy, except I will limit myself to the 2 things that other Fed chairs have said about this. One is just that Congress raising the debt ceiling is really the only alternative. There are no rabbits in hats to be pulled out on this. 2 really is just that no one should assume that the Fed can protect the economy from the non-payment of the government's bills, let alone a debt default or something of that nature, which we don't think will happen here, but no one should be thinking that we have the tools to protect the economy from all the potential effects of that.
Thank you very much. I don't want to miss what you said. I somewhat quoted you when you said that Congress must raise the debt limit because of what you described as a highly risky consequence of failing to do so. Is that your language?
Well, must in the sense that it's really the only way for the debt limit to be raised is Congress must act. Again, these are fiscal discussions, and we don't want to be a part of them, and really they're between elected officials.
But you are an expert on the subject.
Well, I spent a lot of time on this, as you'll recall.
As an expert on this subject, you are concerned about the high risky consequence of failing to do so. Is that correct? Did I correctly quote you?
That's correct.
Thank you. And so, again, let me just go a little bit further. The chair mentioned that he had either written a letter or maybe even had some conversation from Janet Yellen about the time limits that she had attempted to describe. Is it your understanding that she said she could maneuver and kind of manipulate things so that she paid the bills that were coming due, but this could only last until about June? Is that your understanding?
Honestly, I would really have to not try to interpret the Secretary's words for you. That's really up to her to do.
Can she keep us afloat until about June?
I don't.
That's
not
pause
for me to say. These are really questions for the Secretary. I'm sorry.
House
Have you had
Financial
any
Services
conversation
is way
with
more
her
drama
about the statement that she made about being able to manipulate the debt and pay bills that were coming due out of another account, et cetera. Did you have that conversation with her?
The conversations that you and I have privately don't go anywhere. I don't talk about them with anybody, and the conversations I have with Secretary Yellen, I don't.
Okay, and I don't want to get
Gentlelady's time is expired.
He's so scared.
The gentlelady's time's expired.
Did I have equal time with you?
You sure did. He went over time.
If I did, thank you. I yield back.
I now recognize the Vice Chair of the full committee,
You're
Mr.
about
Hill
to hit
of
4,000 again, so let's see what
happens.
happens.
Thank you, Mr. Chairman, and thank you, Chair Powell, for being with us. You're
now.
welcome anytime. Don't wait till we ask. If you want to volunteer and come, we love having your views on many topics. Thanks for talking about your commitment to price stability. You know, we've had this discussion last June between us of, I do think that's the primary mission of the Fed, and I think it should be the only priority of the Fed is price stability, because it's the legislative branch and the executive branch that really are responsible for, quote, full employment and having that policy environment and making sure that that's right. So your commitment to price stability is welcome by this committee. Yesterday in the Senate, you suggested that you supported a regulatory framework, a broadly regulatory framework for digital assets. Is that right?
Yes.
And is it your view that if we had a regulatory framework here in the United States for digital assets, that there'd be more transparency and rules of the road for both consumers, investors, and developers?
Absolutely.
And would it, if we had those rules of the road for business seeking to use and develop blockchain as a potential new technology in their business and tokenized payments, that again, that would be beneficial to business to know how to go about that?
Yes, and to assure that it's all done in a safe and sound manner when we're talking about banks.
Right. And then my next point would be exactly that, to help banks, investment brokers, custodians understand how they could even participate in that market in a safe and sound manner. You agree that a regulatory framework would help on that?
Yes.
And then finally, we've grown up in our country, and it's unique in the world, that we have a dual banking system, and due to a quirk here in Congress over 100 years ago, we have insurance is regulated exclusively by the states. So would you believe that that regulatory framework would also have to preserve some sort of role subject to safety and soundness, you know, for states to play some role in that regulatory framework for digital assets?
Let me just say, I think that it certainly works in banking and insurance. I have no problem with those.
Right. But you think it could, you consider it possible that it could also work in digital assets?
Certainly possible.
Yeah. Thank you. Turning to a topic that's been a subject here for nearly 4 years, central bank digital currencies. Article 1 of the Constitution reserves coins and coin issuance, money issuance to the Congress. And we've in turn delegated that to the U.S. Treasury, which has, since 1912, engaged the Federal Reserve as their fiscal agent. You've testified here many times before that to issue a central bank digital currency, that would have to be authorized by statute by Congress. Is that still your testimony?
So that is absolutely the case as it relates to a retail CBDC. There are potential forms of a wholesale CBDC that we need to look at. It's less clear. But we've always been talking about retail CBDC, and that's something we would certainly need congressional approval for.
And what would be a parameter on something that's not a retail CBDC where you think that could be issued in some form or fashion without Congress's direct statutory authorization?
It would be, for example, it would just be something between banks, so it would look an awful lot like a bank reserve. And you might ask, well, why would we need it? And that's a really good question, too.
Yeah.
But it's just something that's literally within a wholesale market.
But that speaks that you might have a blockchain between banks and the Fed using a central bank digital currency token to settle transactions institutionally inside yeah.
Yes.
So that leads me to FedNow, which is supposed to be up and running, I think, this summer, somewhat behind the scene there. I would like to ask you to formally have this full committee briefed on that by the Federal Reserve. I know the chair of the Kansas City Bank was involved. She's now left. And I think the committee has a lot of questions about FedNow, how its interoperability will work, how it's going to roll out, and also just a question that we've been asked that why the Fed wire system isn't up 24 hours a day, 7 days a week now to benefit consumers that are using Venmo. Do you have a thought on that?
I'm not sure why we're not 24/7 on that, and we, of course, be delighted to come up and brief the committee on FedNow.
That'd be good. We'll take you up on that and the right person from the Fed. And Mr. Chairman, I yield back.
Gentleman yields back. We'll now recognize the the ranking member of the Capital Markets Subcommittee, Mr. Sherman of California, for 5 minutes.
Thank you. Mr. Chairman, I want to thank you for bringing to our committee's attention several years ago the importance of tough legacy LIBOR, some $16 trillion of instruments where the creditor wouldn't know how much the debtor was supposed to pay. This committee, we passed legislation over a year before the LIBOR hit the fan. You issued regulations 7 months before the absolute deadline. I hope we do this in other areas, and it's my understanding that with those final regulations, we're done, and we've solved the LIBOR issue. Is that correct?
Funny.
That's my understanding as well.
I like his little smirk.
People talk about
inflation,
and they somehow say that it's a matter of the personalities and politics in the United States. Others argue that the entire world is hit by inflation because Ukraine and COVID. I think we've got the answer to this question in that inflation is considerably higher in the Eurozone than it is in the United States today. And it's very hard to say that Joe Biden is responsible for inflation in Germany.
So 4,000 futures
I
sold
commend
off.
the
SPY
ranking
hasn't
member
hit it.
for bringing up the debt limit and the harm that's already done to our economy. If we solve the problem tomorrow, we had less investment than we would have had yesterday. And I would say that I commend the president. He's going to issue a budget
Powell
plan
saying
tomorrow. And perhaps in their time, one of our Republican colleagues can tell us when the Republican budget plan will be released. We are all eagerly awaiting it. Housing is a huge part of inflation, and we've left it to local government, but the permitting process there guarantees scarcity, which guarantees high housing costs. Mr. Chair, we've talked back in 2001 and several times even before that about wire fraud. And having just bought a home, I saw the process up front. Everybody's very nervous about one thing, and that is, will the buyer of the house be tricked into wiring their down payment to the wrong account? Or will the seller, the buyer be tricked into, or the escrow agent be tricked into sending the money to someone other than the seller of the property? We talked about this back in 2001, where I urged you with your FedNow system, which I'm glad is on track to move forward, to have what the Brits have. When you send the wire, you identify not only the number of the account you're sending it to, but also the name of the person or entity that's supposed to receive that. At that time, back in 2001, you said that payee matching is not the best way to do it. There are other ways to do it, and that you'd be happy to get back to me as to how you're going to make sure that an email from a Nigerian prince does not get the wired funds, particularly in a housing transaction, wired to an account number that turns out to be in Lagos. What progress do you have? When can home buyers have a system where they're sending it to a named payee as well as to a number?
So I hope we did come back in a timely way to you on that, but it's a problem you've brought to our attention. You're right, over many years, and we continue to focus on that.
Well, the bureaucrats who are working on this don't want to do what the Brits did. They've proven it can be done. You said you were going to accomplish the same goal in some other way, and it has been a while, and it's not solved, nor are you aware of any solution. I would hope that you would go back and say, we don't want to add this anxiety to every real estate transaction. We go back to the drawing boards, follow what the Brits have done, and have pay matching. Finally, as to crypto, cryptocurrency says what it means. Hidden money. That's what it means. And if we impose know your customer and anti-money laundering statutes to it, it won't be crypto anymore. What crypto wants is to have part of its ecosystem above the waterline, visible and subject to know your customer, and then have the rest of the iceberg below the waterline.
Gentleman's time's expired. I will now go to the gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Chairman McHenry, thank you very much. Chairman Powell, thank you for joining us today. We appreciate not only your professionalism, but your direction at us. Chairman Powell, I know that the Fed considers divergences, and you talked about it as you spoke in your opening statement about consumer price index, personal consumer expenditures, inflation, GDP, and all these things are talked about in your report, monetary report, March 3, 2023. Thank you. A couple days ago, I had an opportunity to see that an economist, Arthur Laffer, produced a report that spoke about literally this country doubling GDP. Now, I know we're putting CPI, PCE, inflation, all these things into a mix. But he said that if we made changes in health care to efficiencies, we could double the current GDP rate. My question to you that I hope you can answer is, what do you think about that? Is that something that is in this document that I have missed? And it's seemingly to a person who follows this, as Art Laffer does for 50 years, what do you think is an important way to look at efficiencies in healthcare? Thank you.
So no, that's not in our monetary policy report. I'll just say one thing, and that is we do spend something like 17 or 18 in that range percent of GDP delivering healthcare. Other similarly wealthy countries spend 10%.
God bless you.
So it's the delivery system. It's not that the benefits are incredibly rich or anything like that. It's just that the delivery system is very expensive. That's $1 trillion a year that we spend and get nothing for it. This is fiscal policy, but I'm responding to your. So I would think that he may have meant that if we had a delivery system that saved that $1 trillion that doesn't really get us anything, then that would be great for the economy, which I would agree with.
So you've spoken of supply chain disruptions because it in fact is an inhibitor or an accelerator as we gain that advantage. You just talked about some seemingly which would offer some validation to Mr. Laffer as he spoke about the huge importance of this. Is that something you should start paying attention to where policy people, not only at the Fed, but your Fed banks around the country would start looking at and start putting pressure on us to gain those efficiencies as a result of a global view?
So on supply chains generally, they have suddenly been tremendously important in inflation, as you know, for the last couple of years, and for the first time really have been something that we've had to study carefully. In terms of healthcare delivery, that is strictly a question for you and for the parts of the government that are charged with it. The Fed does not have a role to play and does not seek a role in that.
Does not see a role. And yet, as I look at this, you've got a role in projecting confidence. You've got a role in education. You've got a role in who's in the workplace. You've got a role. Interest rates, and yet my point is it's such a staggering number that impacts us. just love to have you go back. Perhaps we from this committee need to give you some direction on that. But I think your testimony today, it recognizes the staggering impact on that. I don't think it's political. The answer may be political, but I think the actual numbers are not political. It's an inefficiency that is happening across the country, not a regional matter. And so I wanted to get your take on that, and I appreciate you being here as always. Thank you for your confidence and your hard work that you give this country. Mr. Chairman, I yield back my time.
Gentleman yields back. We'll now recognize the ranking member of the Agriculture Committee, Mr. Scott of Georgia, for 5 minutes.
Thank you very much, Chairman, and welcome back, Chairman Powell. Now, Chairman Powell, listen to me very carefully here, because I think we're on the verge of making a terrible mistake. Back in 2008, if you recall, Barney Frank then and Ms. Waters asked me to take a look and kind of work with you and the Fed. You were a board member in 2008. And we came to the conclusion that we needed a more equitable playing field between our large banks, like Goldman Sachs, Citigroup, and our regional and smaller banks, like Truist and our community banks. And we changed that. But now I hear that the Fed and the FDIC plan to drop a new rule which seeks to apply the long-term and higher capital requirements that were created, and you and I did this back in 2008, and you remember, that were created for the Goldman Sachs and for them. And now we want to apply these rules to the regional banks. There's a big difference. And we've omitted this difference if you proceed in this manner. I think it's very misguided. It works, and you and I worked on this. You recall this. You were a board member. And we saw that we needed to have a better playing field to protect. And if you all go along with this, it could put many of our regional banks and small community banks out of business. So I want you to reverse this. First of all, tell me, am I speaking the truth? Are you all planning to all of a sudden here put these smaller and regional banks under the same heavy or financial load as your large worldwide banks? Tell me.
No, we're not planning that. We believe strongly and always have in tailoring to address the different size and risk characteristics of financial institutions, and certainly nothing like that for the regionals. They won't have anything like what the very large, most systemically important banks have in terms of overall regulation.
Yeah, because I remember clearly you and I were back, I think we were on this side then, talking about this in the same committee room. And you worked with us on that. I'm glad to hear that.
3973 already.
Where is that coming from? I mean, it's a concern. It's just a rumor. Have there been any discussions about removing the playing field and the guardrails we have here, the differentiations in the requirements between the regional banks, community banks, and your larger global banks?
So
there's nothing to that?
Well, I would say this. We're required by the law now, and we're doing this. Dodd-Frank actually required us, suggested that we should tailor, and then the S-2155 then required it. And anything that we do will reflect appropriate tailoring.
All right, so that's off the board. We're not going to change and put the smaller and regional banks under the same financial obligation role as the large banks. We got that right from you, correct?
Yeah, that's right.
All right, good. Now let me turn to China. I'm really worried about China, and right now people may not know it, but China is the world's largest economy in terms of purchasing power. Now, at our last meeting, I talked about this move where we didn't blow the balloon up. And this is an example of what I was pointing out.
Gentleman's time's expired. We'll now recognize the Chair of the Science Committee, Mr. Lucas of Oklahoma, for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, I'd like to follow up on the topic of capital standards. One of those things we've discussed many times together. As you know, commodity markets have seen significant volatility in the last few years. And during times of tremendous economic uncertainty, like we've seen, end users turn to the markets to hedge risk, particularly those in the agriculture and energy sectors. And I know that the Fed is early in the review process of potential changes in capital requirements. Can you, well, I'll ask anyway. Can you commit to ensuring that these changes will not increase the cost for banks providing those commodity derivatives to end users?
That's a really specific, can I go look at that? I mean, I'm not actually sure that the work even addresses that. So
fair point.
Happy to come back to you on that.
And that particular response makes me feel better, because after all, those products are very important to my folks and make a great deal of difference in how they're able to address their issues. So, as you discussed earlier, and as you've consistently assured, the Fed's not a climate-making policymaker. You and I have talked about this issue, again, many times in the past. However, I'm concerned that the Fed could be heading in that direction and could be laying the groundwork for climate-related stress tests that would reduce access to capital for entire sectors of the economy. This would also open up the Federal Reserve, potentially to political pressure, and force the Fed, in fact, to make policy decisions related to climate change. We've seen, for example, this administration turn to regulators to impose climate policy as an alternative to the legislative process. Chairman Powell, how careful are you in ensuring that the Fed does not place itself into the climate debate? And how can Congress ensure that the Fed's regulatory toolkit is not, shall we say, warped into creating climate policy outcomes?
So I think we do have a narrow but real role there, which is around bank supervision, making sure the banks understand and can manage their risks over time from climate. I think my colleagues and I all understand that it's a tightly circumscribed role that we're playing, and that we're not looking to move into an area where we're actually becoming a climate policymaker. I would completely agree with you, though, that over time that border needs to be very carefully guarded. And I will tell you that I will do that as long as I'm at the Board of Governors.
I very much appreciate that, because again, it's a very important issue to the 3rd District of Oklahoma. Traditional production agriculture, oil and gas, and the actions that the Fed takes have a significant impact back home. So it's vital that we resist the demands to do that sort of thing now or in the future. And I very much appreciate that response. And with that, I'll yield back the balance of my time, Mr. Chairman.
Gentleman yields back. The gentleman from Massachusetts, the ranking member of the Digital Asset Subcommittee, Mr. Lynch, is recognized for 5 minutes.
Thank you, Mr. Chairman. And thank you, Mr. Chairman, and for your willingness to come here and to update us. Last week, the Treasury Department announced that leaders from Treasury would begin to meet regularly with leaders from the Fed and from the White House to discuss a possible CBDC, central bank digital currency, and other payment innovations. In the statement, it was mentioned, and I'll quote from it, it said that the Fed is encouraged to provide periodic public updates as it continues its research and its technical experimentation on central bank digital currencies. I was wondering, First of all, when you might be expecting to share some of these public updates. What's the timing on that?
So we did go out for comment in general on a CBDC a year or so ago, and I do expect we'll go out. I can't give you a date, but we'll certainly go out and engage. We engage with the public on an ongoing basis.
Yeah.
We're also doing research on policy and also on technology. That's what we're up to.
I'm aware of the Boston Fed has a partnership there. The Hamilton project over there with the folks from MIT Media Lab, they're doing a great job. But, it says here that the discussions would include technical experimentation. I was just wondering at what level are you talking about making decisions on architecture for a CBDC, a retail CBDC?
We're not at the stage of making any real decisions. What we're doing is experimenting in kind of early stage experimentation. How would this work? Does it work? What's the best technology? What's the most efficient? We're really at an early stage but we're making progress on sort of technological issues. The policy issues are equally important, though. We haven't decided that this is something that the financial system in the country want or need.
Right.
So that's going to be very important.
Right. Well, I think I speak for the chairman as well. Would love to have more dialogue with the Fed on that, and maybe bring in the folks from MIT as well, and just make sure that Congress and this committee is as up to date as others. Let me switch over to Fed now. There are some champions of digital currency and stable coins in particular that continue to cite the need for faster payment systems. However, as was earlier mentioned, the Fed now is a service that the Fed is working on to finalize that will allow for instant payments between bank accounts. And the Fed has a target release date for Fed Now between May and July, which is right around the corner. Do you see any reason why cryptocurrencies would provide faster payments than the Fed Now system? And would this offer, with the transparency of Fed Now, would it offer distinct advantages over some of these stable coins that are touting faster payments?
What Fed Now will do is it will enable all the banks, any bank in the United States, not just the big ones, to offer instantly available funds and real-time payments to their customers. That's what it will do. So that's a great thing. A CBDC, I think you're asking whether a CBDC would serve some of that, but a CBDC is going to be years in the evaluation, and I think we can get this into the hands of the public very quickly, and I think we'll have real-time payments in this country very, very soon, and so that's a good thing.
It is. I do have an overriding question, and that is, before the greenback, everybody had their own currency. You had rail companies, you had coal companies, you had state banks that were authorized to issue their own currency. But when the greenback came out, all of those various currencies went to zero because everyone had, because the greenback had the full faith and credit of the United States behind it. I'm worried about a lot of these stable coins and other cryptocurrencies. Do they go to zero when we come up with a CBDC that has the full faith and credit of the United States behind it? And we've got thousands of these out there, and you've got people investing millions and millions of dollars in these, well, trillions right now. And I'm just thinking, if we had those advantages built into a CBDC, wouldn't those alternatives go to zero if they did not have the transparency and the full faith and credit that we enjoy?
So certainly unbacked cryptocurrencies that don't have any intrinsic value but nonetheless trade for a positive number, those I've never understood the valuation of those. Stable coins are actually, many of them are really, they're drawing on the credibility of the dollar. They have dollar-based, they're dollar-denominated mainly, and they have dollar-based reserves, although we don't know what's in the reserves because there's no regulation.
Gentleman's time has expired. The gentleman from Missouri, Mr. Lukemeyer, is recognized for 5 minutes. The chair of the National Security Subcommittee.
Thank you, Mr. Chairman. And thank you, Chairman Powell, for being here this morning. The reserve currency status of the dollar to the U.S. has enormous financial and national security benefits. In the wake of Russia's unprovoked invasion of Ukraine, the Fed took action to prevent the Kremlin from accessing more than $300 billion in reserves, roughly half of Russia's reserves. However, this led to an accelerated effort by countries like China to de-dollarize their official foreign exchange reserves. Just last week, there was an article in the Wall Street Journal titled, "Russia Turns to the Yuan in an Effort to Ditch the Dollar." Not only that, but China's President Xi Jinping pushed for the settlement of energy trades in the Chinese yuan at a summit with Arab leaders in December. The question is, are you concerned about these actions by Russia and China to establish different reserves and conduct transactions in non-U.S. dollars?
So the U.S. dollar is the widely accepted and really the only serious candidate for the world's principal reserve currency, and that's because of our democratic institutions, our liquid markets, the rule of law, and all those kinds of things, and also the fact that the dollar has held its value over time. So other countries who are competing on other playing fields may want to establish different currencies, but really the dollar is the one that's going to be used more broadly in international commerce because we have those aspects and other countries don't.
Well, that's true to now, but my question is, are you concerned about the actions of these countries because if they see themselves being challenged or are concerned? For instance, if China would invade Taiwan, as Russia invaded Ukraine, there were some sanctions put on. And I don't disagree with the sanctions. The last time you were here, though, Mr. Chairman, I asked a question because it's an instructive moment for us from the standpoint that knowing that we put sanctions on Russia, all other different accounts, as well as the oligarchs from that country, are we thinking about doing the same thing to China when they invade Taiwan? And your answer at that point was no. We passed a bill out of this committee last week to ask the administration, basically, to start thinking about that in those terms. What kind of situations can you come up with? Are you talking to allies, begin to talk to them, to start putting together a list of how you would go about sanctioning the different individuals, the different accounts, things like that? So have you started thinking about that at all yet?
Well, let me say, the business of sanctions is entirely in the hands of the elected government and the Treasury Department. We are an implementer as it relates to banks. That's it.
Yeah, but we're going to take your advice on different aspects of this, Mr. Chairman.
Sorry?
We're going to take your advice on the different aspects of this.
Well, I mean, honestly, when the sanctions were being put in place, Treasury was doing it. We weren't doing it.
Okay.
Yeah, I mean, that's the way it works.
Next question. There was an article, again, in one of the political newspapers yesterday, I guess it was, and it talked about the problem that we have here with the Fed's balance sheet. It says it now appears similar to a hedge fund whose long-term assets are financed by short-term borrowing, and the bottom line is that it's going to cost money. The Fed now has a negative income as a result of having to do this.
No such
and
thing.
so it says here that the Fed will simply borrow the money to pay the bills. Is this true? That we're having the Fed's losing money right now as a result of the way you've got these debt borrowings that you've purchased structured?
The place I would start is that the Fed has, we always turn over all of our earnings in every year. We turn them over on an ongoing basis, and we've turned over something like $1.2 trillion in earnings just in the last, decade or so. So we always know that when we raise interest rates, you're going to lose money.
Okay.
Of course,
but you agree with the point that we have a negative income right now.
That's
and
right.
This makes my point to my next question, or my concern is, the CFPB gets their money. The CFPB gets their money to run their agency from the Fed.
That's right.
So basically, there's no money for the Fed to pay the CFPB's bills if this is the case, unless you continue to borrow, which is basically what's going to happen now, is you're going to have to borrow money to be able to pay the CFPB's bills. Is that not correct?
No, we don't borrow money. We issue, basically, yes, we don't shut down the Fed when we have negative income.
Okay.
We can pay our bills and we can pay.
So my follow-up question then is, do you do any accountability or assessing of the CFPB's spending of these dollars at all?
No, we don't.
So they just get a blank check. You just told me they just got a blank check. They send you a bill, you send them a check. There's no accountability for them.
No, I think there are limits built into the law, which I don't have in the front of my head.
I have yet to see a limit, Mr. Chairman. I'd love to see what the limits are because I don't think that they've ever agreed that they have that. But I see my time is up. Mr. Chairman, I yield back.
Gentleman's time has expired. We'll now go to Mr. Foster, the ranking member of the Financial Institutions Monetary Policy Subcommittee.
Thank you. And just a quick comment. I think it's a mistake to imagine that you can completely hide from the macroeconomic effects of technology in your scenario planning. You know, we just talked briefly about healthcare costs. You know, obesity, half of our healthcare costs, and there are treatments in these GLP-1 receptor agonists that look like they're just a home run against obesity. And so these will be near-term impacts which will have macroeconomic effects. So just a comment. I hope you have a certain fraction of futurists in the room when you're talking about your scenario planning, because a lot of that future is like now. Okay, back to economics. So we have this historically low unemployment rate, 3.4%. And historically, this would be considered to drive runaway inflation. You know, your predecessor, Alan Greenspan, repeatedly referred to dangerously low levels of unemployment. And yet we see inflation is coming down. So what is going on here? How can we have these historically low levels of unemployment without having inflation take off? Is it possible that we simply have less frictional unemployment in our system due perhaps to the fact that people get their new jobs online and have a job lined up before they quit?
So inflation is coming down, but it's very high is the thing. And some part, I've never said all of it or most of it, but some part of the high inflation that we're experiencing is very likely related to an extremely tight labor market. Wages affect prices and prices affect wages, so I do think that's part of it. More to your point, though, there was a time when there was a tight relationship between inflation and unemployment. In other words, the Phillips curve was steep, and that went away over the period of the Great Moderation. And really, in our thinking, that's because people came to expect 2% inflation, and we had 2% inflation, and then people just stopped focusing on inflation, and it stayed very low. So there was really no relationship, or very, very tiny relationship. We could have very weak economic growth or very strong economic growth, and we wouldn't have inflation respond very much. That was before the pandemic, though.
Okay. Well, I hope you don't overlearn, some of the lessons there. It's one of my worries that there have been a number of exogenous shocks to the system here, and it'll take a while to go through them. And if you want to be careful there. Now, in a related issue, when you refer to the totality of factors, you're looking at a mixture of leading and lagging indicators when you look in this totality of factors. And my question, perhaps you might be paying too much attention to the lagging indicators and not enough to the leading indicators. The example that's referenced in your remarks and is in more detail in the report about the difference between using current rental payments versus the amount that you pay for a new rental contract, and difference in how much they lag. Had you paid more attention, for example, to the leading indicators like current rental contracts, then you probably would have picked up inflation earlier. You would have been, not gotten so far behind the curve on that. And secondly, there are policy implications going forward. If you look at current rental prices for new contracts, we're much farther along in fixing inflation, and that you can take your foot off the brake. And so what's your thinking on that, and whether you may perhaps be systematically not paying enough attention to leading indicators versus lagging ones?
So we've had our eyes on the whole housing inflation thing from the very beginning, and right now what I would say is that every forecaster is baking in lower rent increases. That's a big part of why people think inflation is going to come down in 2023. I think the thing with transitory was more had to do with goods. And it had to do with the thought that these supply-side disruptions would go away much quicker than they would, that the labor market disruptions would go away much quicker than they did. And in hindsight, it just took much longer for those disturbances to go away.
Yeah. So with hindsight, and if you allow yourself to Monday morning quarterback yourself, you probably would have gone up to 4% earlier and not had such a big problem with inflation. And so what is your are there structural things you can contemplate, or even after action reviews to say what would have happened if we would have paid more attention to the leading indicators, or improve the in engineering term, improve the bandwidth of your feedback regulator? It's, this is something, if you want to get the best result, you need a high bandwidth feedback in the system, even when there's averaging on the back end.
So this is something we only think about during waking and sleeping hours, as you can imagine. It's really hard to know what the lessons are. Again, we really thought things would. Nobody had seen the supply chains collapse. No one had seen labor force participation plummet. We didn't know, or unemployment go to 14% and higher than that, really. We didn't know how long it would take to go away. And if we ever see this pitch again, we'll know how to swing at it. But it's been
we'll now recognize
a bunch of firsts. Sorry.
Gentleman's time has expired. The gentleman, his time has expired. We'll now go to the gentlewoman from Missouri, the chair of the Capital Markets Subcommittee, Ms. Wagner, for 5 minutes.
Hi, thank you, Chairman McHenry. And Chair Powell, welcome. Thank you for your service and for being here today. Yesterday, I was pleased to hear you discuss how inflation is severely hurting the working people in America. In your testimony, you also state that strong wage growth is good for workers, but only if it is not eroded by inflation. And that is key. Inflation is a tax, a hidden tax on every American. If the Federal Reserve were to shirk its mandates to stabilize prices, leaving inflation alarmingly high, what would it cost America's hard-working families in Missouri's 2nd Congressional District and beyond?
So I think the costs of failure to restore price stability would be extremely high, and while there will be costs to success, the costs of failure will be much higher. You'd be looking at an extended period where people learn to expect and live with high and volatile inflation, and it's very, very hard to have rising real incomes during such a period. So it'd be a bad thing for the country.
Can you reassure the committee that the Fed remains committed to bringing prices down for our constituents?
Yes, I do.
Thank you.
I hereby assure you.
And changing topics here a bit, as China's economy reopens and about 18% of the world's population resumes its consumption of oil and other key goods, what sort of inflationary impact will we see here in the United States, sir?
So a stronger, a faster reopening of China, which it looks like we may be seeing, it does have the potential to put upward pressure on commodity prices, but it also would mean a faster sort of unraveling of the problems in supply chain. So those would be offsetting effects. I think sitting here today, we don't expect the net effect to be big for the United States. It might be bigger for other parts of the world, but we think it ought to be moderate overall.
Well, China is one of the world's top oil importers. And do you expect any inflationary effects on global energy markets as China's oil consumption returns to their previous levels?
So I think oil prices could be affected, and I think that's a big concern in Europe, for example. We have our own domestic oil, and we've got a lot of natural gas as well.
We sure do. I wish we were actually harvesting more of that liquid natural gas. Chair Powell, you, Vice Chair Barr, and many others have recently identified that the banking system is well capitalized and strong. Bank capitalization remained robust during the shock of the pandemic and related shutdowns of economic activity. Capitalization of large financial institutions weathered severe stress testing mandated by the Fed. And despite all of that, as also previously mentioned by Chairman McHenry, Vice Chair Barr insists on conducting a review of capital rules. I'm concerned that this review is being conducted in a silo and that the findings will not be made fully available to the public. Taking such an approach in the context of this holistic capital requirement review would make it impossible to conduct a transparent rulemaking process, denying the public information necessary to consider and to comment. I think this is just simply not appropriate in this situation, and I'm concerned by the lack of clarity, I think is the best word, perhaps at this point, by the Vice Chair. A couple questions. You've served on the Fed board for over 10 years since the financial crisis regulatory framework has been put in place. And over that period, have you seen any real-world evidence that America's banks are undercapitalized?
So American banks are strongly capitalized, and I believe Vice Chair Barr has said that as well. But
yes.
The point is there haven't been any real proposals to evaluate yet, and when there are, that will be done in a highly transparent manner.
I hope so. I'm glad to hear you say in a highly transparent manner. Do you agree that excessively high capital levels constrain banks' lending capacity with spillover effects on jobs and living standards for Americans?
This is going to go to one Eastern.
I think it's always a balance, right?
And I don't know if we're going to move
more
until he
safety and
answers
soundness
another
and more
question,
ability
like
to withstand terribly stressful
but
periods.
he kind of just put the
but
air
it
brakes
also,
on.
It's more expensive. Equity capital is
Or
more
at least
expensive.
an hour ago.
U.S. banks have competed incredibly well around the world.
Yes,
with
they have,
high levels
internationally.
of capital. But so that's a trade-off that you're always going to be making when you think about capital.
Gentlewoman's
My
time
time is expired. Yes, thank you.
We'll now recognize the gentlewoman from Ohio, the the ranking member of the National Security Subcommittee, Ms. Beatty. Ms. Beatty, for 5 minutes.
Thank you, Mr. Chair, and I like that title. To Chairman Powell, thank you for coming and being such a good colleague and friend. I have a couple questions I'm going to try to get through quickly. Chair Powell, in a press conference last month, you stated, quote, "There is a lot of spending coming into the construction pipeline, both private and public, and so that's going to support economic activity," end of quote. How do you think the strong pipeline of funding from what the Democrats put together in passing the Inflation Reduction Act, the Infrastructure Investment Jobs Act, and the CHIPS Science Act will do to have economic activity this year and moving forward?
So I guess I was making the point that there are a lot of sources of demand that we can rely on, even though demand has been relatively increasing at a relatively modest rate. Part of it is...
Will this help in that demand?
Yes. I mean, there is state and local governments I mentioned are about it.
So would you say this is a great thing that we've done coming from the left over here?
Not for me to judge the merits of what gets done, but I'm just saying there's
but
demand,
it will contribute
demand there that will support economic
and support
activity.
it.
Yeah.
So I'm going to assume from that that's a positive. Let me go to the second question. Chairman Powell, the Federal Open Markets Committee is projecting that unemployment will increase to 4.6% by the end of the year. And those costs, as we know, won't be borne equally. If we look at the ratio from the last time unemployment was 4.6% and compare it to our numbers now, it would mean that white unemployment would go up to about 0.9, but black unemployment would go up by 2.3%. Does that sound somewhat accurate to you?
Yes.
Can you address the disparity impact with that? And before you answer, let me go to the book and thank you that was put at our places together. You made in this book with your signature on it is stated, however, while disparities in unemployment have largely returned to pre-pandemic levels, there still remain significant disparities in absolute levels of employment across groups like African Americans and Hispanics. So can you address that?
I can. So right now, to your point, actually, African-American unemployment is, I think, 5.4%, which is just about as low as it's been since we started tracking it in 1972.
But differential from majority by...
I'm going to say, so that's 5.4, whereas the overall is 3.4, and that includes blacks, so that means for whites is well lower than that. What happens is, so there's a persistent gap between black and white unemployment, and also when unemployment goes up quickly in a recession, it goes up much faster for African Americans. When the economy grows again, it comes down faster. So That's just, that's somehow embedded in our economy. We don't really have, the best thing we can do is achieve stable prices so that we can have long expansions. And what happens in those long expansions is that the labor market gets tight, sustainably tight, and we have historic lows in unemployment, including for African Americans.
Let me say thank you, and let me also, again, thank you. As you know, in the 117th, I was the chair of the D&I committee, and let the record state that you always push for making sure that you understood and respected that. And in that, this is very minor and certainly personal to me. In this report, maybe those who helped you author it, I would like to see the areas that talks about unemployment not under a title of special topics, but something that draws a little more attention to it as some of the others, just very minor. Last question I have. Can you tell me if the Feds is committed to working with the other agencies like the FDIC and the OCC to finalize a rule soon on CRA? Certainly that's something of great interest to many of my colleagues. So can you give us any updates on it or how the process is going or what we can expect?
Yes, so with Governor Brainerd's departure for the White House, I've asked Vice Chair Barr to take the lead in moving it forward. There's this, I would characterize it that there's essentially agreement between the three banking agencies on the changes to be made. That's all being written up and vetted, and at a certain point, members of the Board of Governors will be briefed on it, will vote on it.
Is there anything we can do to help with that?
No, I think we're hard at work on it, and it's going to take some months, but I think we're nearing we can see the airport, and we'll be landing in a few
Gentlewoman's
months.
time has expired. The gentleman from Kentucky, the chair of the Financial Institutions and Monetary Policy Subcommittee, Mr. Barr, is recognized for 5 minutes.
Thank you, Chairman McHenry and Chairman Powell. Economic data are mixed, as you know. On the one hand, low unemployment, robust hiring, strong consumer spending, and persistent core inflation, and a CPI that's still more than 3 times your 2% target suggests more aggressive tightening is warranted. On the other hand, because the Fed misjudged the inflationary impact of Democrats' overspending, kept interest rates too low for far too long, and failed to end quantitative easing soon enough, the Fed has been forced to raise the Fed funds rate 450 basis points in just 11 months and reduce the M2 money supply at the fastest rate since the 1930s. As a result, wage gains have slowed, credit card debt is at an all-time high, the housing market is in a slump, and the yield curve is inverted. I agree with you that the historical record cautions strongly against prematurely loosening policy. But what would you say to those who caution about the lag effects of monetary policy? The precipitous decline in liquidity. Will the economy have to suffer a recession in order to bring inflation down to 2%?
Boeing AI news.
We are very well aware of the lags with which monetary policy affects economic activity and inflation. Those are long and variable, and I would stress highly uncertain. There is really no agreement on exactly how long they are, but we know that slowing down the pace of rate hikes this year is a way for us to see more of those effects as they come in.
In December, most Fed officials expected to lift rates this year to between 5 and 5.5%. Is that still your estimated terminal rate, or does the data suggest that the terminal rate could be higher than 5.5%?
My colleagues and I will write down new forecasts and release them to the public on March 22. But as I mentioned in my testimony, the data we've seen so far this year suggests that the ultimate level of rates will need to be higher. But we still have some more data to come in between now and the meeting. But as of today, it suggests a higher level than that.
Let's go to Vice Chairman Barr's review of the capital framework. A lot of questions for you on that. When Governors Brainerd, Quarles, Clarida, Bowman, and Waller made up the board under your leadership, major changes in policy were addressed following board consensus and not when there was significant dissent. Will you commit to not implementing a new capital framework following this holistic review or the Basel Endgame if there is considerable dissent from the board?
I can't really commit to that. You know, we are a consensus kind of an organization, and that's what we'll work toward. But ultimately, we
Would that be a break from your prior practices? You're a consensus builder, Mr. Chairman. You pride yourself in that, and we credit you for being a consensus-oriented chairman. Will you commit to continuing that practice and not allow major changes to the bank capital regulatory framework to be made by one person?
Well, they can't be made by any one person, but I do commit to that, and I commit to doing everything I possibly can to bring people together in consensus, to have something that can be broadly supported.
Thank you. Earlier this year, you said, and I quote, "We are not and will not be a climate policy maker." However, in the Fed's draft principles on climate-related financial risks, one proposed principle suggested that boards of directors or of a financial institution should consider making changes to its compensation policies to align with values in the context of supposed climate risks. It appears then that the Federal Reserve, through regulation, wants to begin implementing climate policies. So which is it? There seems to be a disconnect between your statements publicly and the rules that the board is putting forward for comment.
Well, I feel strongly that climate change is an important issue that needs to be addressed by elected people. It's just not something that we've been charged with by Congress.
So watch out for ads. But Powell said that statement just came in. Powell reiterates that data suggests we'll need higher rates, higher terminal rate this year.
That's going to be it. And I as I said before,
Euro close is coming up.
We don't want to drift into becoming a climate policymaker, and we'll have to guard that border very carefully.
Regarding the Fed's climate scenario analysis pilot program, did the board vote to approve the creation of that pilot program?
You have to check, but I don't think so. I think it was already authorized.
And this is a concern that I have. I'm concerned that one governor acting unilaterally to implement major policy changes without board consensus is a problem. And so I would urge you and your colleagues on the board to continue a consensus-oriented approach, and I yield.
Gentleman's time has expired. We'll now go to
a lot of big tech coming out. Again, last 3 minutes, you have Powell reiterating higher terminal.
Thank you, Mr. Chairman, and welcome, Chairman Powell. Thank you for your careful conduct of monetary policy, independent of the many political desires that circulate in this building. Independent monetary policy is a bedrock of a solid economy. I want to reflect for a moment on another bedrock of the American economy, the full faith and credit of the United States government, which is now being put at risk by the Republican majority. My Republican friends know how very dangerous a game they are playing. They know that salary payments to our soldiers are at risk. They know that their irresponsibility will raise mortgage rates for new home buyers. But they say this is the only time we focus on spending in the debt, which of course is baloney. It's a pernicious form of baloney. The time to focus on the deficit is when you are voting for the spending and the tax cuts that create the deficit. When you're voting for the Trump tax cuts, which the CBO said would add $2 trillion to the national debt, that's the moment to consider whether you want to do that. Not when the good name of the United States is hanging in the balance. This stuff gets a little complicated, but the American people really need to understand what's happening here. The Congress sits down to a huge 10-course meal of tax cuts and spending and more defense spending and expansion of this program and stimulus, all of which we vote for collectively. First course, second course, white wine, red wine, 4 servings of dessert. And then the bill comes and my Republicans say, whoa, wait a minute, hold on, look at this bill. This is irresponsible. Do we really want to pay this bill? That's not the moment for the consideration. The moment is when you're ordering 4 helpings of dessert. That's when we should be talking about it and taking responsibility for the choices that we make without putting the full faith and credit of the United States at risk. Now here's where the hypocrisy comes in. My Republican friends like to point the finger at this side of the aisle and blame us. But Chairman, as you know, fully 1/4, 25% of today's United States debt was accrued in the 4 years of the Trump administration. This country's been around for 246 years.
All right, we've been going down since those comments here. Watch if we break. We'll be near the lows of the day. You're at 39.85 again.
By the way, speaking of hypocrisy, in the 4 years of President Trump, the debt ceiling was raised or suspended 3 times. I didn't even notice. But now, of course, we have a different president, and so the calculus is different. Now, Mr. Chairman, I don't think I'm going to persuade the majority to act responsibly here. I actually think the markets will persuade them.
And you'll recall, because we were watching this closely, September 29th, 2008, the Republican House of Representatives voted down the Great Recession Rescue Package. As the vote was going down in the House of Representatives, the equity market dropped 7%. $1.2 trillion lost in people's retirement accounts. Now, Congress sobered up, and a couple days later, we passed the Rescue Act. So, Mr. Chairman, there is a question here, and the question is this. You and I both watch the markets pretty closely. Treasury tells us that on June 5th, that's just 3 months away, on June 5th, the Treasury runs out of money. So my question to you, Mr. Chairman, I know I'm asking you to be a little speculative here, but what should we watch for? What market signals could indicate that the markets are getting fed up with the manifest irresponsibility around this? Give us some things that we should be looking for.
And I'd love to, but I'm going to limit myself to what other Fed chairs have said about the debt ceiling, which is that it does need to be raised by Congress in the end. There are no rabbits in hats, as I mentioned, and also that no one should assume that we, the Fed, this is the Fed's business, is to protect the economy from various events. And you know, I wouldn't assume, no one should assume that we have the tools to protect the highly uncertain effects of that kind of an event.
So monetary policy is obviously very concerned with interest rates. If global capital markets begin to decide that we're really serious about hurting ourselves this time, is it possible that we could see interest rates rise more because borrowers of United States debt decide that we're actually a little risky? Is that possible?
I think that and many other things are possible. The thing is, we've never crossed that line, and if we cross that line, we're going to find out, and I think it's highly uncertain.
Okay, so that's possible, and you know I don't like pressing you on these things, but you said this and many other things.
1 point off the level. Low of the day is 39.73, and that is another level there, but watch out. We've been dropping since those comments.
All right, thank you, Mr. Powell. Again, I really thank you for your really responsible conduct of monetary policy, and there's a reason that you are insulated from our political desires, and I very much appreciate that, and yield back.
Gentleman yields back. We'll now recognize the chair of the Small Business Committee, Mr. Roger Williams of Texas.
Thank you, Mr. Chairman, and Chairman, it's good to see you. Always good to have you here. In past congressional testimonies, you've repeatedly stated that you support protecting the state-based system of insurance regulation, which is the most effective and competitive in the world. In my home state of Texas is the world's 7th largest insurance market, proving the success of this system. Now at the International Association for Insurance Supervisors Conference in November, there is the opportunity to have the U.S. state-based aggregation method become formally recognized as comparable or equivalent to the insurance capital standard. We should not be following the European model that has increased regulations and less competition, and we should prioritize a model that encourages deregulation, competition, and less government involvement in pricing. So my question is, Chairman, can you highlight the benefits of the U.S. state-based aggregation method compared to the European model regarding market resiliency and systematic risk? And can you confirm that you will push for aggregation method to be deemed equivalent by the IAIS?
I can say this. I do think that our insurance regulatory system has proved itself appropriate and adequate and gotten the job done for a long time, and we don't need to be copying other countries or other regions.
Insurance
regulatory system.
There's no way.
I'm a little rusty on,
the
details of the
so watch out. You're near the 3980.
That sounds right.
Jerome Powell speaking right now, but you
bottom
just have
line is
Bradley
our
Frizzle
side
and
works,
the
the
Peach.
other doesn't. We need to stay where we are. Our side works. Yeah, thank you. Also in the past, you stated that banks were well capitalized.
Oh, wow, we
talked
did it.
about that today.
We did it, baby.
But now there have been
God bless
increased
you, Bradley
conversations
Frizzle.
about raising capital requirements. Numerous economic studies have found that raising capital requirements for banks will increase borrowing costs for their consumer and commercial customers. And I'm somebody that's owned 50 years. I've never had a day I wasn't out of debt, so I'm concerned about this. And implementing additional regulatory capital requirements will slow economic growth and limit financial institutions' lending ability. So do you believe that raising capital requirements would raise the cost of borrowing and add cost to our economy in Main Street America?
Well, it depends on which banks experience higher capital requirements, and there isn't any proposal to evaluate right now, of course, but it's always a trade-off. You know, higher capital is good in a sense because it keeps banks able to lend during bad times. That's really a good thing. Too much capital, though, probably limits credit availability. So we're trying to strike that balance always.
And this has been touched on a little today, but let me come from a different angle on it. But the Reserve was created to act as a nonpartisan entity that remains separate from party politics. Talked about that. And unfortunately, throughout recent years, the Fed has gotten caught up in politically charged issues like economic inequality, gender and race discrimination, and climate change. Recently, the Federal Reserve Board proposed guidance on managing climate-related risks for large banks, further proving that the Fed is giving in to some political pressure and operating outside its intended purpose and responsibilities. So our country's financial leaders, in my mind, should be focusing on addressing runaway inflation instead of worrying about the financial institutions are doing to monitor climate change. So, and we've touched on this a little bit, but how can the Fed ensure that they're not placing undue regulations and guidance on banks by forcing involvement in partisan green politics? And how's the Federal Reserve ensuring they remain separate from political influence?
So I think it's absolutely critical that we do. I mean, our independence is partly founded on the idea that we will stay out of stuff that you have not assigned us to do. And if we're going to wander all over and take on the hot issue of the day, our case for our independence is dramatically weakened. On climate change, I think we do, you mentioned the guidance, and then there are also the stress scenarios, and those are the two things that we've done. We've tried to keep those tightly focused on the banks, understanding and being able to manage the risks that they'll run over the longer time periods on climate, and not slide into a broader sort of policy-making role on climate change. And I accept that could be a slippery slope and a moving border. And I just want to say, and I think my colleagues feel the same way on the board, that we're going to guard that border carefully, and we're going to stick to our role and not try to be policymakers the way in many other countries the central bank is out there in the lead with the support of the public doing climate policy. But that's not where we are in the United States, and we're not going to pretend that it is.
I've got some time left, and I'll yield back, but I just want to say, as an auto dealer, I'm looking for the first day of that rate cut. Done with that? So, thank you for being here. We appreciate it.
Gentleman's time has expired. We'll now go to the gentleman from California, Mr. Vargas, for 5 minutes.
Thank you very much, Mr. Chairman. And again, thank you for holding this hearing. Chairman Powell, a pleasure to see you again. I've said it before, and I'll say it again. It's always great to see you, because I always think of the old Republicans, the ones who are very noble, did the right thing, didn't play chicken with the economy, very forthright. And so anyway, I appreciate you being here very much. Like some of my colleagues on the other side, I'd say the same thing about some of them. And I appreciate you. So we heard today that the inflation is Biden's fault. So what is the inflation rate in the European Union today?
We did not hear that just today. Just clarification.
It's high.
Is it 10% possibly?
I think if you're talking about headline, I don't have this figure in my head, but it's very, very high from a headline standpoint. And they've had core inflation move up too.
Yeah. So are they following Biden's then policies? Is that what caused the inflation? Because it seems to be Biden's fault.
So I think inflation is everywhere, and it must have to do with a common factor, and that common factor has to be the reopening of the economy and the things that were done on COVID. On the other hand, each country has a little bit different case, and I think you have to be careful. We had much more of a demand-oriented issue than they did. Now they have their inflation looks a lot like ours did a year ago.
Right. Yeah, I just had to bring it up because, again, Mr. Sherman brought it up, but it's interesting every time I hear inflation is caused by Biden, I wonder why is it all over the world? I mean, it's not because of the pandemic, of course, or Europe's at war. I mean, that wouldn't cause it, of course. It'd have to be Biden's policies. That's ridiculous. And I think the voters saw through it last time. So I haven't been here 15 years as my good friend, Mr. Foster. I've only been here 11. But when I first got here, the boogeyman, and I heard it all from my friends on the other side, was Dodd-Frank. Dodd-Frank was going to be the end of banking. And in fact, some of my colleagues would almost scream how horrible this was. And then we got the bankers up here during a real stress test, which was the pandemic. And we asked them, has it been helpful to have Dodd-Frank? And you know what they said? Do you know what they said?
I don't.
Oh, they said it was helpful. In fact, it kept the banks capitalized. It was fascinating. Now, to be fair to them, they did complain about some of the smaller issues, but not Dodd-Frank in general, the bill. Then it seemed that CFPB, that became the next boogeyman. But they're starting to seem to fade on that, and I think the reason for that is the CFPB has actually helped so many people that now a lot of their own constituents now are getting helped by the CFPB, so all of a sudden there's not quite the energy. So now they're attacking ESG, and they're saying that you and everybody else is somehow conspiring to make sure they don't buy their oil or their coal. Are you conspiring to do that? Are you conspiring?
I don't believe we're conspiring.
No. Now, I heard it was supposed climate risk. Is there risk in the climate change?
We're conspiring.
Yes.
There is? Could it affect the bank?
Certainly, in the longer run, yes.
Yeah, of course it can. Do you think insurance companies take this into account?
Yes, actually, I believe they do.
They absolutely do.
Who write long duration liabilities, they certainly do.
Of course they do. I mean, they're very concerned with it. Weather is a big deal. I was a vice president of Liberty Mutual in their corporate legal department, and I can tell you weather and the changing of the weather, we used to have what we call catastrophes. And these catastrophes happen every 25, 50, 100 years. Now those 25, 50, and 100-year events happen every 5 years, every 2 years. So of course it is. I mean, it's ridiculous not to take a look at these ESG factors. We have to. And again, I'm glad that you guys are taking a look at it because it's real. I'm glad that, you know, the president's taking a look at it. And it's sad that my colleagues on the other side just want to stick their head in the sand and say, no, climate change is supposed climate change. No, the reality is it's real climate change, and it's costing billions and billions of dollars, and if you don't believe it, go ask all those poor people in Florida that had those huge hurricanes come through and wipe them out. So again, I appreciate very much the work that you've done. The only thing I hope is, as you said, if we ever see this pitch again, we'll know how to swing at it, and I hope we don't get the pitch of defaulting, because I'm not sure we'll know how to swing at that one. So thank you again, Mr. Chairman. Thank you for being.
Thank you.
I yield back.
Gentleman's time, gentleman yields back. Gentleman's time has expired. We'll now go to the Chair of the Oversight Subcommittee, the gentleman from Michigan, Mr. Huizinga, for 5 minutes.
Thank you, Mr. Chairman. I'm going to move quickly, and good to see you again, Chair. You know, I caught a little bit of the Senate hearings yesterday, and you had a lot of pressure to keep the sugar high going. And frankly, if the Fed and many of our colleagues had listened to what many of us were saying, we should have been weaned off that artificially low, cheap money that kept the party going, and frankly, we wouldn't be in this position. To reference Chair Greenspan's punch bowl analogy, not only did no one have the courage to remove the punch bowl, you had people cheering on the pouring of another bottle of 151 rum into the punch bowl. And here you got folks wanting to do the exact same thing. Let's spend more. It's just, and now here we are. You have an impossible decision to slow the economy or let everyone get crushed by inflation. And we know tightening means a slower economy. Slower economy means fewer jobs. Fewer jobs hit those who can least afford to lose a job. And so in short, the lower rungs of the economic ladder will suffer more than the rest of the ladder. So that's the state of play of where we're at. I have to hit a couple of quick issues here. I wanted to start off by discussing climate, especially given the Fed's announcement in January that it was going to conduct a pilot climate scenario analysis exercise. The Fed, along with the OCC and FDIC, have each issued proposed climate risk management principles for banks that you are attempting to finalize those by the end of the year, and the requirements don't stop at the border. The UK and the EU central banks are moving to require significant ESG disclosure regimes as well. I know the Fed is taking a look at commodities capital charges in the holistic review, but even though the Fed isn't forcing banks to encompass climate analysis in their stress tests, there are many initiatives at the Fed that are going to make it more costly for banks to finance traditional fossil fuel companies. So I want to ask you a very specific question. Will you commit that you will withhold support for a new capital rule that increases capital charges on bank activities in traditional energy companies?
You know, I can't sit here and promise what I will and will not vote for, because I don't know what's going to be in the proposal, but that's not the kind of thing I think we're looking at.
I'm sorry, it's not the kind of thing?
So this isn't about, this is about overall capital levels. more than anything else, I think, rather than the specific thing you're talking about.
Okay. We're going to follow up on that because we need to have a real-time conversation about what that is going on there. I want to quickly switch topics and go in a different direction for this next question. I want to ask you about two opinions issued by your legal staff in November of 2019 and December of 2020 to the asset managers Vanguard and BlackRock. Mr. Chairman, McHenry, I'd like to submit the two letters for the record.
Without objection.
Thank you. These opinions appear to outline the parameters of both how both Vanguard and BlackRock can operate without being deemed a bank holding company. In addition to the legal restrictions outlined by the bank holding company, these opinions listed out here in quite detail list out commitments that the companies would need to take to avoid being viewed as having, quote, control. These opinions also appear to provide assurances that the Federal Reserve Board staff would not recommend that the board find the asset managers to be bank holding companies. Further, it is unclear whether the board will take any steps beyond a periodic self-certification by the asset managers to monitor compliance with the condition that they, quote, not take any action to control a banking organization. As some asset managers play a larger role and clearly strive to influence policy in companies across the free market, we need to remain vigilant. So, Chair Powell, is the board taking any steps to assess or monitor whether Vanguard and BlackRock are complying with the commitments made in November of 2019 and December of 2020?
I said the market popped, no news on that. I think it was just the break of 4,000 on the futures. SPX is right below 4,000 right now.
I appreciate that. But that says to me that doesn't sound like there's an assessment that's taking place ongoing or scrutiny of that. Is somebody reviewing that, or is someone in charge of reviewing that?
Honestly, that's a very specific, narrow question. I'm quite familiar with the issue.
Well, it's specific and narrow to two companies, but not to an industry. I mean, that's what we need to be driving at. And I guess we need to find out whether there's somebody proactively reviewing these activities and these commitments that the companies have made as well as the Fed has made. So how often do you think they should be reassessed? Annually, monthly, biannually?
This is a very narrow set of questions. I can get you great answers really easily, but I don't have them in my head.
I look forward to those great answers, and I yield
We'll
back.
now go to the gentleman from New Jersey, Mr. Gottheimer, for 5 minutes.
Thank you, Mr. Chairman, and Chairman Powell for joining us today. Chairman Powell, when you testified before the committee last June, PCE inflation was up 6.3% year over year. Just a few weeks ago, PCE data showed that the numbers decreased to 5.4%. We're moving in the right direction, but despite the Federal Reserve raising interest rates at the highest rate since October 2007, we're still far off from the 2% inflation that the Federal Reserve is targeting. Do you believe 2% is still the right target for inflation? And given the ongoing energy transition, the push to shift supply chains out of China, and the labor shortage here in the U.S., should the Fed consider adjusting its target to avoid overly burdening Americans? Would a decline to 3% inflation be enough to offer price stability without excessive economic pain?
No, 2% inflation is going to remain our longer-term inflation goal.
Are you concerned given all the other factors that I mentioned, or you think
you're above 4,000 the first time? No news, just momentum. No even statements. We've recovered Powell's higher terminal rate statements later in the speech.
We can start talking about changing it. We have no instinct to do that.
Thank you, Mr. Chairman. The gig economy has grown significantly in recent years as more Americans are working as contractors or running small businesses. The Dallas Federal Reserve has written that gig workers are often not included in payrolls and not counted among the unemployed, and this may understate the number of Americans who could be counted as unemployed. The Fed has also noted the large number of Americans who are missing from the workforce after the pandemic.
You got to get to like 4,003, 4,005. Otherwise, if we can't break above here, I think it's still going to cuck all day.
I missed the word you're saying.
Sorry, do you think we need to change the way we think about measuring unemployment to account for these changes?
I didn't catch this. You said, what was the word?
Gig. Oh, sorry, gig. Gig
workers.
Yes, I'm sorry. Gig workers.
He's like, I thought you said gig.
Okay.
Never mind.
No, we clearly need to incorporate gig workers both into the labor
sounded like you said
labor
something
force
else, sir. I didn't know. I
they're
didn't want to
working.
get canceled.
They certainly are working. We try to do that. It's not that we're not trying to do that. We may not be doing it perfectly.
Is there a better way to capture them? Just worried that you don't have the unemployment numbers may not, given we're still using older measurement ways. Are we updating our measurement?
We absolutely try. We're definitely trying to get those people, self-employed people. They do report in the household survey, I believe. I can get more for you on that, but I'm sure we're not doing a perfect job at it because it's a relatively new thing, but we're very well aware of it, and they're supposed to be included.
That'd be great. I'd love to talk to you more about that.
Great.
Thank you. As you're also aware, many of us are having discussions about the long-term fiscal health of our country and our economy. Like many, I worry that higher interest rates will put upward pressure on the national debt. CBO already estimates that annual interest costs will nearly triple for the U.S. over the next decade. You said to the Senate yesterday that interest payments are not a consideration of the Fed, but are you concerned that higher interest rates will more rapidly make payments on the debt unsustainable? And are there actions Congress should consider to address this issue?
So I'll say what my predecessors have said, which is that we're on an unsustainable path, and we really need to. Ultimately, we will get back on a sustainable path, and the sooner we get to work on that, the less painful it will be.
And rates, of course, were low between the financial crisis and the end of 2021, particularly low. After the target inflation rates hit, what do you think the new normal looks like in terms of rates and the Fed balance sheet over the next 5 to 10 years?
It's a really good question. There was a secular decline in longer-term interest rates, which we don't control, for 40 years to the point where they were, where the 10-year was at 10-year Treasury was at 10%, and then at the end of 40 years it was quite low. You're at higher levels. You're at, as you pointed out, levels we haven't seen since earlier in this century. I don't think anybody knows what this is going to look like 5 years down the road. So you have to ask, demographics haven't gotten better. Globalization may actually move a little bit in reverse, which would tend to produce higher inflation and thus higher rates. But you have to ask the factors that caused low rates, how much of that has changed? And some of it has, but much of it hasn't.
Building on that a little bit, what's the right metric you think for, if you're in our shoes, for assessing our fiscal health? Do you think we should be focused on maintaining a specific debt to GDP ratio, or is there a specific number? Are there other measures lawmakers should be focusing on?
So we've traditionally focused on debt to GDP, but many people pointed out before the pandemic that rates were secularly lower and that therefore you could look at sort of real debt service. There was a lot of research on that, and by those measures, actually, debt service was much more easy to handle. Now we have the 10 years back close to 4%, and I think we need to be careful not to assume that these secularly low, longer-term rates are going to continue indefinitely, because that doesn't look likely now. And frankly, most forecasts have always shown things like the 10-year going back to a higher level, so it won't be that big of a change. I think it's more or less been handled, for example, by CBO that way.
Excellent. Thank you so much, and I yield back. Thank you.
Thanks.
Now I'll go to the gentleman, the Vice Chair of the Digital Assets Subcommittee and the Chair of the Housing Subcommittee, Mr. Davidson of Ohio, for 5 minutes.
Thank you, Chairman. Chairman Powell, thank you. It's an honor to be able to talk with you today, and appreciate the work you and the monetary policy-focused portion of the Fed does. We're rooting for maybe a more consistent input from our bank regulators. So for the regulatory side, I've spoken with multiple bankers who tell me that they've never seen a higher degree of regulatory burden, steering, guidance, shaping activities in the market from regulators. I don't think that's just narrowly focused on the Fed, but I'd ask you to look into it. There are a lot of people that feel like there's an Operation Choke Point 2.0 going on, and it's particularly focused on debanking people that are disfavored by the current executive branch primarily, just like the previous Operation Choke Point was. And so to the extent that you yield any influence over the regulatory component of the Federal Reserve, I think that would be meaningful and important, because our monetary system, part of the strength of the U.S. dollar is, of course, a stable store of value. Currencies around the world are wrestling with that and inflation, and you guys are working to tackle it.
Yeah, that headline's coming through.
But
It
the other
says
part
Powell
is it's an efficient means of
doesn't
exchange.
look likely that low long-term rates will continue. So
really
watch for a
feel like some
reaction.
third
Last time
party's gonna
there was a
steer or
statement
shape
from
their
what he
money.
said.
They
We
don't
had a little
trust it.
reaction.
I mean, the unbanked and the underbanked, fundamentally, that's lack of trust is part of why they don't use our banking system today. In fact, that's part of the appeal of the digital asset space, is the permissionless nature of it. It seems that a lot of people in the financial services space that have grown up in it, that are leading it today, feel threatened by the prospect of change. And if they've maybe reluctantly concluded that you can't ban crypto, they at least want to keep it account-based so that some third party can actually control the assets, which is a polite way of saying we don't actually trust our citizens to control their money or their assets. We'll let somebody else do it for them because we can control those third parties. And in fact, that's what the regulators do, isn't it?
Isn't what?
They control the third parties. I mean, if you don't comply with the regulatory regime, you don't get to operate a financial services business, right?
That's right.
Yeah. And so at the end of the day, I think a lot of people were concerned by your remarks yesterday. I know I was, by saying that permissionless digital assets pose a systemic risk to the financial system.
Well, what we said in our guidance, I think if you, by the way, I think if you read through the digital guidance, which I did getting ready for this hearing, of course I read it before we put it out the first time, but it's pretty careful to say that we don't want regulation to oppose innovation and thus entrench incumbents and things like that. It's pretty balanced, the language, and I think it essentially goes to the question of protecting the safety and soundness of institutions. And there is one, I think what we say about, I'll paraphrase it, what we say about permissionless blockchain is that they have been vehicles for fraud.
Yeah, 0.24%. So if you follow your own report on fraud, it's a fraction of what it is with the U.S. dollar. Speaking of the dollar, is there any real current threat to the dollar's preeminence as the world's reserve currency?
You say you're asking a question? I didn't.
Yes, sir.
Is there a real threat?
Is there a threat?
I think that our status as the world's reserve
commodities,
currency is
agriculture, WASD
is
report.
not under particularly strong threat right now. I think it's a pretty stable equilibrium. It's not a permanent equilibrium, but there isn't really a serious competitor, and that's not because of any of this. It's because of our democratic institutions and the rule of law, and the fact that the dollar's value is pretty stable.
Okay. So quickly on the repo market, just any insight into that, and then I'll have my last comment here and just leave the last word to you. But particularly curious about the repo market. But I'll close by simply saying I'd ask you to turn off the purchase of mortgage-backed securities. As the chairman of Housing and Insurance, I'm particularly concerned about affordable housing, and the artificial prop for the mortgage-backed securities does raise the cost of capital in that space. So whether you own it or occupy it or rent it, it's going to raise the cost there. But I'd just ask if you'd comment on the safety and soundness of the repo market, if you would.
Of the repo market. As far as I know, the repo market is functioning reasonably well these days. Are you talking about the reverse repo facility? Or
yes.
The reverse repo facility is a different thing. We can continue this.
I'd like to follow up with you later, and my time has expired. I yield.
Thanks.
Gentleman from Illinois, Mr. Casson, is recognized for 5 minutes.
Thank you, Mr. Chair. Always a pleasure to see you, and appreciate your time here today. I want to start with this chart in your monetary policy report, which I think is fascinating. Chart 14 on page 17. This is this history of wage growth and job growth. And for those of you who don't have it in front of you, broadly speaking, from 2000 to 2017, we had more workers than jobs. From 17 until the COVID crisis, it was about the same. And since COVID, we've had more jobs than workers. And there's tons of rich stuff in here that I just enjoyed reading. But broadly speaking, if that was the only thing going on in the economy, I would assume that we had 20 years where it was essentially a buyer's market for labor, and the last year and a half where it's been a seller's market for labor, as you look at that. And if I go through and I look at from 2010 to 2020, CPI was up 20% over the period, and real median wages less than 10%. So for half of the economy, they didn't keep up with wages, even though we think of that as a very low inflationary period. Corporate profits were also up strongly, as you would expect. I'm not saying that with judgment, right? If it's a buyer's market for labor, you would expect the gains from labor productivity to flow to consumers and profits, and that looks like what it did.
Which chart are you looking at?
This is chart 14 on page 17 of the monitor. It's the top right corner there.
Got it. Okay, thanks.
In the last year and a half, median wages are up 5%, which is almost as much as they grew during that 10-year period before. And yes, inflation is still a bit higher than that. But what I'm wondering is, as you look at the economy, is wage growth universally bad in your view, or is wage growth good to the extent that it's keeping up with wages? Because historically, wages didn't keep up. And how do you think through that nuance? Because interest rates are a very blunt tool. And, you know, and if we are now, if you agree with me that we're now basically in a seller's market for labor, shouldn't we expect and welcome some wage inflation that goes with that?
So I'd say two things. First, we want wages to go up in ways that are consistent with over time with the increase in productivity and inflation, and that makes all the sense in the world. Yeah. The other thing I would say is that in this instance, what we've seen is inflation eating up these very high nominal wage gains have very largely been eaten up by higher inflation. So it's very important that we restore price stability so that we can start to see real wage gains after inflation across the income spectrum.
Yeah, no, and to be clear, like we're all opposed to inflation here, but in that 2010 to 2020 period that we all viewed as a very low inflationary period, wages, the gains from productivity did not flow to labor. Wages did not keep up with inflation. And we didn't think about that as a problem for the Fed to fix because overall inflation was down. So, I mean, this gets sort of theoretical, but let's say that we had 6% wage inflation and 5% CPI. There'd be more money in people's pockets, but would we view that as a inflationary period to clamp down on? Because we didn't view the inverse as a problem, if you will.
So our job is to restore price stability and keep price stability. It isn't to keep wages down, and it's certainly not to get involved in trying to establish the appropriate level of labor share of profits, for example. That's not the way we think about it at all. We think about price stability, and when we think about price stability, we think about wages as an important input to that. But we're not targeting a particular level of prices, and we would never say that we don't want real wages to go up. What we're really charged with is price stability, and to do that, we have to think about wages. But in particular, no one at the Fed would be upset to see the labor share go up, but that's not something that our policies affect. That's set by globalization and the advance of technology and educational and skills and aptitude and all those things. That's what drives and productivity. That's what drives labor share.
Yeah, and it's hard to have these conversations in 5 minutes, I realize.
Happy to follow up.
I guess what's hard is that also in that 2010 to 2020 period, median home prices went up by 50%. Yeah. We didn't view that as inflationary. 401ks went up a lot. We didn't view that as inflationary because those were asset increases. And so as we have shifted the gains from people who had wealth to people who were dependent on wages, there needs to be some correction, and I leave it there because I'm out of time, but how we think about that.
Gentleman's time has expired.
Thank you. Go back.
We'll now go to the gentleman from Tennessee, Mr. Rose, for 5 minutes.
There's GM news right now.
Thank you for being with us today, Chairman Powell. Chair Powell, I just want to echo at the outset some of the concerns that my colleagues have raised about Vice Chair Michael Barr's, quote, holistic review, unquote, of capital markets.
We'll end this in a little bit. I mean, it's going to go to 1 p.m., so there's like an hour left, but it seems like the markets reacted more to the stable headlines we've been getting. So we'll give it a little bit.
I'm going to dive right into my questions.
I'm just posting shit on Snapchat, listening, so I feel you.
The U.S. Coin Task Force released their report on the state of coin a few months ago. The report notes that the Federal Reserve and U.S. Mint will be jointly contracting with a third-party consultant to review the coin supply chain and develop recommendations to improve it. Chairman Powell, could you provide us with an update on what the Fed has learned from its review of the coin circulation issues that occurred during the pandemic?
So we know that the flow of coins, the natural flow of coins in the economy slowed down a lot because people were staying home and that kind of thing, and they may have switched to non-coin-based
They're talking about change,
means of payment. And we feel like the evidence is that that's continued now.
And then you're back below the 50-day moving average
that.
now.
And coins are sitting in jars and on people's desks and at home, and they're not circulating back into the banks and thus to the retail stores. And so we're working on that. We're working with the Mint. We're working with all the stakeholders in the coin ecosystem to try to address this problem, and we're well aware of it.
So it seems to me that what we learned from that is that it's probably necessary to have a greater reserve of coins if there is such an interruption in the future, so that commerce is not indeed interrupted. Would you share that broad view?
That sounds right. I'm not an expert. I will say it feels like we need more coins now because more of them are sitting in people's homes and pockets, and they're not flowing back to where retailers in particular need the flow of coins. So that sounds right to me.
On a related note, could you speak about the importance of maintaining cash as a viable payment option, particularly for those that lack or don't have access to traditional financial services?
We think it's absolutely critical because there are people who don't have credit cards. Many people don't have credit cards. They don't have good credit, and they need to be paying in cash. And when stores are not dealing with people who don't have cash, it's a serious problem for those people in the economy. We have it at the Board of Governors, and you see it elsewhere because most payments are now taken care of by credit cards, and it's very efficient, but we need to be looking out for people who use cash.
Thank you. I appreciate that perspective. Picking up on Mr. Lukemeier's concerns that he expressed earlier, as you know, the Consumer Financial Protection Bureau's funding mechanism is intricately linked to the Federal Reserve System. According to Title 10 of Dodd-Frank, each quarter the CFPB director requests an amount that is reasonably necessary to carry out the Bureau's authorities, and the Federal Reserve must transfer that amount so long as it does not exceed 12% of the Federal Reserve's total operating expenses. For the first 5 years of the existence of CFPB, of course, there was a relaxation there with respect to that 12% cap that allowed $200 million annually to be spent beyond that number so long as it was reported, so long as the reported excess was sent to the President and Congressional appropriators. Chair Powell, during your chairmanship, has the Fed ever rejected a CFPB budget request?
That's the second time they've asked them this.
I believe so.
And could you tell us what policies and procedures are in place at the Fed to ensure that there is no waste, fraud, or abuse, or that these limits are not otherwise exceeded?
So we have no role in engaging with that. It's really what we share a common inspector general who does work on those issues, but we don't in any way, we don't have any governance of any kind over the CFPB. We're just a source to them.
Thank you. I appreciate that insight. In closing, Chair Powell, yesterday Senator Warren asked you what you would say to the 2 million people who may lose their jobs if the Fed keeps raising interest rates. Frankly, Senator Warren should be asking herself the same question when she voted and advocated for the Democrats' reckless spending packages that caused this inflation that we are seeing today, and is the reason the Fed has had to raise interest rates, in my view. Frankly, I would call on Senator Warren, the President, and the Democratic Party, for that matter, to apologize to the American people for causing this kitchen table crisis across the country. With that, Chairman, I yield back.
Now recognize the gentlewoman from Massachusetts.
Yeah, it's easy to understand a lot of what's being said, but like the second half of this,
Thank you, Chairman
they
Powell,
haven't
for
really
joining
been
us today
talking
for
about
your
monetary
testimony.
policy.
I'm going to focus
So
my
that's kind of been the
comments and
issue
my
here. They're
questions on the
talking
high
about a lot
costs
of
that
other
families
things right
in my
now.
district are seeing because of your interest rate hikes. Now, while the Fed has acknowledged that higher interest rates are not the primary driver for the slowdown in price increases, you continue to raise interest rates, risking not only millions of jobs, but also a recession. Based on projections from the Fed, approximately 2 million people will lose their jobs. So that's 2 million families who will struggle to put food on the table, keep a roof over their heads, and to make ends meet. But the economic hardship
Yeah, the
does
two
not
things that we sold
end
off
there.
on literally 10, 15
Chair, I
minutes
would like to
ago,
request
the lower
unanimous
long-term
consent
rates
to
or
a
higher
recent paper
long-term
by the
rates that
Federal
he said,
Reserve Bank of
and then what he was
Cleveland
saying about a higher terminal
titled
rate. So now we're back to that level after
Post-COVID
recovering. It's
Dynamics.
picking up. There's no news on this.
Without objection.
Chairman Powell, are you familiar with this publication, yes or no?
No, I'm not.
Okay. Well, let me give you some context. In this paper, the Fed's own economists predict that reaching the 2% inflation goal that you have set will be impossible without causing a recession and spiking the unemployment rate to 7.4%, which translates to millions of working people losing their jobs. Now, Chairman Powell, many economists agree with me when I say that engineering a recession to bring inflation under control is not the right strategy, especially at a time when we are seeing inflation cool in real time, independent of your rate hikes. So on behalf of the people of this country, to prevent a recession, yes or no, Chairman Powell, will you pause future interest rate hikes?
We're not seeking to have a recession, and we don't think we need to have a recession to get.
That's a crazy question.
Will you pause interest rate hikes, yes or no?
Someone
I
paid her
would
for
do
that.
yes or no on will I pause the interest rate hikes. Yeah, that's a serious question. And I can't tell you because I don't know all the facts. That's not a
Cutting my
problem.
time. It is a very serious question because it has a very serious implication.
Serious question.
The people who will bear the brunt of an economic recession are our most vulnerable. We know from past experiences that recessions have catastrophic and deeply inequitable consequences. In fact, while some will catch a cold, others will catch pneumonia. But you know that. An economic cold or pneumonia. In fact, in your opening statement, you said, "We will stay the course until the job is done." To conclude, we understand that our actions affect communities, families, and businesses across the country. Could you elaborate?
No, go back
what
to
is
pausing.
this effect to communities, families, and businesses?
Oh, she had it.
These interest rate hikes.
Don't move on.
Well, right now, we're trying to bring down inflation on behalf of all those families. I think high inflation is hurting, particularly working families all around the country, very badly. And as you know, if you're on a very limited budget and you don't have a lot of excess earnings, when prices start going up, you're in trouble right away. People, middle and upper middle class people have more resources. So we think it's absolutely critical for the working people of this country that we get inflation back under control. And also, while we're at it, we have a dual mandate.
Apologies, Mr. Chair, I'm just reclaiming my time here. Here's the thing. The most devastating impacts will be to our most vulnerable. Veterans to our most vulnerable. Veterans, the elderly, low-income workers, black and brown workers, those who have often ignored and been neglected in the name of what you refer to as appropriate monetary policy. And yet, you assert that you will stay the course. It's unconscionable, and our most vulnerable workers and families cannot afford to wait for you to realize the harm that you are doing. In my opinion, this sounds more like the assertions of a greedy corporation than someone who has a public mission on behalf of the people of this country. One more question with my remaining time here. Chairman Powell, another consequence of your interest rate hikes has been the increase of the average 30-year fixed mortgage rate to 6.6%, double of what it was 2 years ago. Do you see this widening inequity in the housing market as a problem? And what steps will you take to make housing more affordable? This is putting home ownership further and further out of reach for my constituents, new parents, millennials, people of color, contributing to inequities and the racial wealth gap. So what are your thoughts on that?
Well, our policies do affect.
Gentlelady's time has expired. Chairs can submit for the record or answer.
I'll briefly say that if I can, that interest rate policies affect interest-sensitive spending very directly. When we cut rates, they help housing. When we raise rates, you see the effect on housing. So
thank you.
The gentleman from South Carolina,
So
Mr.
close.
Timmons, is now recognized for 5 minutes.
That was a good question.
Thank you, Mr. Chairman, and thank you, Chair Powell, for being with us
That's
today.
a serious
We
question,
currently have
ma'am.
$32 trillion in debt. Our debt-to-GDP ratio is 120%, the highest it's ever been. And yes, we have a debt ceiling fight brewing for this summer. I would argue it's an opportunity to get our fiscal house in order. But sadly, there's no meaningful bipartisan effort to responsibly address our debt. Both sides have even preemptively started political attacks, alleging either side wants to cut Social Security and health care. But politics and talking points will not fix our problem. Our debt is the greatest national security threat. Social Security will be insolvent in 2033, and our healthcare system is fundamentally broken. We spend twice as much as the average country per person, and our obesity rate is 3 times the average. I want to be clear, though, I'm not advocating cuts to Social Security, but my Social Security will have to be different than my father's.
How did
and we
obesity
must
get
change
into
the
this?
incentive structures of our healthcare system.
Hold on.
Briefly, let's go over some history.
Okay.
Social Security was created in 1937. The retirement age then was 65, and average life expectancy was 60. Easy to see how that math works. In 1960, Congress raised the retirement age to 67. It has not been increased since then. That year, life expectancy was 69. That math still works due to a growing population, but it's getting narrower. I will throw in another few statistics for that year, 1960. 14% of Americans were obese, and our debt to GDP ratio was 53%. Let's fast forward to this year. Our retirement age is still 67, but our life expectancy is 77. That math clearly does not work, nor is the program functioning in the purpose for which it was designed. And shockingly, our obesity rate is 37%, and we spend $13,000 per person on health care compared to the global average of $6,000 per person and 13% obesity rate. Clearly, our healthcare system is failing. Our system focuses on managing sickness where we should be facilitating health and wellness. We will only meaningfully be able to address the debt ceiling by focusing on the biggest drivers of our debt. Responsible policymakers should be focused on saving Social Security by reforming it and transforming our healthcare system to facilitate a healthy citizenry capable of working and being contributing members of society.
Do it for the economy.
The American people deserve more than the political nonsense. 5 years ago, the number one issue I ran on was debt. It has been and continues to be our greatest national security risk. I hate to say it, but the last 4 years has gotten way worse. Congress has spent $7 trillion, of which $5 trillion was done mostly on party lines. The Democrat majority has not only spent money we don't have over the last 4 years, but their fiscal policy has caused out-of-control inflation, which caused you to raise interest rates. Last year, I asked you if you ever took into consideration the impact of interest rate increases on the cost of our debt service. You appropriately and adamantly said no. Our debt service cost the next 10 years will be over $10 trillion. I'm going to point out two things. Number one, that is more than all of our debt service since 1940 combined, the last 80 years. And while you did not take interest rate increases impact on our debt service into your decision-making, the best estimate is that those rate increases will increase our debt service cost by $2 trillion in the next 10 years. So basically, the $7 trillion that the Democrats spent in the last 4 years is going to cost us an additional $2 trillion. And that's not factoring in future rate increases as you continue to appropriately try to get inflation under control. As you can tell, this is a huge problem. The $7 trillion in unnecessary spending in the last 4 years has caused inflation. Some of my colleagues across the aisle disagree with that causal relationship. Clinton's Treasury Secretary and Obama's Director of National Economic Council, Larry Summers, wrote an op-ed before they spent the money and said it was going to cause inflation. And he has gone on the I was right tour for the last couple years. We need responsible policymakers to address our debt.
He hasn't asked one question.
Let's talk about what's not serious, and that's minting a $1 trillion coin. Many of my colleagues across the aisle have advocated for this.
Ask him if
Luckily,
he gonna pause.
both President Biden and Secretary Yellen have said that this is not a serious proposal, and they have no plans of considering it. Unfortunately, the Biden administration has a bit of a history of doing a 180 when the political winds blow. Most recently, he said he would veto the D.C. crime bill, and now he's adamantly supporting it and plans to sign it. So, Chair Powell, my only question of you is if Biden and Yellen send you a $1 trillion coin, will you accept it?
What I will say to that is that this only winds up one way, and that is with Congress raising the debt ceiling.
So you will not accept a $1 trillion coin and treat it as $1 trillion if it's sent to you?
I'll add there are no rabbits to be pulled out of hats here. This only ends with Congress.
I know you don't like yes or no's, but if you are sent a $1 trillion coin and asked to treat it as $1 trillion, will you treat it as $1 trillion?
That would be a rabbit coming out of a hat.
I'll take that as a no. Thank you. Mr. Chairman, I yield back.
You should send it to me.
Now recognize the gentlewoman from Michigan, Ms. Tlaib, for 5 minutes.
Thank you so much, Mr. Chairman. Thank you, Chair Powell, for being here. You have a lot of economic projections, various data.
I feel like you don't know anything about the
reports
economy.
that are coming out.
I don't know. I'm just by this
How
opening.
much, and you've studied inflation, right? I mean, obviously, it's your number one
I feel like
priority
you're going to ask
right
something
now.
hella random.
How much is inflation impacted by these three things? Corporate profiteering, egregious executive pay, and the use of stock buybacks.
So
So you just started sounding like my
I
girlfriend.
don't have
when my
numbers,
girlfriend
but I
was
would
gonna ask
say
me about something,
in
and
the
my
case of
girlfriend just started
executive
saying
pay,
keywords.
well, in the case of share repurchases,
She's like the economics
I can't
are
think of
inflating and
how
the
it would affect
gregarious
inflation. In the case of
profit to
executive pay,
earnings
that would
and
be very
P&L
small in
ratio
terms of,
on the PE.
of the broader economy.
How does that
In terms of
factor
profits,
into
though,
LeBron's legacy?
The way I think about that is profits are high. The places where profits are really high is places where there are shortages and supply chain issues. And as those things get better, as they are, you're going to see inflation come down and even prices come down, and you'll see corporate margins come down there. And that'll be part of how inflation comes down.
So does that corporate profiteering does impact inflation? You don't have any stats of percentage-wise how much of it?
Yeah.
Because you seem, I really paid attention to your testimony in the Senate hearing yesterday, and there was a lot of conversation about, my neighbors and residents' wages and so forth. They're finally starting to see a little bit more closer to possibly getting fair wages. It's not even far enough. But I don't know if the Fed is paying closer attention to monopolies, corporate profiteering, and executive egregious pay. All of it, even the stock buybacks, you're saying all of that aside, you're focused more on wages and increasing the interest rate than on those other
Our focus
major...
is really on price stability, not so much wages. Wages play into that because they're an important cost for business, but they're not. We're not trying to achieve a particular level of wages. We're trying to achieve 2% inflation.
Yeah, and I think it's really important, Chairman, what we saw during the pandemic is, the wealthy and the corporations continued to profit in large scale and still do buybacks and still do really egregious executive pay and benefits and so forth for those at the top. And then, of course, the communities and such were impacted by it. But what I hear consistently is folks thinking that's the reason. All of a sudden wages are skyrocketing, all this. But all I see is continuation, again, of those that are already getting a huge benefit, the folks at the top, the executives and so forth. My friend Glenn taught me this today, that the feds are actually sitting on, something in Dodd-Frank, Section 956. You all are sitting on the last 12 years on guidance regarding executive compensation and the high risks of it. Like around, there was some sort of proposal done, not implemented. Again, it's been 12 years. Why is that something that you're not concerned about regarding inflation?
Well,
like you guys are sitting, one, you're sitting on it, right? Why?
Well,
it's been 12 years. And then two, why is that you're saying that's not big deal? That's not going to impact the cost of products and so forth for our residents.
It's a multi-agency rule, and there have been repeated attempts to get 5 or 6 or 7, however many it is, agencies to agree. That's one thing.
On disclosures?
No, this is on, it's on policies to.
Yeah, which include disclosures and arrangements regarding executive pay and the risk of it.
There. Anyway, 956 is, you're right, we haven't been able to get agreement among the agencies. But more to the point, there boards long since, this is just for the big banks where we have this authority, long since board of directors are very focused on how executive compensation works and that it not reward, unnecessarily risky behavior and that kinds of things.
Yeah, but in Dodd-Frank, which Congress passed, there should, you're supposed to put something in place, and it's not in place. And look, I'm saying this because so many people in this chamber, and I feel like the feds are more obsessed with wages than they are in regards to the monopolies, the corporate profiteering. There hasn't been any, really, I don't think there is a laser focus on that, and it's really, because I think the feds and Congress can support fair wages and still combat inflation if you are fair in combating egregious executive pay, monopolies, and corporate profiteering.
We don't do competition policy, and we also don't, broadly speaking, regulate corporate wages.
But 956 would have addressed it. 956 addresses it. You should have it's 12 years.
The gentleman from South Carolina, Mr. Norman, is now recognized for 5 minutes.
Thank you, Mr. Powell. Appreciate you coming in. I don't have to tell you the fact that so goes the economy. I'm from a state that, from South Carolina, we have people moving in, the population's increasing. And I can tell you housing, not just single-family housing, is in trouble. People are finishing the what's in the pipeline. It's now affected multifamily apartments, the high rents that they did get with inflation. That's entirely caused, for the most part, by the policies of this administration with gas, buying it from other countries, with supply chain shortages. There's no reason to start a project when you can't get
I mean,
supplies.
there was another headline off of that. Powell said he has no level of wages. We aren't trying to achieve a particular level of wages. So I don't know. That could be what we're reacting to. I'm not too sure. But you've been getting these chicles all day.
Commercial projects that, again, the pipeline's filling up, but the pipeline, once it leaves, you're not going to have any. And I'm from a state that's with people moving
everything, even Google.
One of the
with
things
the big
that
candle.
you hear, I think Mr. Davidson mentioned, was regulations.
Tesla too.
Banks are complaining about being overregulated and the costs associated with it. CRA, I know when Brainerd left, it's in a state of flux. Who's determining that, and when will you have some guidelines out?
That'll be done by the whole Board of Governors when we vote on it, and also by the OCC and the FDIC.
Will they have any input from those who are having to pay the price of implementing CRA? Like, get any input from banks that are having to navigate?
So I know that throughout the multi-year process, there's been a tremendous amount of interaction with banks, tremendous amount, and bank lobby groups and also consumer groups. And then, but yeah, there's been a ton of input and, working with the industry to try to achieve these statutory goals efficiently. I won't say it's perfect, but there's certainly been a lot of interaction.
So they're getting input prior to implementing the requirements for CRA or the guidelines for CRA?
Yes, I think I'm pretty sure there's been quite a bit of interaction with the industry in terms of what to do and how to do it.
Okay. Now, I think you've stated that you don't feel it's the Federal Reserve's policy to get into implementing climate change.
We're not, and we shouldn't be climate policymakers. We do have a small role, focused role to play, principally with the larger banks, to make sure they understand and can manage their climate risks in the long run.
Should it be mandated?
Should what be mandated?
Climate change policies be mandated by the Federal Reserve?
I think, again, climate change is something that's going to affect businesses and people and regions and states and whole countries, and I think that's got to be a job for elected people by and large. I think what we're going to affect is we just want to make sure that banks understand and can manage the risks that they're running, and these are principally longer-term risks.
What's concerning to those of us in the business community who have to borrow for banks, the Federal Reserve is conducting a pilot climate scenario analysis that's being mandated, not asked, it's being mandated for the six largest banks to participate in. That seems to me like a pretty good, when you have to do a scenario and mandate that they do this, is that not the Federal Reserve getting directly involved in mandating?
I think the banks actually want this.
Breaking that other
they
level.
want
you
these
haven't
six
hit this
big
low
banks. They have
since
to face this
the if
globally,
comment.
and what they want
This
is
is to
uniform
the low
approaches.
of Powell saying if.
Guidance on how to have one set of rules. They're already running, the big six banks that we're talking to, they're already running climate scenarios all the time, multiple climate scenarios.
Most of the banks are well capitalized now. That could change. And this is just another expense that is out there.
You're below 39.80 now.
CFPB, the
39.74, the
history,
low of the day.
I think you said it was
That's the next level.
12%. It cannot go above 12% ratio. Has that, that does not seem logical to me. Has it ever been below the 12% from your perspective?
That's someone here quoted the law, and that rang a bell for me. So that is what the law says. Have they been below? I'd have to go back. I'm happy to provide. It's all
if you could, because it seems to me like that's
you're dumping pretty
if you've
hard
got
here.
that cap, businesses couldn't operate like
The dollar,
that.
it was up here
because
at
it
the
would be
same
no
level, but
incentive
then
to
bonds are
reduce the
selling
price
off.
as long as it's automated.
That's
Thank you.
the way the law is set up.
Right. Thank you for being here.
Thank you.
The gentlewoman from Texas, Ms. Garcia, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Chairman Powell, for being with us today. The end is in sight. I would like to begin by highlighting an issue that has been a concern for the Congressional Independent Caucus and others. I know that the Chairman has suggested that we're going to weave in the diversity and inclusion issues throughout our hearings. So here goes my concern. There has never been a Latino Federal Reserve president. And further, only about 5% of the Federal Reserve's overall workforce identifies as Hispanic or Latino. As we know, over the past year or so, there have been several presidential vacancies at the Federal Reserve banks, and there has still been consistent failure to appoint a Latino candidate. Chair Powell, are you aware of this trend, and do you agree that it's a problem that our diversity and inclusion numbers are in the Federal Reserve Board are not reflective of the Latino population?
Yes, it's something we've been focusing on.
All right, and can we get a commitment from you that you'll work on the workforce issues internally?
Yes.
Well, thank you so much. And I'd like to now follow up a little bit on some of the questions from Representative Norman, because I too have a concern about housing costs, particularly as it relates to equity and the negative impact on minority communities. I think you said in your paper that activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. As he mentioned, the rates are higher, not only impacting single-family housing, but multifamily housing, and it's also becoming even more difficult for people in my district, which is 77% Latino, to be able to buy their first home buyer, the workforce, entry-level kind of housing. As financing homes get harder, as mortgage to find and mortgage rates rise, the population of home buyers is skewing towards older, wealthier, and whiter communities. In many cases, in our suburbs, equity firms are buying out the housing stock. Chair Powell, can you please speak about the relationship between Federal Reserve interest rate hikes and housing inequity, and what needs to change here?
Well, what needs to change is we need to get inflation under control so that interest rates can come back down. In the meantime, they're high because inflation is hurting all of your constituents, not just the housing sector, and all of everybody's constituents. And it's our job under the law to restore price stability and also to keep maximum employment.
Is there anything else that Congress can be doing in this respect?
That would be up to Congress, but there are lots of ways in which Congress can support people in various ways. But that's really in your hands.
Right. Now I want to move on into the numbers that you mentioned again in your remarks at page 2. You mentioned that of course, we all know there's been a record historic unemployment rate is down now to 3.4%, the lowest, I believe, in history, and thank you, Mr. President, for that. But you also mentioned that there's 1.9 job openings for each unemployed individual. I wondered if you could tell me how you define unemployed individual. What does the unemployed individual profile look like?
So that has a very specific meaning. It's someone who is not working but is actively seeking a job. So for example, if you take 6 months off and stop looking for a job, you're no longer unemployed. So that means there's a group of people who are kind of around the edges of the labor force who don't count as unemployed, and those people are marginally attached to the labor force, that kind of thing. But to be actually unemployed, you've got to be looking actively for work in the statistics.
Right, so it does not include people who are perhaps disabled and cannot find accommodations in the workplace to be able to get a job.
Unless they're looking for it. The test is whether you're actively looking, I think, in the last 4
Actively looking regardless of, age,
That's right.
whether or not they're...
It's not a value judgment, it's the way we assess unemployment. We look at the other groups too, but actual unemployment is...
How do you factor in the people that actually are on unemployment insurance?
Sorry?
How do you factor in the people who are on unemployment insurance?
Well, they're unemployed. They've got to be, by definition, we count them as unemployed, or they wouldn't qualify under the state requirements.
All right. Well, I just want to make sure that we clearly understand that there's children, there's people that are older, people that are disabled, people that can't find daycare. There's so many other reasons why someone is unemployed.
Yes.
All right, thank you. I yield back.
Gentleman from Wisconsin, Mr. Stile, the chair of the House Administration Committee, is recognized for 5 minutes.
Okay, this might be
Chairman
our last
Powell,
one.
thank you for being here with us today. Your
cut it off
testimony
after.
today has been insightful as we look to tackle inflation, the impact that it's having on families across the United States right now. I want to go back to a comment that was quoted to you as regards to a question from Senator Kennedy yesterday regarding the impact that fiscal policy is having as it relates to inflation. And the quote that was attributed to you was that it wasn't a big factor. As we look at kind of a whole host of policies here on Capitol Hill, from reckless spending that we saw in the previous Congress, a lack of what we just discussed, individuals who are outside the labor market, how do we get these folks back into the labor market, whether or not we have policies that are discouraging folks to come back into work, as we look at high energy costs and opportunity to drive energy prices lower by unleashing American energy. How do you factor in the fiscal policies, or how should policymakers factor in the fiscal policies and their impact that's also having on inflation? Not looking for your advice on the fiscal policies, because I know you want to stay out of that, but how should lawmakers be looking at the fiscal policy and its impact on inflation?
So let's take energy, for example. So remember, inflation is the change in prices. It's not the level, as you well know. So energy prices have been coming down, right? They're still high, but they've been coming down, and they're contributing negatively to headline inflation. So when I say it's not contributing to inflation, that's what I mean. In addition, if you look at aggregate spending, it peaked, and then it's been coming down. So the fiscal impulse is actually negative at this point. It's no longer most of the inflation that we now have, something like 2/3 of the contribution of inflation in core PCE inflation comes from the services sector. And that isn't really about fiscal policy. Fiscal policy was important at the very beginning, so was monetary policy, by the way, but now it's more about just inflation is out there, and you have to bring it down. The record is it doesn't come down by itself unless it's driven by, transitory factors. For example, in the goods sector, the supply chains have been getting better, and as that's happened, goods inflation has come way down, and sometimes it's negative now. I hope that's helpful.
Yeah, no, thank you. And so to take that one step further, we're waiting on the president's budget. It's over a month late, but we're anticipating receiving that in the near term. And as we look at interest payments on the debt and the cash flow implications that has, not asking for what you're going to do at the next board meeting for obvious reasons, but as you are in those deliberations to future board meetings and potential rate increases, how does the impact of interest on the debt factor into the calculus of you and your colleagues?
So we don't look at that. We're not, if we started to change our monetary policy because we were concerned about the level of debt payments and things like that, that's not something that the United States needs to do, and it's not something we do.
Why would it be something the United States doesn't need to do? Could you elaborate on that?
Yeah, we're going to do our job. Congress has given us the job: maximum employment, price stability, regulate the banks, manage the payment system to some extent. We'll do those jobs. We don't have to worry about the United States budget. That is not our job. And it isn't that the debt today is unsustainable. It's that the path is unsustainable. So we can service our debts.
0 days are
It's just that we're on an unsustainable path, meaning that the debt is growing faster than the economy. So we would never consider. We will never look. If a central bank has to avoid taking actions because it's concerned about the budget, that's called fiscal dominance, and that's a thing you don't see among advanced economies, and it would be something we think we're a long way from that.
Thanks for your feedback on that point. The CBO just released their report showing potential interest payments on the debt accelerating dramatically over the next decade, showing it would be 14% of our fiscal spend. To compare that, right, national defense would be 13, Social Security is also 14, so it's in that level. That's a policymaker issue, but your insights are helpful. I know I only have a few seconds left, and a handful of my colleagues have commented on the ongoing review of bank capital standards. I just want to echo those concerns about what the impact would be of a significant capital level increase. Could you just comment briefly about how you quantify the cost of higher capital in the supposed benefits and how you balance out that risk and reward?
So it's always a balance. It's exactly as you say. We know that the capital increases that I supported back in 12, 13, 14, 15, 16 earlier in my time at the Fed, they made the banks stronger and they made them more resilient, and you really want that. You want a banking system that can stand up and keep doing its job in times of crisis. So, but the exact balance between that and the availability of capital and the cost of capital is always going to be a matter of judgment.
Thank you very much. I yield back.
The gentlewoman from Georgia, Ms. Williams, is now recognized for 5 minutes.
Thank you, Mr. Chairman. As the member of Congress representing Atlanta, the city with the highest racial wealth gap in the country, I'm focused on creating an economy of inclusion, an economy that works for everyone and brings the most marginalized into our economy. Americans and Atlantans flourish when the economy works for everyone. The Federal Reserve has a mandate of maximum employment that is measured by analyzing various data points of economic conditions. In 2020, the Federal Reserve updated its approach to fulfilling and measuring this mandate to include job growth that was broad-based and inclusive. Chairman Powell, do you agree that broad-based and inclusive growth means job growth that helps reduce racial, employment, unemployment, and wage disparities?
I think it means what it says. We don't target any particular, we can't really target a particular racial or ethnic group with that, but we like to think that our decisions are informed by an understanding of diverse groups across the economy.
Well, Chairman Powell, could you share examples of how the Fed is including broad-based and inclusive job growth in the maximum employment mandate?
Sure, I'd be glad to. So one thing we do is we always, it's always part of the data that we look at each meeting. We always talk about it. We always mention it. Different unemployment rates and labor force participation rates and wage rates and things like that by racial, ethnic, gender groups and that kind of thing. That's always in the data that we look at and talk about. That's the first thing. So it informs our pursuit of maximum employment. We're trying to take a broader and more inclusive understanding of what that statutory goal means.
Thank you. 2 weeks ago, the Federal Trade Commission released data indicating that Georgians reported the most fraud and scam claims of any other state in 2022, amounting to millions of stolen money. The Federal Reserve's website has resources to help consumers protect themselves from scams where criminals leverage the Federal Reserve's name, including emails claiming potential victims are eligible for lottery winnings, robocalls threatening arrest in exchange for money, and other phishing communications. Chairman Powell, how does the Federal Reserve measure whether its counter-fraud communications are reaching the most vulnerable households and communities, especially those that might not be following the Federal Reserve press releases or your website, or have limited access to broadband?
So we do, when those kind of scams happen, particularly when they involve us, we go on social media to try to reach people and tell them that if they're contacted by someone pretending to be
That's not me who
Federal
DM'd
Reserve
you.
person, that's not. So we
Just
do that.
report
We
the
also
fake Fed.
work with our
Don't fall
Inspector
for
General
it.
who
Thanks.
works with law enforcement to make sure that law enforcement's involved. So we're aware of these scams. You know, I think you're talking about the ones that involve people pretending to be a Federal Reserve person and get in touch with me and I'll, you know, we'll send you some money. And so we do what we can to reach out to the public on that.
So that is that after the fact, but what happens before so that the general public is aware that this is happening? For those people who are not on social media or tracking is there another way to get this information out to the general public?
We do what we can. You know, we're not an institution that deals with the general public very much. You know, we deal with banks, and of course our rate hikes and rate cuts, our monetary policy affects all Americans. But I think when something like that happens, it's a broad program. It's a bunch of people who are perpetuating a fraud on many people, and we try to get out there quickly and try to reach people, and again also alert law enforcement.
Thank you, Chairman. And Chairman McHenry, I yield back the balance of my time.
That is very kind and gracious of you. The first of the day. We need to commend that for the record. With that, we'll recognize the gentleman from Pennsylvania, Mr. Muser, for 5 minutes.
Thank you very much, Chairman McHenry. Thank you, Chairman Powell, for being with us. Chairman, is the Fed's commitment regarding ESG not to force investment banks to renege on their fiduciary responsibilities?
We don't actually have policies in effect in that space. That's not an assignment that we have.
You saw some issuances by heads of some investment banks, not to mention any names, that felt that was the case.
That the Fed was asking them to, you know, we don't.
SEC, Fed, you stated a couple of minutes ago that you feel that some sort of ESG, you stated that banks want it. And
I'm telling you, no, that's different, completely different. It's regulated financial institutions that we regulate and supervise. They're subject to, particularly the big ones, are subject
so
to
the Fed,
climate change.
You agree that
climate
the Fed
change issues all over the country.
won't ask banks to renege on their fiduciary responsibilities. The Fed won't do that.
We don't regulate the investment banks. The SEC does.
Okay, so the answer is no.
What's the question again?
I'll move on. Earlier, some of my colleagues and Chairman McHenry questioned the holistic review of the capital bank holdings. This holistic review, which no one has seen, according to my sources, but there are published reports that it will call for more capital to be held by banks. I understand the deferral to Vice Chair Barr, but do you have any thing that you could add that would warrant a need for large banks' capital increase?
So there isn't a proposal to evaluate or talk about yet. Vice Chair Barr has indicated he was going to take a look. He said he thinks capital is strong, and the question really is it strong enough? And I know he's been working, and there'll be a process when he does arrive at conclusions. He has no authority to enact something himself. It has to go through the Board of Governors, also through the FDIC and the OCC.
Okay, this has nothing to do with the
transparent process.
the QT initiative, the tightening of the money supply. They're not related at all?
No, I would say not.
Are you comfortable with the QT reductions which have taken place?
Yes, the balance sheet is, we have the balance sheet moving down at a healthy clip, and it seems to be going pretty well.
Okay,
Very
so
well.
the Biden administration's fiscal and energy policy has caused trillions in deficit spending, as you well know, very, very excessive trillions. Meanwhile, energy costs for the average American have, from heating oils to gasoline, have increased by over 40%, and businesses, of course, in just over the last 2 years. So high energy obviously affects the cost for manufacturing, wages, general cost of living in almost every aspect of society. Would not such fiscal and energy policy work of the Biden administration working hand in hand with initiatives such as QT and initiatives of the Fed be far more effective than the Fed fighting inflation on your own?
Well, I mean, we are the agency that has the responsibility to restore price stability, and we just have to do it. That's the task we've been given under the law. It's great if Congress helps. It's great if the administration helps, but we have to deliver it, and we will. That's our responsibility, which we fully accept.
There's only like 10 minutes
Not
left
risking
of this anyway.
stagflation if the fiscal policy and monetary policy are working against each other?
Again, we don't comment on fiscal policy. That's for elected people, and we have a job, maximum employment and price stability. We use our tools. We try to stay in our lane, stick to our knitting.
It's just the fear of a number of people that we're going to have high interest rates and higher than 2% inflation if there's not that level of fiscal and monetary cooperation.
Again, fiscal
i.e.
policy does what
stagflation.
it's going to do. We take that as exogenous. That's the fiscal policy will be what you and your colleagues do with, and that comes into the economy, and we see it, and we don't have a view. We don't try to comment on the decisions that you make, and we use our tools to restore price stability no matter what happens outside of our building.
Sure. Okay. Mr. Chairman, I'll yield back. Thank you.
Gentleman yields back. We now recognize the ranking member of the Oversight Subcommittee, Mr. Green of Texas, for 5 minutes.
Thank you, Mr. Chairman. Thank you, Mr. Powell, for being with us today. I greatly appreciate your work, but I would like to take just a few moments to talk about how our legislative bodies have legitimized systemic racism. It's been done by having a Fed that has a responsibility to produce maximum employment, knowing that the 2-to-1 black-white wage gap exists traditionally, and also knowing that traditional actions and methodologies will not change that. but yet we won't give you the authority to make recommendations or to take actions that would directly target that. It's not your fault. It's the legislative body's fault. We perpetuate systemic racism in your mandate of maximum employment. We also perpetuate it in lending because we know that invidious discrimination exists in lending. We know it exists. And there are laws that will prevent and punish persons who cheat banks. You will be prosecuted and you will be fined criminally if you cheat a bank. No such law exists if you cheat a customer. And we know that black people who are more qualified than whites will get less money when they get a loan and pay a higher interest rate. These are all things that are the case. They're true. So legislative bodies continue to legitimize systemic racism. And the bodies have become so bold now, so many of the members, they're so bold now as to say they're sick and tired of hearing about this. They don't want a discussion about racism and systemic discrimination. They believe that all is well as long as all is well in the white world. But many, they won't say it that way, Mr. Powell. But that's the way their actions would lead one to conclude they have positioned themselves. Many of these people are my friends, people that I associate with, talk to regularly. But
I don't know if you like it. Press
there comes a
secretary
time
says
when
there
you
is
just
no
have to be
precursor for data is not showing a
Systemic
precursor to a
racism
recession.
can be,
White House is making comments on the economy.
it can be dealt with.
Economic indicators are
We know
not
how
consistent
to.
with recession, says White House.
But we don't have the will to do it. So I don't fault you. I don't fault you.
ASML with the cheek lay.
Not one scintilla of blame would I
A scintilla.
cast your way.
I don't even know what a scintilla
It's
is.
the legislative body. It's the people who sit on this committee who won't allow laws to be passed, making it a crime to deny a person a loan who is qualified to get that loan. People on this committee
Tesla's about to go
who
through
will say
182.
they don't want to hear anymore and encourage persons who are professionals, experts, encourage them to push back against talk about invidious discrimination. Systemic racism emanates from the legislative body. And you, sir, are in a very awkward position because I genuinely believe that you'd like to do
Sounded
something
so
about
ominous. He's
But
like,
you
you
can't.
piece of shit. Must be awkward
it.
being a
Creates
piece
a
of
sad
shit.
state of affairs.
Huh.
I thank you for the time, Mr.
Yeah.
Chairman.
Your ads
And
are
I
coming
yield
up.
back.
4 minutes.
Gentleman's time has expired and yields back. The gentleman from Wisconsin, Mr. Fitzgerald, is recognized for 5 minutes.
Oh, dude, I feel
Chairman,
so
thanks
bad
for
Powell
being here today. Probably get right under the wire here.
Bro, Powell has the hardest
I just
job
had
in the
one,
world,
and some of my
easily.
colleagues have touched on this today again.
Now, who's this jolly-ass mother
There's
effer
certainly,
right
I think we're
afterwards?
well aware, I'm well aware that there's a dynamic back in the district
With his
and across
green-ass
this
tie,
nation.
he seems all
There's
excited.
a certain segment of adults, 25 to 35-year-olds, many of them dual income, no kids, and they are completely froze out of the housing market right now, either because the cost of a home at a new subdivision in any municipality is $500,000 or more. And as a result of that, it's not only by actions of the Fed, I think, on the interest rates, but certainly the other thing I wanted to bring up, because the balance sheet at the Fed has gone from $4 trillion to $9
This is ending after this.
post-pandemic.
It has to be ending at 1 p.m.
could the
I'm ending it
Fed,
at 1 p.m.
by
I
no
don't
longer
care.
buying mortgage-backed securities, in a smaller universe of the private sector buyers who demand a higher rate of return, right? Is there not another kind of built-in trigger there that mortgage rates are going to continue to go higher, unrelated to what the Fed does? Because I think the concern is that between the dynamics of no new subdivisions, 25 to 35-year-olds unable to get a loan, and then interest rates continuing to climb, all of these factors are we're going to lose a generation of adults here that are never going to get home ownership. They're never going to benefit, which we all know is the big wealth builder for any family. So I'm just, if there's anything I take away from what we heard today in the questions asked, I hope that that is something that the Fed is in tune to and is looking at closely.
One thing is that
Powell's hand.
there's a challenge with supply nationally, and that's zoning, it's people, it's materials, and so the housing stock is constrained to some extent by just harder to find zoning anymore because things are so built up in so many places, and those are not things that we can control. In terms of our ownership of mortgage-backed securities, what happens with them is they mature, or they're repaid or prepaid, and they run off on their own. That's a passive sort of way to shrink the balance sheet. And of course, they don't run off very quickly when rates are this high because people are not refinancing their mortgages because they have much lower mortgage rates. So, there's no evidence at this point that, that the market's having a hard time absorbing, the supply of mortgages because the supply of new mortgages is very low. It's probably right, it has to be right, that when we're no longer buying mortgages, and we're not buying mortgages now, and I hope we don't have to buy any more mortgage-backed, we don't buy individual, we buy mortgage-backed securities. I hope we're not doing that anytime soon. We only do that in really severe situations. That the fixed income markets are gigantic, and there's a lot of buyers out there.
Oh shit, 10-year auction is about to hit?
There'll be buyers, and I think that.
So that'll be your next event on the day.
It might
10-year
not
auction,
that it wouldn't have some upward pressure
3.958 is the
on rates for us
when
not to
issued
be a buyer
yield.
anymore. But we weren't a buyer for a very long time. We thought we'd never go back in after the global financial crisis, and we kind of had to after the pandemic financial crisis just to keep the markets working, and now we've stopped again.
Good. Thank you very much, Chair, and I yield back.
Gentleman yields back. Noteworthy. I want to thank, in particular, our members, Mr. Fitzgerald and Ms. Williams, for their additional minutes back to the Fed chair. In a rate environment like this, time is money, and that's much more valuable these days. I'd like to thank the chair for his testimony. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witness to the chair, which will be forwarded to the witness for his response. I ask you, Chair Powell, to please respond as promptly as you're able.
All right, there it is. It's over, Chad. It's over. We made it. Sadly, I hate to break it to you. We watched that there for about 3.5 hours, I believe, give or take, or no, I think 3 hours on the dot. And don't get mad at me. Please don't get mad at me. I mean, honestly, I think now that you have to deal with ads, I don't think you get that mad because you're more, you focus your anger on the ads, which is awesome. But the biggest thing that Powell said today was the word if. So right here, this little pop, that was it. I mean, there was a couple of comments here. One of them was related to low or longer end rates becoming higher. 10-year bond auction, 9-year, 11-month notes, 3.985 versus, I think, 3.96 when issued. Yikes. So bad bond auction. Rates are higher on the 10-year. I think that's your first weak bond auction here in a couple of weeks, actually. So watch now if the 10-year goes above 4. I think that's what we're reacting to that now. Yeah, 3.985 versus 3.958. So rates went up like, what, 30? 0.3 or 0.03, which is pretty decent. That's a weak 10-year auction. You haven't had that one there. That should help the yield curve, though, at least the 2 years up right now. So that'll help slow down the inversion, but that's definitely not I mean, it just goes in line here with the whole logic of higher rates. But Powell, like I was saying with Powell, he said a couple of things. You're reacting to the bond auction right now. You see the dollars trying to break out. Then the bonds just hit a new low. The bonds just went red too. They were up on the day. But here's the thing. Powell said if. So when Powell was reiterating his statement that he read yesterday, he took the time to pause and say if the data came in, the market reacted. Even Nick Timiraos of Wall Street Journal, he reacted to it as well. And people kind of saw Powell is kind of toning it down a little bit, but that was the only other big change that we got. So we waited 3 hours for that. People didn't like the comment on higher, longer-term rates. And then what was this one? I think this was Powell saying that terminal rates will be higher again. He reiterated that comment from yesterday, and you saw a decline. So sadly, I think we're probably going to calm down here. I think today will probably be either either drop or cuck. I don't know how I feel about the upside right now today, but essentially we've been hanging out at this level. 39.80 is a key. I mean, right now I think we just went below the 50-day moving average. That's at 3.994. So you were just there not too long ago, like right around here, but we have been selling off and then just had the reaction to the 10-year bond auction right there. So, yeah. So, it's there. It's there. But good morning, Chad. How you feeling? Is it pointing? Right now, everything's pointing towards 50. I mean, even yesterday, you had the used car index go up, the price of the Manheim wholesale prices. Just everything. Even today, we did have strong data, believe it or not. You know, half of this reaction today was based off of another strong jobs opening report. Even though it came down lower than last month, it's still 10.5 million. But we're going to see here. But most inflation pressures are pointing upwards, and that's even what Powell said yesterday. He didn't really talk about it too much today, but it seems like most of the data, or there was one period today he talked about it. He was explaining the jobs report. He was explaining how CPI came in higher, just everything. So it really all depends on these next couple of data sets. So Friday, Tuesday, and then next Wednesday after that, and then the Fed blackout period begins on Saturday. Yeah, CPI is good. Well, even jobs tomorrow, I mean, we did have a decent reaction, but pretty much the CPI will be the key, but depending on how that jobs comes in, people are going to react. People are going to anticipate. And sadly, even though Powell said the word if and reiterated his stance, believe it or not, Fed futures, the odds of 50 basis points have held up today. So that's pretty much about it. I mean, China, overseas, there wasn't any other news. You had Bank of Canada, and the last 3 hours were defined by this. Non-farms is on Friday, not tomorrow. Tomorrow we get initial jobless claims, continuing claims, challenger job cuts, and then a household change in net worth. And then today also, 2 p.m. Eastern, we're going to be getting the Fed Beige Book. So that could actually have some updates in there. And then non-farms are on Friday. Bank of Canada paused rates. We rip on 50. I don't think so. I think we would react negatively to 50 basis points, and then shortly after, I think we would kind of find a level and then go from there. Just like we've talked about at the last Fed meeting, most of the Fed meetings end up positive, believe it or not, even though you expect volatility. So I wouldn't be surprised, but in a weird way, even though it's only like 3 days away, or I guess 2 weeks away, I just think everything's just too early to discuss. I mean, right now, you know, our next, 2 to 5% in the market is going to be dictated by non-farms and CPI just over the next couple of days. And I think that's going to move things. That'll get people excited or not. And, I mean, Powell, that comment may have helped today, but as of now, you've spent 24 hours with people pondering 50 basis points, and now people are still considering it, and people are still considering 6%. So it's actually pretty wild. So we're going to find out, but making a judgment too early, I would caution you all to just take this one data set at a time and just understand every data set is going to fuel a reaction, and then one set of data is going to get people thinking about the next set of data and trying to price that ahead. So, yalla. 75 basis point in a statement on pausing. Shit. So that's the crazy part. I was thinking about this last night. You got to realize if they do 50 basis points somehow, let's say the data, let's say jobs report's bad, CPI's bad, and then they come in, they do 50, right? Here's the problem, and this is where I don't think a lot of people, I don't know. I feel like kind of it's like willful ignorance when it's all said and done. But the reality is, if they do 50 basis points at this meeting for March, they would have already been. That means we would have already had 75 basis points from the beginning of the year, and that is very odd. Why? Because October, November, December, even January, everybody was predicting 75 basis points of rate hikes for the whole entire year. So do you see what I'm saying? That's where it gets weird because nobody was pricing that in. Even if the Fed futures have now moved, I mean, the market's a lot higher, but that truly is that's like a 180 difference from what anybody was expecting October, November, December, January. So up in those 4 months, nobody was, myself included, we were all saying, boom, 75 basis points the whole year, and then we're done. So if they do 50 right now at the next meeting, it's gonna be an interesting dynamic because you could argue a pause is close, but then again, I mean, it's all fueled based off of this recent data. China gas demand to expand by 5% this year, says CNPC. So you're dropping here now. Watch out. I mean, these are the lower level. Damn, you're below 39.80 now. You've broken the 39.80. I didn't realize that. That was just in the last minute. The low of the day is 39.73. The next level is 39.74. And then once you go below there, 39.58, 39.60, that is the next level. And we still have, like 3 hours of time? We got a lot of time. Spent half the day listening to Powell. Not too bad. Yes, Volcker had to do 100 basis points 7 times when faced with stubborn inflation. Indeed, but I give my, I have my trap card to Volcker. I just don't think if you were there, maybe you could corroborate. But last time when Volcker was raising 100 basis points at a time, the stock market went up. So that's we have a very big modern difference now, and we're within 36 months of inflation. So I think we're just at a different stage now where, the market is still sensitive. And, I mean, the economy is booming. I think with Volcker, things were a little bit different. Yeah, Volcker overrated. Pay attention to Arthur Burns. I agree 1,000,000%. I think Volcker just has the hype name just because he did it. He did get rates really high, but I don't think he was dealing with the same economic climate in the sense that he just, Volcker kind of had an easy job. They rioted with Volcker and people didn't like it, but at the end of the day, Volcker was, the market did not react how you would have expected. It's very, very different. Let me see. Do I have that chart? Oh, yeah. Look at that. That's Fed futures on Valentine's Day. That's insane. And then we're coming down. I want to show you the 36 months. Where are we? Yes. So this is where we are. And this is, we're coming down now. All right, watch out here, though. Watch if we start flushing the level. It's going to get key here, and I'll get back to that pretty picture here in a second. That's a new low on the day now, almost. It's at least a new low that's consistent. Any other low but low here was pushback, or it was a wick. Can you elaborate on how is his job easier? Because he took over. Pretty much Volcker came in on the final act. So, like, right here, this is, like, you could even see the comeback here. But it was, like, 1980s where Volcker started doing his thing. So, at that point, he was already, there was less inflation ahead of him or behind him than ahead of him. And then, like I'm saying here, the stock market was completely different. And somebody in the chat even mentioned there, and I think it's a great point, you didn't have globalization the same way. But, like, the stock market rocketed off of Volcker. And that's where I think it's just different now because we're so early in this inflation battle that, Powell is still dealing with the monster from the get-go. And now you have to deal with the markets responding, real estate, everything else there. But then, the stock market loved it versus now you see it. Powell says the word if, and the market shoots up 1/3%. Not to mention just, where we've been at the last couple of weeks, just dealing with all of it and all of the policy changes there, and the fact that we were already at 0 interest rates for a very long time. So let's see if that flushes here. In the meantime, here's what I'm talking about. So this was, I took this in January. So, I mean, now it's been about 3 more months, give or take. But this is the whole point, is that inflation, I mean, we're still early if you wanted to compare this to Volcker. So that's why I'm saying, we talked about this a little bit towards the beginning of the year. I just, in a weird way, although the 1970s and 1980s are important, and I do believe we are still paralleling that, I don't think Volcker is the right comparison. And I just don't think that, I just think we're so early in a weird way, unless Powell stays around for another 10 years. It's really, the Volcker is going to be whoever replaces Powell. In a weird way, Powell is Arthur Burns right now, and Arthur Burns did raise rates as well too, but he had a little bit more of a choppier approach. Arthur Burns had the political pressure. Indeed, yeah. And you could even argue, like, the political pressure of Nixon was very comparable to Biden, in the sense both of them kind of, they threw out a lot of social policies. They were trying to spur votes. They didn't really care about the spending and the money. And it was more so along the lines of, let's do whatever we can. Let's get good reasons for people to vote for us. Let's go. And boom, you even had war. You had Vietnam. We have Ukraine. You had, again, a lot of even real estate programs came out in the 70s. A lot of people don't realize that. I think the FHA with either 50s or 70s. Comparing to Nixon, yeah, I kind of, in some ways, I think in terms of, I'm more so making the comparison to what the Fed president at the time was dealing with versus the president himself, which I think is more important. Spirit Air CEO reports on December meltdown is weeks away. Or Southwest CEO Bob Jordan speaks at Aero Club in Washington, D.C. Yeah, and then now, bro, we're getting back to the, you filled the gap from, what's his name, Bostic. You're getting into the Bostic levels. So the first Bostic candle was 395.50. You're at 39.27, 397.27. You're going down here again. One more time. NASDAQ is only down 0.04. SPY is down 0.23, and then Dow Jones is down a half. Why is the PayPal on the high? Wheat, I would wait until oil starts coming back up. So again, even with wheat, we might have to wait a little bit, but I think second half of inflation, wheat and commodities will come back unless we really see what's going on with demand destruction and whatnot. Crazy market, crazy. PayPal's on the high. They're up 1.4. Yeah, weak bond auction is where we started really selling from. And we were already kind of giving it up. Again, Powell talking about long-term rates, not being low. And then his other comment here towards terminal, we reacted negatively. There was force. I mean, people like the if comment, but that's about it. Yeah, I'm still holding Tesla. It's murking me. Yeah, Tesla down 1,500 on it now, 14 off 100 shares. I forgot. Child support is expensive, man. Meta Green. I'm surprised Meta didn't get more off of the job cuts. A couple thousand more jobs. $102 counterparties take 2.1 trillion Fed reverse repo. Now, Abivi sold off. A lot of healthcare names have been selling off. But I just noticed they're there. Yeah, I added to the NVIDIA short. We added to that earlier in the day. I think around this price, it was like $238.13, I believe. I want McDonald's, but it kept dropping, man. I should have went for my revenge. I got Nordstrom's on the earnings, and I thought they were going to do good even today. They had a nice upgrade, and then I liked Macy's and the reaction, but they're kind of getting clobbered. And then you also have the back end Ryan Cohen hype news from a couple weeks ago. Domino's, and then SPY flush in now, so get ready. Even NVIDIA's going down. I'd watch Apple, Google, Amazon. Those have held up there. So see. I think MDT's interesting. I know they got clapped the other day, but it is a name I like. You technically have not hit a low yet. 39.74 is a level. The latest low or earlier was straight up within 30 minutes. This was the low on the data. That was 39.73.28 on the wick. Damn it, Chad. I don't know. I want to help you out right now, but we do have a problem. I need to go to the bathroom. Yeah, I'm sorry. So I don't know. Good luck with it. Either way, let's just get the market out of the system. Dollar might go up. Bonds at a low. Follow me on Instagram at The Trading Fraternity. I love you. I hope you know you're blessed. Welcome to another wonderful, amazing day, and get ready for more data on the way. God bless you, Chad. God bless you. God bless you. I'll be right back.
This is Bloomberg Markets. I'm Kriti Gupta. I want to focus now on a few individual stock movers in the session. Adidas shares higher after an upbeat conference call by its CEO, helping to reverse some of the earlier losses earlier in the session caused by its full year results. The company trying to offset some of the huge financial hit from the collapse of the alliance with rapper Ye, formerly known as Kanye West. Joining us now to discuss Adidas' fourth quarter results is Bloomberg Intelligence's senior analyst Poonam Goyal. Poonam, in all of the numbers, there's one that stood out to me: $1.3 billion of inventory. What does Adidas do with that?
It has to get rid of it. I mean, that's the only way, and that's why you're seeing margins get crushed this year, and really a strategy to reset it in 2024. There's really, they can repurpose some of it. How they will do that is still a big question mark, hence the 500 million euro write-down possibly this year. But it's a lot of inventory. The Kanye West business did over $1 billion in sales and was a significant piece of their profit margin. So they have to find another way to make up for that business and move forward.
And the CEO specifically said, be ready for markdowns. You're going to start to see a lot of the markdowns, which I think was a theme, by the way, in retailers broadly in 2022, continue into 2023 and perhaps accelerate for Adidas as well. But Poonam, does this then disincentivize partnerships with creators like Kanye West?
I don't think it disincentivizes partnerships. I think this is a unique situation where, the line is clearly being discontinued for a reason that they had. Now, how they get rid of that inventory, the promotions, is going to be very different than others clearing inventory, because there will be pretty drastic discounts to get rid of that, which will affect their peers as well. Because if you just think about retail in general, if you have Adidas marking down the Ye line by 60, 70%, let's say at one point, you're not going to.
Yeah, man. Nah, Adidas. Sad day. It's actually sad months ago. Isn't it crazy how fast time goes by? Because, that was 6 months ago almost, it feels like. And then it was October, you had Sam Bankman. And now you even have to wait another 7 months before the trial even begins. And then Silvergate is we don't have our report. NVIDIA too big to fail. Damn, did that tap come down? Damn, we're break even on tap now? That sucks. That was good for most of the day. I thought it was going to hold up. That's why you got to stay productive and working every day, indeed. Time flies, man. Even then, Powell, bro, I don't know. I realized it, dude, Powell has the hardest job. He truly is the most analyzed man in the world. Everything he says has implications. He has to imagine having to be on guard for one question, right? And then you're what do you have to make sure you choose the right words to not disrupt the financial system? And then somebody just hits him out of left field with random ass questions. And they're do you know if unemployment people get unemployment if they're not employed? And do you have to be unemployed to get the unemployment? And how does the unemployment? And then you don't know. Half of the time you're on your guard. And then the other time he's just I don't know. And then somebody asks wild questions, bro. He has a hard job. He has a very hard job. That's it. And then no matter what, he's getting grilled. There's always someone we told you this last year. Then the other person's we told you not to do it. We told you to do it. And then another person comes back, man, and it's just crazy. It's absolutely crazy. And they're how dare you? How dare you try to stop inflation? Do you know if you keep going right now, do you know what you're doing? And it's just, yeah, bro, on both sides. He's wrong no matter what. And then people love him. People hate him. Tough job, bro. tough job. He must be the loneliest person in the world. No, I'm sure he has a dog. You'd be surprised, man. Some of y'all should get a dog. That fix a lot of problems. You know that? Like, dogs are chill. Like, I'm sure if Powell got a dog, I know he got kids, he got a wife. They've been married for like 35 years. I think he's chilling, but it's just a hard job. I mean, that's a very, 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 very hard job. Yeah, that one, one of the analysts noted it, that question, what's his name, Mr. Green, who was telling him about systematic racism. They noted he didn't even ask a question. It was just a 5-minute speech. So not everybody was asking him questions. But really a lot, you just had random headlines that moved the market throughout. But yesterday was definitely a bigger part of the market moves. Yes, the bad jobs data today did have an effect. It was part of it. ADP came in hot, but like everybody tells you, no matter what, ADP is very hard to extrapolate to the non-farms. So last time ADP went up, but it wasn't as high as this month. But then again, it didn't even reflect the scope of of the job gains on the non-farm. So last time ADP was hot, but it wasn't like a big number, and we came in with 500,000 jobs. So we're going to see, but that's Friday's data we're waiting for. Why is Micron up? Micron's running 1.5. He did make everything more. Yeah, the if statement had a reaction. It's funny. I felt bad saying it just because I know JP Morgan is ending banking relationship with Gemini. Is that GBTC? Isn't that Barry Silber? But JP Morgan ending banking relationship with Gemini. But I felt bad because I'm like, I knew people were going to get mad at it. Like, that if statement's hilarious. But it really did bring in a lot more conditionality and kind of showed that, Powell wasn't, I don't think Powell was trying to be that bearish yesterday. Otherwise, I don't think he would have reiterated that so strongly. The Vossi Bop twins clapped. Mm-hmm. My brothers don't die, they just Vossi Bop. They don't dance. So the beige book is actually interesting because it's the summary of like economic conditions, not economic projections, but it's just going to tell us kind of where the Fed sees the economy at. You're going to hear from a couple of their, what do they call them, their contacts. It's definitely more broad-based. It's not regional. And this is what you get 2 weeks before the FOMC. So the beige book is actually, it's kind of important because it's based, the scheduling correlates with the FOMC. So they put out the beige book, then they go to a Fed blackout period, then we get the data, and then this is going to be kind of the economic data or the current economic conditions that Fed members will be looking at before making their judgments. But obviously there is a couple of sets of data on the way prior, which Powell mentioned he will be looking at. And that comes out at 2, so in about 30 minutes. Taco Bell's chill, man. Taco Bell's chill. I'm a fan of Taco Bell. I felt bad, though, because I was telling y'all about, like, the hair vitamins yesterday. And, like, I felt like it sounded like an ad. So, like, I'm kind of happy, like, that I don't, like, sell you guys anything. Because, like, when I tell you some stuff, I don't want it to sound like an ad. Even though you've been getting an ad. You're about to get an ad in 3 minutes. But I was kind of happy, though, because I'm like, I hope it helps some of y'all. I did post my hairline on Snapchat if you want to see it. But I was like, I hope I could help some people out there. And I hope I could share with you guys some of these little life tricks. So actually, I do have one for you. Actually, where my short guys at? What if I told you, because I've been dealing with this hair loss. I found a way to get my hair back, right? But what if I told you where my short guys at? My short guys. Bro, my short guys, I got something for you. What if I might be able to make you taller. You short guys, do you want a trick? Are you guys interested? Where my short people at? I could get it for you guys. You guys interested? Oh, I hope you like the video. Here, I'll tell you. Are you ready? So if you short out there and want to get taller, this is what you could do. Nothing. You're short. Okay? Stop fighting it. Stop falling for all of these ads and everything trying to make you taller. Deal with it like I have. It's over. Okay? Stop it. There's no change to it. That's it. You're a short king. Live with it. We are more blessed and we're going to live longer. Okay? That's it. Don't fall for any. This is how they get you. This is how they get you on the hair loss ads. This is how they get you on the short people ads and all that shit. Stop it. Stop it. There's no secret. We're fucked. Okay? That's it. So I hope that balances out me kind of, promoting the hair stuff yesterday, even though I didn't get paid off of it. But yeah, it's okay. Don't worry. It's okay. I'm doing it for you. I'm doing it for you. Trust me. I saved your life. You don't realize it yet. 39.71. Damn, new low right here. So that's it. 39.60 is in play now. Fed futures are back to 80%, it looks like. Ay. It's no good, man. So that's it, man. If anything, you're kind of continuing from the jobs, believe it or not. Powell kind of got in the way a couple of times, but there it is. Yeah, I posted my hairline on my Snapchat. It's not edited. Why did you think? Is it that bad? Now you just made me self-conscious about it. I didn't know it was that bad. I knew it was bad, but like, shit, man. I still got that hairline riz, lack of hairline riz. I got you. You got the Balenciagas with the 2-inch soles. There you go. That's how you could do it. It's okay. The truth gonna come out eventually, though. That's my biggest fear. That's why I don't wear those big stepper shoes. I can't. I'm too worried about the future. I'm like, one day I'm gonna trick somebody into thinking I could be a great small forward, and then boom, I take off my shoes and then I lose. That's it. I feel like that's too much relatable to the plot of Like Mike. Honestly, I don't want to deal with those problems. And I get stuck in like an orphanage or something. I'm like, how did this happen? All because I wanted to be 2 inches taller. No. And I'm like, no, I don't get it. I'm like, I just want to play basketball. They're like, what? And then the avatars come out and then Air Bud pop up and then Adam Sandler yelling at me to run up the hill. And I'm like, I can't do it anymore. I was too tired. No? Oh, ad time? My bad. Yeah, it's time for your ad. It's good. I feel so bad. I feel like you guys are at like a place where I'm just like force feeding you ads now. At least it's on a schedule. And then we'll find out tomorrow. I'm going to see. I just didn't change the settings from yesterday, but I don't even know. I'm hoping we get a benefit off of it. But it's good, though. I think the ads are so I think the ads are very humbling. You know what I'm saying? I don't know. I think it's a humbling experience for all of us. So I'm glad. We've had just a weird thing with YouTube lately. I mean, again, we weren't running ads for a very, very long time. And then they changed their policy. They made me sign like everybody, all YouTube creators. You had to like update the ad terms, and then you update it, and then like a week or two later, they started showing ads on my videos regardless of whether I monetized it or not. Some of you guys are reporting that. So then I was like, all right, fuck this. And then I just and then I turned on the ads. That was like a week or two ago. And then now, just because they were already showing them, so then yesterday, you guys were just getting 30 minutes at a time just shoved down your throat. That one we don't know. So find out on the next episode of Google Loves You. What's my snap? Oh, I was going to tell you my snap is on the screen, but you guys can't see it. Oh, that's crazy. Yeah, my snap is just Josh Answers. I thought you guys could see my snap. So that's where maybe should we put it over here? Should we put the P&L in the middle? Does that look weird? That looks kind of weird. Sorry, I'm feeling adventurous today. I don't know. I opened up my Snapchat yesterday, and it made me feel younger. So I used Snapchat yesterday, and I posted like 3 things on Snap. I was sitting there during Powell. I posted one, and then I saw a cool filter, so I utilized my hairline. It was cool. But, like, I'm a little worried because that's it. I didn't think that's it. They were like, I thought your hairline was edited. I was like, damn, bro. That's cold, bro. That's not what I was expecting. It's not what I was expecting. I thought you were supposed to tell me, nah, Josh, it don't look that bad. And now you're like, damn, bro, that's fucked up. That's so bad. How did you even allow that to happen? I'm like, I know, fuck. It's okay. We'll get through it. We'll get through it, man. I thought it was. Yeah, man. It's okay. It's okay, man. I just got to work harder. That's all. It's motivated. 3 years with the chair, baby. Holla at your boy in 2030. Amen. Amen. Catalyst for the week. I mean, I think Beige Book and then non-farms. That's all it is. Pray for my hairline. Don't pray for my hairline. You know what I'm saying? Because not everybody's like mature in their faith. And I'm just telling you, man, praying for the hairline, that's one of those things. You'll be like, God never answered my prayers. I don't want to ever, but so don't put you or me in that position. You know, it's cool. I've gone to acceptance. I think first I was in denial. Now I'm at acceptance, borderline capitulation. But like, don't bring God into this. You know what I'm saying? Because like, you know, hella people get mad at God for a lot of reasons. Last thing I want is like a hairline prayer, and then I'm like, you know, I got faith and all, but you know, I'm not like, you know what I'm saying? Like, it's just not, there's already too many problems in the world, and I know God works in mysterious ways, so I'm not going to bring in the, you know, the biotin and the vitamin D and the zinc into all of that. My NVIDIA short, I think it's just a risk to reward. That's it. Simple as that. I think $30 up would be a lot harder than $30 down, and $30 up, 40 to 240. Pretty much go to like 270. Otherwise, you go back down here, and it's been on a massive tear. But then that like $30 drop here is very, very low. You think you could pull off the Vin Diesel look? I don't know. I've seen it on a Snapchat filter, but I look sick when I have bald hair. I feel like I don't know. I don't look healthy, but maybe. I think my girlfriend brought it up. She's like, "Why don't you just shave it all off?" And I was like, "Nah, I'm not ready to give up. That's it. I'm not ready." But I saw a guy at the gym and he looked good. We had a DJ at the gym. Have you ever had a DJ at your gym? That shit's wild. I went to a gym and they had a DJ on the staircase, and there was a DJ just spinning tracks, bro. Yeah, and he was just he would look like he was 20 years old with the Andrew Tate cut, and I was like, wow. I was like, he's working it. He's working it. 39, yeah, well, we're already below 39.74. The next level is 39.60. Low of the day is 39.70. 1/3% lower than yesterday. Dow is down almost 3/4, and NASDAQ is barely in the red. I think 39.60 is where it gets interesting, because a couple of times we tested 39.60, though, didn't we? We flushed it. I don't even think you can respect it a little bit, but really 39.60 is the panic point. And then that's where I think everybody really gets worried. And then it's not helping that right now. I mean, you got a little bit of a olive branch from Powell today, but definitely not enough. And then Fed futures are still pricing in the worst case scenario, or more, or on the way to worst case. ASML news keeps getting reiterated. They were getting clapped earlier. Yeah, Netherlands. There's another one. Netherlands to propose chip gear export to China. No, but they had that 10 minutes ago. It's just reiterating as breaking news now. More 3M. I'm waiting. I think 3M's doing what I want it to do, though. So I'm excited about that. 3M 106. Let's let it. This is like the 10-year low. Like anything below like 106, 105, that's where it starts to get really interesting. And there's young Bill. Tesla UNFI price target cut to 28 from 40 at Wells Fargo. Verizon, I was looking at that earlier. They look decent. I just don't know how I feel about another telecom. But I do like Verizon better than AT&T. I think they've done a little better. And I remember last time y'all brought it up, they moved up a ton. NVIDIA loves it. NVIDIA offerings, insider sales. Yeah, bro. NVIDIA is unstoppable. Remember, NVIDIA was going to be the first one, like the next company up that was supposed to become $1 trillion, and then everybody just died after rate cuts or rate hikes. $50 priced in for May. I think it just gets weird when everybody has to forecast that now we are like, what, 3 times, hiking 3 times more than 3 times more than what was even priced in, and it's only been 3 months. But that's why even today, though, it's crazy because, like, what everybody's been thinking about has been, what's it called? Everybody's been thinking about 6%. Sell you on 3M. Don't buy it. It's not a recommendation. You will lose money. Stock trading is extremely risky. You can lose all of, not most of your financial investment. Please consult with a financial advisor. And thank you. Have a wonderful day. And the rates have little to do with inflation. In the short term, I could agree with that. I think in the long term, they definitely do. It's kind of like working out, if not more. So, like, it is like one of those things where it really does take a long time to, like, sit through. It's like an edible. I'm trying to think of an analogy for you, but the only thing would be it's like literally, it's like it doesn't matter if you take a full edible or half an edible in 10, 20 minutes. It doesn't do anything, right? But it's like an economic edible is the best way to put it. Is that like 6 hours later, like 6 months later, you're going to definitely you're going to feel it, there. I mean, wine, you feel buzzed almost immediately, but it's like rates are very, very delayed. Who's that? Ray McGuire to join Lazard as president in Wall Street return. So that's like why people are worried with the stock market, because they're like, no, Powell just raised to 4.5. They're like, bro, you just took 4.5 grams of edibles. It's going to hit. And then like everybody in Congress is like, nah, man, you ain't doing enough, bro. What's up? Hold on. And then they're like, no, but if we take another edible and the other edible hasn't hit, bro, there's a good chance we're going to end up on our back for like 9 months here. And it's going to be very, very terrifying. So it's like, right. It's like, so it's there. Rate hikes are in the system. I mean, you see it with real estate. You see it on a lot of different capital goods that are more interest rate sensitive. But it's like the real effect of it, it does hit a lot later. Was the best analogy ever. It's very accurate. I'm telling you, I mean, I'm like, God bless you if you don't understand the analogy. That's good for you. You made way better life decisions than 80% of us in here. But I think it does really accurately describe, what do they call them? The cumulative tightening effects. They're just talking about edibles. That's it. That's what they mean by cumulative tightening effects, is they're like, it takes 4 hours to hit, dog. 4 hours to hit. Okay, do not take another half a basis point dose. That's it. You get your dosage in grams. They do theirs in basis points. 3969. 369. Damn, see. Oh, sorry. We're back there. Actually, that'll be at 330.60. No, it's not like drinking. That's the thing. I think that's the problem, is that you have half the people thinking rate hikes are like drinking. The other half know it's like edibles, where it's just like you drink, you feel, bro, you're going to tell me you take 4 drinks and you don't feel anything? You just probably one of those old white dudes sipping on whiskey. So I get you. I feel you. But at the end of the day, it's like, a lot of people want to see an immediate drunkenness off of rates, and that just doesn't happen, unfortunately. It's just really not anything where, you're not going to get an immediate reaction except for what the market reacts to. But the real effects on aggregate demand, they take a lot of time. Little mini pop. It just sucks because right now it's almost 11 and we've been on the downtrend since around like 20 minutes after Euro close. Yes, this is IEF compared with the dollar. So the dollar is green barely. It was negative to start the morning, and it's holding up. But then the bonds, they were green in the morning, and they went red, and now they're just hanging on the lows ever since the 10-year auction. And that 10-year auction is where we did start slipping there. I'm making you feel like I need weed. Nah, man. And I mean it respectfully. And I don't mean to offend anybody. But you need a hobby, dickhead. Okay? That's what you need. That's it. I be talking about weed. What's wrong with you? If I start talking about Oreos, you're going to be like, I want an Oreo. I need an Oreo right now. I need that Oreo right now. No, you need a hobby, sir. Go choose sunflower seeds or something. What do you mean you need weed right now? It's okay. It's 10:45 in the morning. If you have not already proceeded to wake and bake, you're too late, dog. This ain't even a wake and bake. This is like a mid-morning, early afternoon bake. That's just weird. You know what I'm saying? Nobody does that shit. Like, go hit the gym, go for a fucking jog or something, go make your brunch. I don't know, go check the news on the day. Like, shit, like that's at this point, you need a hobby or something right there. Go do a push-up, bro. It's just like we're way too late at this point. Like I could acknowledge a wake and bake, but at this time you should be in the library right now. At this time, it's 10:45 a.m. Pacific time. It's 1:45 Eastern, man. People are getting ready to go home soon. So I'm just saying. I'm not coming at you. That's why I said I really said it respectfully. I don't mean to misinterpret it. You're misunderstanding the stoner life. I don't think I do. I think I'm on point. Because like I said, if you already missed your wake and bake and you are like, what the fuck are you doing out there? You ain't even committed to being the stoner life, bro. The Lord says he spits out lukewarm. You ain't even fully committed to that, okay? So just back out right now. It's cool. This is a great opportunity to disrupt the rhythm and make a positive change in your life right now. So that's it, man. Just go get a library membership, man. It's cool. You can check out as many books as you would like. It's great. I think they have a limit. Just don't lose any, but you'll be good, man. You'll be good. Yeah, man, go do something. Go do something, and then you can smoke. But if you already missed your wake and bake, you're late. I'm sorry. I'm not even trying to, you can't even wake and bake and have a coffee. It's just weird now. It's all fucked up, dude. I'm sorry. So there you go. I hope that balances it out between, making an analogy of edibles and economics and then making sure you all get fucking hobbies. So there you go. Amen. Thank you. Love the balance. Love the balance. God bless you all for the knowledge. Josh, I think I'll use that edible analogy to explain the econ effect of raised rates. It's a good one. It really does. I think it only hits a certain group, but amen. The impact of the Bayes book. We just answered that pretty much. It's a summary of economic conditions, and it's released 2 weeks ahead of the FOMC. And this is just going to be their outlook on the economy leading into the rate decision. I should have sold that covered call the other day. Well, the beige book doesn't say anything about terminal rate. The beige book is a summary of economic conditions. Did I say projections? Excuse me if I did. I meant conditions. So no terminal rates are involved in the beige book. All it's going to be is it's like 12 of the regional Fed branches. They talk with like business leaders, economists, companies, and they say, hey, how do you feel about the economy? You know what I'm saying? Like, what have you noticed? Have you seen business activity pick up? Have you seen business activity decline? You know, and they go over all of that stuff to see what's up. And then they say this is the summary of current economic conditions, and then they go from there. Yeah, pretty much the beige book is like, well, the dot plot is summary of economic projections, the SEP, where this is the current economic conditions. So one of them is right now. Conditions is like right now versus projections. The projections are come out on the Fed meeting, and this is right now just giving you a 30 days indicator of what we're currently at. It's like a checkup, but it is very I don't want to call it anecdotal, but if you're not familiar with how the Fed does this, they just talk with people in different regions. This one's more broad-based, but all they're doing is like they're talking to a farmer and saying, hey, have you noticed the price of fertilizer go up? Or they're talking to somebody who makes engine parts, and they say, how is your business activity? Have you had higher wages? Have you paid more for shipping? You know, and that's what they kind of do. And then they get a summary of all of it, and then they use that to make projections on whether or not they'll say, Virginia was better. Dallas, we noticed it was better than last month, or we noticed wage pressure was doing better, or we noticed jobs was harder to hire people. So you're going to go down 12 different regional Feds and get kind of a summary of how they are viewing the economy based on those anecdotal stories in the last 12 or the last 30 days or so. $3,969. That's a new low on that candle here. You might get a little bit of a flush. The earlier flush did not hold. Dollar's trying to move. Dollar's trying to move, and the bonds are still at the low. Nasdaq's starting to give up a little bit more. SPY's only down 0.4, but Nasdaq's catching up. Nasdaq was leading a lot more up until that bond auction. Grayscale reiterates commitment to lower fees if ETF is approved. Grayscale said they would take ETF case to the Supreme Court if needed. My resistance levels, the next one's 39.60. That's it. We're back. We're in the danger zone. Ever since breaking 4,000, really even like 30.90.80, 39.80 is like a small range, but realistically, this has been a wide range of danger zone. And then I think the market's, very hard to get bullish sentiment until you get above 40.17, and then 39.60, then 39.50, and then really 39.40 and 39.36 are both the 200-day and the 100-day. So that's what I think is interesting here is that, like, you see this line? So between here and here is the 200-day moving average and the 100-day. So those have moved pretty actively. And now the 50-day is a lot higher than earlier. The 50-day is at 3.994. Spotify says artists making over 1 million, as well as those making over 10,000 on their platform, has doubled over the past 5 years. There you go, Spotify. Damn, they've been holding up good. Not adding the MMM yet. We'll see below 105. I would prefer $100. I mean, I know 105 is a very big level. They may even dance there a little bit, but I think $100 we could I think we could be happy at $100 because then that's still like almost 10% lower. You get your $100. You have like $5 more, $10 more to the downside, worst case. But I think $100 is where you want to be at. HYG, I mean, high yield credit, just look at the spread between credit, high yield credit. It's kind of a greed indicator. In a weird way, you could kind of use HYG as a greed indicator. When it goes up, people are greedy. When it comes down, people are getting scared. But other than that, though, I mean, we haven't really made a play on it since like 2019. I think it's kind of difficult there. And, you know, it's just harder to determine. And there's just a lot of other things you could go for. Going long MES, well, that's a nice bounce to go long on if it actually holds. And it's about 11 if, like, we're either going to continue our trend or we're going to bounce up from here. But if we do continue down, I mean, it'll suck because this will just be another. I think around the same time yesterday, we were in the gulag. So we'll see. That's a vertical off the bottom, but still kind of tiny. Hundo. Real fried rice. Enjoy your day, baby. God bless you. We were excited at the beginning of the year, yes. But that's okay. I brought it up on the watch list. The problem is if this gets worse. So that's this now, I mean, we already saw this kind of coming in a way. We were talking about it, just like we said, man. Learn from last year. Don't get fucking too hyped and then get rugged. But at the same time now, the problem is if this goes from good or bad to good, back down to bad, but you don't want this to get worse. So in a weird way, I think I'm 2 steps ahead because I still don't believe the 50 basis points, but I'm more worried if this turns into, if it gets worse from here. Does that make sense? Because now you have enough fuel to get worse that you didn't have over here. Right? Because you bounced up there, it was short-lived, but now everybody was so optimistic. If we get back down here, and then now you mean to tell me by March we've already done the amount of rate hikes everybody was pricing in for the whole entire year, inflation comes back up again, and now a lot of people piled in and are about to get rug pulled on there. It's worse is what I'm scared of. So even coming back down to 380, no problem with that. But if it happens in a way where everybody flip-flops from going no landing a month ago, then we have a really big problem. And then it starts to look like every other bear market rally rug pull, and then things start to get a little bit more ugly there. So that's the only thing I'd be worried about. MDB, I didn't know they had earnings. I saw them moving up today. I think Ulta has earnings today too. Correct me if I'm wrong. The most hated if rally. We haven't had anything compared to that most hated rally in July. We're still at a weird spot, more or less. But we'll find out these next data sets in Powell. Ooh. So event risk is a lot higher. Just keep that in mind. Even after today, I mean, you literally saw the market tweak out on Powell taking a second to reiterate the word if. If that doesn't highlight this whole story for you, I don't know what does. He said if. It did highlight, though, if you were listening when he said the word if, like you could, it just, to me, it kind of just proved that he saw what happened yesterday. Like, otherwise, like, why would he take the time to, like, really be like, if? Like, I think he definitely was, worried about what happened yesterday and kind of wanted to make it clear that he wasn't really pointing too hard in one direction. But, I mean, he did tighten things up. DraftKings kind of going. A lot of things are slipping here, and that little mini green shoe already got wiped out. SC's on the high again. And then NVIDIA just staying pinned at the top. The context of if is this giant candle here, is that as Powell was giving his first statement today before the House Financial Services Committee, he was talking exactly what he said yesterday and said how rates would need to go higher, but then he said if. And he took a second and he paused and he said if the incoming data is a lot stronger than expected. Whereas yesterday he kind of just shot it out and said, boom, if incoming data is there this time today, he took an extra second, a pause, and literally said it twice. He said if. And that gave you a pop, led up to a new high on the day, and then we sold it off pretty quickly. And you've only been above 4,000 once today. Futures got above it, but it couldn't hold, and that in and of itself is kind of a weak sign here. Yeah, we're still above Bostic level, but you're definitely working your way into it. So Bostic candle was here, then you had the pullback, and then you had all the other. This is like the second half of Bostic. You've given up like 3/4 of the Bostic bounce. Yeah, 1 minute till beige book. That could definitely get us moving. You're going to get a bunch of headlines here. Then J&J selling $7.8 billion bond to fund separation. Oh, J&J news. See if that moves. And then get the beige book is the summary of commentary on current economic conditions. We're just going to hear about Dallas and Virginia and Richmond and all these different places in Chicago and their economy, business context. So you'll see. You'll know once I start reading these headlines. General Dynamics increases dividend. Argentina. Okay, yellow. Where is beige book? Where is it? Damn, we've been here for 5 hours already. Well, just no data yet, so don't worry. I'll let you know when you come back from the ad. Where is it? Fed beige book, labor market conditions remain solid. There it is. They say overall economic activity rose slightly in early 2023. So you're going to get one headline at a time. So far, jobs strong, economic activity rising. Fed. Well, there's only 2 headlines I got so far. I don't want to go and look at. I don't want to really read it. There's the summary of the text. Okay, well, now I'm reading it. So this is what the beige book looks like. I mean, it is beige on the front, but they go, here are all of the Federal Reserve districts. They say, what's the beige book, the purpose? So some of y'all could answer all your questions by going there. Fed says inflationary pressures remained widespread. But then it tells you overall economic activity, labor market. Yeah, inflationary pressures remain widespread through price increases moderated in many districts. Several reported higher input costs, particularly energy and raw materials, though there was some relief in freight and shipping costs. This is actually big. Some districts noted that firms were finding it more difficult to pass on cost increases to consumers. Selling prices increased moderately in most districts, with several districts noting a deceleration in home prices were generally flat or down slightly, while rents were reported to be steady or higher. That's not good. Still, home prices and rents rate high, contributing to ongoing concern about house affordability. Looking ahead, Contacts expected price increases to moderate over the year. So here's the highlights, every single one of them. Business activity increased in Philly. Cleveland economy contracted. Richmond grew at a modest pace in recent weeks. Atlanta activity grew modestly. Chicago economic activity increased. San Francisco district economy expanded modestly. Dallas moderate or modest economic growth continued. Economic activity in the 10th district declined in Kansas City. Minneapolis activity in the region grew modestly. St. Louis conditions have remained unchanged. And then labor market. Prices, inflationary remained persistent. Let me see wages. Oh, this is like by each section. So yeah, those are most of the headlines though. Seems sadly bearish. Again, after reading you all 10 or 12 of those, every single one except Kansas City saw either growth unchanged or increasing in the last 30 days. Some positives on real estate, but it also didn't really highlight the best and biggest of pictures. Bullish. God, depends if you. I mean, the economy is bullish. That's the welcome to the paradox of the last couple of years here. The economy is great, technically speaking, or at least you're not watching anything slow down. But the problem is inflation. Like, let me ask you this. Here's my question to you. Would you believe it, or how would you feel if inflation hit 9% again by the end of summer? How would you feel? Would you believe it? I know there's different possibilities or probabilities surrounding that, but like, just that's what you got to think about here. Is what would you do if the inflation went back up to 9% by July, August, September? How would you feel about that? I would definitely believe it. I'd get closer to God. I'd be crazy. I believe it was based on demand still being strong. Very worried of what we're supposed to do, unchanged. Depression fears, get another job, stay in cash, angry. I think it's there now. I would pray, expect it, get another job. I got 4 kids, not cool, bro. I buy more bonds. So this is now, do I think inflation is going to go to 9% by the end of this year? I don't know. I don't think so. But that is the incoming fear 3 months after getting hyped up at the beginning of the year. You got to realize the problem is now, in a weird way, we already cheered, and a lot of people were under the impression that, okay, maybe it's going to peak out here, but if that shit does come back up, now we're dealing with inflation roaring back at a later stage, and that is what becomes the problem. So that's really going to be the fear for a long time, especially when it starts fluctuating back and forth so rapidly. So that's the problem with the economy. If the economy just keeps staying hot and things really do get better and better and better, people are worried that that inflation impulse just did not disappear at all. Drill oil and inflation. I mean, could help a little bit. That would be akin to the 70s, yes. Inflation won't get better without people losing their jobs. Well, they're hoping they could do that. But it's they're hoping they can, but it's just like, I think the consumer is just, it is very, like, I don't know. I feel like we're stubborn no matter what. I don't think, I mean, when was the last time in the last decade anybody was like, I should save money? Like, even then, some of you in here, you save your money because you're a smart individual with 10%. But it's like, I don't think people like, dude, people aren't afraid. I mean, the last conversation we had, bro, like what, a month ago? You guys don't remember? You're like, I'm bored of not spending money. I'm ready to fucking spend. So it's like, it's just very weird because there is vulnerable communities. There is people who aren't making as much, but it is just wild that, like, when you look at everything broad-based, the money just keeps getting spent. Can't save money. You got to pay $3K for daycare every month for kids. And that's kind of, I think, the problem. It's like we're saying here is like, no matter what, whether you're able to save or not, and I hope all of you save 10% no matter what your expenses are looking like. Remember, try to take 10% off top, but it just, like, the fact is you're still paying for that childcare. And that's what I feel like a lot of us have been dealing with, not just childcare, but more so I think a lot of it is coming down to just simply there's higher cost and there's things that we need or want, but if you've noticed, we are still buying it all. Does that make sense? So no matter what, the behavioral shift has not happened. Rent has gone up a lot, but people are still living in the same place. People are still, there's a lot of endurance, more or less, that is happening. You know, you have expensive childcare, but people are still paying for it, right? Food is expensive. You got to eat. Gas, it's everything. So it's a pretty wild thing to think about. And that's where I think it's just like we haven't hit the breaking point where people are rejecting a lot of the prices. Now, granted, it's because they need those items, and that's what makes it difficult. But you haven't really, it's like we've been forced into constantly buying. I think that's a good way to put it. Notorious, what's happening, bro? Where'd you come from? Let's go, baby. We missed you. Oh, shit. Did I lose my horn? Nope, I got it. God bless you, baby. Good to see you, man. Good to see ya. Long term, we will hit the breaking point half of the year. Well, that'll make sense with the yield curve. We'll find out. Used cars went. Oh, that's what I wanted to look at. The Manheim used car price index. When was the last updated? February 28th. What the fuck? Oh, yeah, we're fucked on CPI. Chad, I don't know how I feel about this one, man. This one don't look good. That was on February 28th. Oh, no. So this is the month over month. Let me get you a yearly. But that's awful. Used car prices jumped up 4.1%, 4.3%. That shouldn't have happened. When was that last data? February. So year over year is not as bad. The month over month is pretty bad. But then year over year, though, it's still at a bounce. It's still negative from the year prior. So not too bad. Well, a lot of people thought the used cars was just because of taxes, end of the year, pent-up demand, but if that continues for 2 months in a row, it looked like the automobiles. Why are we popping? We've been going up since the Beige book. It had some bearish comments, but it was borderline just saying the economy is good, which is bad for inflation. But then, I mean, if you're not going to worry about recession as much. Month over month, used car prices went up 4.3. Year over year, it's still down 7.1. But then it has the last 3 months of used car prices after bottoming in December. Remember, I told you that the first time it started to go down and up, we were calling that out there because used car prices have a big one. But granted, now after the last CPI change, real estate has more of an impact than used car prices. Nvidia.com. NASDAQ did go positive. ALBT on the high. Albit. Avalon. JD moves huge, actually. JD could move a ton. JP Morgan's on the low. Watch out. Banks. Bro, banks have been getting murdered since the bond auction. Apple. I don't know how Apple's even up 0.5% right now. Any explanation for? I think tech is just kind of some of the earnings not being as bad, but other than that, I do think the tech stocks are gonna have to pay with the 10-year being up as long as that stays up. Yeah, when tech stocks did sell off, we did give up. And then energy. Energy was a leader on the day and flipped. Now real estate's number one, utilities. Tech is still positive as an industry, up 0.39 today. And then communications and materials are barely green. Staples red, industrial red, healthcare, discretionary, financials, and energy. And now energy is the worst on the day. To God be the glory, baby. Amen. Amen, Jumi. Tell him. Tell him. So I'm talking about, amen, peace be with you, my friends. And get ready. Are you guys ready? You guys know we're about to have a crazy year, right? It's cool. Even then, it sucks because like 2024 is going to be popping too, depending on how slow this all takes. So, I hope you guys got the peace. I hope you're excited to be alive, even if it doesn't make any sense. I hope you will get knowledge and discernment, and you will definitely learn from it, man. And there's just so much to go with. I mean, sometimes you'll know a lot about what's going on, sometimes you won't. But this is just like 2022, and we got a long journey ahead of us. So get ready. And even this next, they're saying the next couple of days will be what determines how this first quarter plays out. So these next couple of data sets, that's it. Do I get the Apple headset for $3K when it comes out or invest in the long term? Man, you know my answer. I could say a lot of funny things. A lot of funny things, man. I see you going AR? When was the last time you AR'd anything? Actually, that sounds weird. Just Apple headset ass. Mother, you going to turn into an Apple? I'm not even going to, man. You mean back and forth chopping? Kind of. It'll be, I think when you look back at it, it's going to look like chop. So I think this year, it's going to feel a lot like last year, even right now, like where you're going to go through like huge periods of up and down, but then when you like zoom it out and then look at how long it took to like hit a new low and then like bounce and like move a lot, you're going to realize, oh, I'm at the same spot I've been at for almost a year now. So this is where you were at last year by this time. You were coming into the low before the rip off of the Fed meeting. Butterflies, I want them when the market's higher. So, like, even I was pretty much waiting to like 4:30 to butterfly from here. I thought that would have been a great one. September 12th. Yeah, we brought this up. That's what I'm worried about right here, is that we look a lot like we're in September. And that's the kind of the worry about these next couple of days, is that you're pretty much like right here. And it looks very, very similar all the way from the pop rally, chill out for a couple of days. But this one was a lot slower. That's the funny part about what we're dealing with, is like we're kind of repeating what we saw last year, but a lot smaller and a lot slower. So like last year was the same exact thing. You kicked off the year, instead of like a big run up, you had a huge run down, and this was way bigger than this. And then you had a flat pop and then another big sell-off, but this did that very quickly. You know, this was your 3 months of 480 down to 410, and then like you're back up to like 430, whereas this year we did like 380 to 420, maybe 417, and now you're back down to 397. The Fed by 75. I mean, I don't think they have plans to, but depending on the data in the bond market, my fear is that if something really cracks in the next couple of weeks, or that data is not good, I would just be worried if the market wants to start talking about it. But he shouldn't do 75. Even today, I mean, I talked about it yesterday. Even Bank of America today, they were even talking about it. A couple of people a lot of people don't even expect him to do 50 this meeting. They just don't think that's a possibility. So I think 75 is like, it's way out there, but you know, you never know. And really, if that did come about, that would be its own market reaction, and it would be a result of a market development for sure. Why the media is not talking about how low the bond market is? I have a theory. I mean, you're going to get an ad here in about 9 minutes, it looks like. But I have a theory. Would you like it? It's pure tin. I got good tin for you. Damn, you already got 2,000 likes today? Well, God bless you, Chad. Look at that. Damn. Like, you guys, man, ads have made you guys so much more friendlier. It's been very humbling. Thank you for the likes. Thank you for the likes. Okay, are you ready? Here's my tin. Because some people talk about the bonds. It's not like everybody ignores it. But my tin is that people don't like to talk about the bonds because they're boring, they're whack, and you have to, you know, a lot of people don't like how complex they are. That's one thing. But I don't think they talk about it a lot, because anything in financial media, it's very hard to make money on bonds, since the only people making money on bonds are the people already in it. And then the more you talk about bond yields being higher, the more likely people are going to start putting their money into cash and bonds and cash equivalents and getting 4.5%. The more people know about the high yields on bonds and the risk-free nature of a lot of it, more people are likely to now just say, fuck it, why would I hold stocks? And then you kind of have a huge shift in commissions, pricing, and then it would accomplish the Fed's goal. But that's my tin. There's just no, you again, if I'm giving you 60 seconds of stocks and pumping you, you know, stuff day in, day out on financial media, it's very hard to make money on bonds unless you're from the 70s and you've been in that game for a long time. And then it just, like, last thing is that it just takes money out of the stock market. That's it. The higher bond yields go, the higher the opportunities for people to go and be like, fuck this. Why wouldn't I just grab a bond? And it makes a lot, because it's very rational. Like, that's what I was telling you guys. Like, I have no FOMO. You have no idea. Like, why would I have FOMO on any growth or dividend stock right now if I could genuinely get 4.5% on my money, even if it's yearly? If you mean to tell me I take a little bit more risk and I could get that on a short-term bond ETF, even better. Even if I get 2.5% in half of the time, it's just like, you got to realize that's a very attractive, as anybody who has any sort of conservative investing outlook, where I've told you for many, many years, right? 3 to 7%. Like, that's solid. And you mean to tell me I could get like right in the middle of that to do nothing? My friends, that's a different world. I don't know, especially with big money, especially old money, especially the boomers. Bro, you take any boomer, show them a stock market chart over the last 4 years when they have millions of dollars, hundreds of thousands. Why the fuck would they buy a stock right now? So that's why I think you don't see it talked about a lot. And I don't think people want to talk about it a lot, because all it's highlighting is that, bro, you have one of the best, easiest investments right now. And now the financial world is different. It was different when meme stocks were running, and all it was buy side and balance. And you had a period where the world was different. Quality didn't matter. If that shit had hype, that shit was going up 100%. If you failed to invest in that, you got left behind for a little bit. And now what has happened, it's another new world. Very simply, the new world is, bro, you could go and get 4.5% doing nothing. Now the high quality fixed income investments, you could get paid to do nothing. And you can take zero risk and be rewarded for it. That's a new world. So that's my 10. I mean, I told you, I just imagined a week ago, I told you guys about Bill, and then what happens within another week of that, within 3-4 days, come to find out, we hear, oh, banks are going to start raising their rates to match the federal funds rate to give investors cash because they were skimping us still for the last couple of months. And then what happens 3-4 days later? Oh, the record amount of inflows into cash treasury ETFs. So it's like, people are picking up on this right now. It's not like I'm telling you, I already knew about it, but I was just waiting to the point. And then you mean to tell me this whole no landing bullshit fails, and now the 2 years at 5%, why am I going to hold my cash? And why am I now I'm going to say, hey, TD, why are you only giving me 0.35 when I could go get 10 times as much anywhere else? And then you're going to start thinking about it. So that's kind of where the puck is moving. And I don't think people really want to highlight it, more or less. Yeah, money market should be you're getting 4% on a money market, higher. Again, if you could go and if you want to go buy Treasury Direct, you could get 3-month, 2-year bills at super crazy rates right now. So, and then, even if you don't want it to move too much, you could use these cash ETFs to go and get a very high rate of return now, which is better than a lot of people have seen in the last decade. You could get it by doing nothing. So it's pretty wild. Go straight to the plug. Yeah, and then the higher rates are and the longer they stay up there, everybody is going to price match, though. And that's what needs to happen. I'm going to flip out of Bill once I have something to buy. That's why I like Bill a lot, because my idea is just simply, we had a portfolio here with, over $100,000, and now we have over $15,000 in cash. My philosophy was, if TD Ameritrade is only paying me 1/3%, and again, if you're already in Fidelity, Interactive Brokers, even Robinhood with gold, you're getting more money on that cash. My logic was, I'm going to stick it into one of these 1 to 3 month bond ETFs, these treasury ETFs, go get me a nice return. I don't even care if it's anything high. I've already made 0.35 in 4 days. Like, you can make them, it doesn't matter what it is, as long as I'm getting risk-free money at a very high rate now that has the possibility of going up. The idea is I'm going to just keep it in there up until I can find something to buy. So that's it. I'm going to be in short-term bonds, ETFs, all the way up until my 3M goes down, my Altria, or Amazon, Google, give me another discount like we picked up on in October, and we're going to be fine. I have no idea why semis are ripping. You take your money out of bonds when you're ready to buy something. That's it. When you have a better alternative. That's it. Do you guys see what I'm playing? A very simple, rational game. The expense ratio on BIL is 0.003 or 0.3. So the same interest you would get on your TD cash is the same expense ratio you pay. So we already got like 0.08. So you take away 0.03, you got 0.05 gain. Woohoo. And then there is a monthly dividend at the end of the month. Oh, shit. See, and then pretty much, and then the ex-dividend is the first day of the month. And that's when the thing resets, as you could see from here. Right? All the way up until like the last day. I guess in December they reset it middle of the month. But then all that matters is that you just sell out the day before ex-dividend. You'll still get the monthly distribution. And then you go and rebuy back into it, and then you ride the wave up again. And then worst case scenario, just like at any point I want my cash. So like even then, I bought this 8 days ago, I made $8, right? So it's like even then, it's like you're not going to make or lose a lot of money if you want instant liquidity. Move spot gains in a bill. Thanks for spitting the knowledge. Amen. So remember, it's not permanent. And that's the best thing I could tell you with Bill is this is definitely not going to be permanent. And you got to watch out if they do end up cutting rates, then Bill goes out the window. And then all you got to do is just, if you find a simple alternative, then you go and you don't fall in love with the bill. Don't fall in love with the bonds, and you'll be great. Oh, ad. Sint is popping 20% at the highs. Ad is good, man. Take this moment, this humbling experience of ads. It's okay, take it in. What I was saying is don't fall in love with the bill. And what you need to be doing is making sure you are looking for other alternatives. And the idea here is that, and then again, if they cut rates, then the short-term rates will be lowered, and then Bill is going to change its pricing structure in terms of how it pays you out. So that's what you got to be on the lookout for. But the whole idea is that you got to be looking for alternatives. It's a very, very simple game. Like, think about it. All of the stocks are still, 20% higher than October lows, and I could get another 2% extra in yields. So why would I want to buy anything? But now, if those names come down in value, my goal would be to buy them. So it's like if 3M goes to $100 and that's the price I want, I'm going to sell out of this and I'm going to go buy back into it. You see what I'm saying? So that's just all you got to do. That's all you got to do is once the thing you want is there, then you get out of that shit. Just don't fall in love with it. And like we're saying, it's just a beautiful way to get risk-free capital, get a little bit of work and productivity out of your dollar, while at the same time having full liquidity and stability to be able to buy what you need at the right time. That's it. That's all it comes down to. So just like we could hold this so pretty much like I'm going to hold Bill until MO gets back down to like $43 or lower, right? Because then once it gets to a price I want, I don't have to pay that premium or it goes lower. Boom. In the meantime, I'm still getting a yield off of it. If 3M goes to 100, if Google goes to $80, $70, we could use that as one of those opportunities. I do believe if you sell out the day before the end of the month, you should still get the dividend. Yes, Bill is like staking, but it's not based off of invisible tokens. The beauty of Bill is that it is an ETF that owns, hundreds of millions of dollars of treasury bonds of 1 to 3 month bills, which is great, which is exactly what we want. And there's a couple of other ones. I just like Bill. I think you could go with, there's SGov, USFR. I think this one's decent as well, too. I like Bill because you like it. Just listen, man, I'm not getting married, though. Like, you know what I'm saying? Like, y'all ask me, like, Josh, when you going to marry your girlfriend? Like, you know, I love her. Like, we could talk about that. You know what I'm saying? But, like, Bill, nah, dog. Like, you know what I'm saying? I have no marriage in mind with Bill. That's just all you got to understand. If there is a better alternative, if something, you know, if I see a stock with a way better personality and it look better, I'm going to buy it. I'm out of Bill. I'm sorry. So that's just all you got to, that's the only issue with Bill is just don't fall in love with it. That's all you got to do. You avoid that, you're good to go. No, well, we have a lot of loyalty in the long term, but with Bill, that's it. We're just trying to, it's a better alternative than doing nothing. And if a better alternative that could pay me comes up with better equity, you know, valuation and better dividend, I'm going to take that easily. E-Trade premium savings, 3.5 APY, no fees, instant transfers. As long as it's liquid and you get that, I totally stand by that. And that's what I stand by for a lot. I think if anybody, all you got to do is just look into this. I'm glad we've had this discussion now every single day. I'm sure once a day on this, but I just hope people get it, is that that's like the real big shift here in the market right now. And this is something, if Powell truly does keep rates higher for longer and you got to deal with this cuck for the next 12 months, well, just you're going to want high, like you're going to make good money off of it, off of cash. So now like your cash isn't getting punished. And I'm telling you, I feel like Aladdin, bro. A whole new world filled with interest on short term. No one to tell us zero or no return. Now I'm in a whole new yield with you. You know what I'm saying? Like, that's fire, bro. Like, that's fire. Like, we actually, like, we for real. Yes, Tina, there is no other alternative, is dead now, because this is a fat risk that people, or a fat return that you could get doing nothing, man. Easy money. Oh, no, easy money. Oh, now it's going to get clapped. That's what's probably going to happen, right? When everybody in the world realizes that, and they're like, holy shit, I'm getting so much money on nothing, then they're going to cut the rates, and then by that time, everyone's going to switch gears. JEPI is not based off of treasury bills. That's why I don't like JEPI. Listen, you could go and get a high yield of return, but you got to know, just like I tell you with staking, where is your yield coming from? So on JEPI, at the end of the day, JEPI is just a set of stocks that they get dividends off of and that they sell covered calls on. So your valuation is determined by the value of those companies. So like from $56 to $53, that's a 5% drop. If you go back down to 50, that'll be a 10% drop, 11% from the high in 90 days, right? So that's kind of the whole idea there, where it's just like your liquidity, your valuation won't stay stable. Don't compare staking to JEPI. I feel you, but you got to know what your ETF is backed by. That's it. It's an income ETF, but know where you're getting your money from. Like if I go show you, I showed this the other day, like go look at Bill, go look at SGov, go look at, what was the other one? Like USFR, and just go look what they have. And you could go look at their holdings and you could see, okay, how are they going to pay me, X amount of percentage per month, per year? Like, wait, this doesn't make sense. Where do I get this money from? How in the world are you making 4% on short-term bills, right? And this is the whole point. Like, this is the holdings of Bill right now. And this is updated as of yesterday, right? They got $200 million in a State Street money market fund that's paying out rates. Then they got another, this is over 500 million. Damn, no, that's billions we're talking. I guess they reported at different ones versus current market value. But then the idea here is, these are all, look at this. This is a bond maturing in May, a bond maturing in April, May, April. I think they got rid of all the March bonds. So pretty much all of these bonds are 1 to 2 months and they pay out 4%. So that's where they're making their money. It's a very simple, that's what this ETF is doing. You give them their money, they take the money, and then they go and buy treasury bonds from the government. They buy treasury bills on a 1 to 3 month duration, and those are right now paying out a very hefty premium. So, Bill, my plan is simply buy until the end of the month, sell out the day before the end of the month, because then it resets, and then collect the yield and then rebuy it until you find something. So there will be a point, I'm sure, this year, I'm not going to hold any Bill. Why? Because I'm assuming at some point throughout the year, depending on no matter what the rates do, I'm just going to go and buy, I'm going to buy some stock. And there's no point to hold my capital there if I could get something better. So, but the idea is you hold it until you find something to buy. But here's the deal. If you have a brokerage paying you more money on your, cash that's sitting there, you don't need to buy Bill or anything. I hope everybody understands that. So if you have a bank account or you have your trading account where you keep your long-term, if you have that money in there and it's paying you 4% already on a year, you don't need to do anything. I wouldn't do anything. I would sit there and I would be fine and dandy holding my cash, knowing I'm getting my money market from my brokerage or whatever, and they're just paying you out. That's it. Other than that, that's where we'd use it. You sell out at the end of the month because ex-dividend is at the end of the month. So I'm pretty sure if you sell on ex-dividend, you still get recorded. And the idea would be you sell out the day of ex-dividend simply because it's going to reset the pricing. And just how it does here. So at the beginning of every month, it drops, and then you buy it, and then you rinse and repeat. No, you would sell at the high price. So example is that ex-dividend for this was what's it called? Was it March 1st? So ex-dividend was March 1st. You sell out on the 28th. I think you would still get it. Again, January 31st and then February 1st. February 1st is the ex-dividend. Sell out the day before. I'm pretty sure you would get it. But even then, it's like, if it does fall, you make your 20 cents, you lose it. Even if you get the dividend, it should match up for it. I don't know. That's the part I'm split on. I'm pretty sure you would get the dividend, but if not, you're going to get paid somehow. It's either you should be able to get money from the equity, or even if it does reset the price, you should be able to get the dividend and then everything else. And then it pays out the dividend monthly. And then in December was a special one because that one reset earlier. One or other, you get to rebuy lower or get the dividend. Can't double dip. We'll see. Even if you don't sell out, it's gonna pretty much reset and then work its way back up. So like either or, it doesn't really matter, because and then if you end up holding and the price resets, you get a pretty high yield. You're gonna get 25 cents a share. And then the variable, let me see it for you. And then I do know the dividend is variable too. That's the beauty. So like, let's say the short-term bond yields go up, the dividend could be higher, but then also the dividend could also be lower if rates go down. So like I showed this at the beginning. Here's like their latest dividends. And again, they had that December, February stuff, or they had stuff last year. But essentially like February, it paid 33 cents a share. Last month was 25 cents a share. Then the 2 months before was 27. So it's going to fluctuate within a range depending on what the rates do. SGov and Bill are fairly similar, yes. Jobless claims are tomorrow morning. Yeah, better to buy. You'll get better returns on Treasury Direct. And then also, if you're buying on Treasury Direct, you got to just make sure you know how to bid. Like in the sense that, remember, if you buy you could go buy someone else's bond right now, and you're going to either buy it at a discount or a premium. So that's the weird part about bonds. They auction them off. And then there's also a secondary market. And then not to mention, the only reason why I use Bill is that it just keeps the money in my account. And then that way, within like 1 second, if let's say I wake up tomorrow and, Joe Biden bans more cigarettes and Altria drops 10%, it's like instantly I could click 2 buttons, get a little bit of return on my $8, and then I could instantly buy back in rather than transferring back and forth. But you can just go on Bill or Treasury Direct and buy bonds, and just be careful. Make sure you're aware of any of the bond risk related with buying anything on the secondary market. We don't know the data coming out. We know what data is going to, we know what the data set is, but we do not know the results. I mean, right, unless you could confidently tell me what jobs are going to be on Friday and what CPI will be at, those are the variables. And we were even just going over used car prices and a couple of other things, which kind of highlight we may have a problem. Even the Fed Beige Book, it looked like all economies were strong, stuff like that. My estimates for jobs, I don't know. I think, you know what, man? I'm gonna just throw one out there, just because I like it. 500,000, and what I'm basing it off of is just a double whammy, but I have zero basis towards it. I think trying to factor jobs, dude, it's the stupidest thing in the world now. That's it. I mean, just nothing. I mean, nothing makes sense. It's just not what you used to. It's just not what we're used to, sadly. And that's it. That's the only way I could put it, is that they've changed so much, the seasonality factors even then, like, you don't know what's going to happen on Friday? Anybody know? Whatever happens with the report, I think 500,000 job gain. I mean, again, I think last February was pretty active too. Something's going to happen. No matter what the data comes out as, you're going to get one extra piece of data on Friday. Happened today too. Yeah, there you go. You're going to get your jobs revision. So even then, you're going to get a fat revision. I'm telling you, this is something the economist community has been talking about in the last 2 to 3 months, especially at the start of the new year and all of these changes. People were talking about this since they updated the CPI, but the problem is that every revision, it makes it harder to read the next one. And then if you have 10, 12 revisions, and now your revisions are more than a standard deviation, 2 standard deviations, like it gets insane. There's now, so like we're, like realistically speaking, we're playing a game. Does that make sense? It's like, I know the job, like if you asked me this data a year or two ago, it was really telling. It had way more insight and you could extrapolate. Like even now, I'm still able to extrapolate from stuff like the used car index for CPI and all of that. But when it's all said and done, it's like I really hope you're aware. This is just my opinion, and I know a lot of other people and economists on Wall Street hold it, but you know, everybody has their own view on it. But all I'm telling you is it's a giant game. And what I mean by that is like it's not it's like having a proposal just to have a proposal in front of your friends. Does that make sense? It's like it's like if I propose to my girlfriend and then a week later I do like a surprise proposal online. You know what I'm saying? That's just like, this is all just a game. This is all very I wouldn't want to call it facade, but it's more or less the data you're operating off of now is just like you are so far gone that it's not even like we're doing the dance. The market's going to move, and this is just 30 days behind data that we're going to have to deal with. But it doesn't really mean anything because the next month when they do replace it, and they will replace it and they will revise it, it's just like, okay, so then what was the point of reacting, a month ago? You're coming back. You had a little bit of rally there from the low, but these little rallies and big sell-off, those candles are picking up. Google is giving up their advanced move. They were leading on the day. So here are your estimates for the non-farms on Friday. And the top-rated non-farms estimator, Stephen Gallagher of Societe Generale, he's at 280,000. The median estimate tomorrow is 225, average 226. The low is 100, but I think it's the same guy who does it every time. Or I think they probably took him off the list. Actually, interestingly enough, are you ready for this? The guy who's ranked at number 2, who has been most accurate in the last 12 months, he has it at 150. But he hasn't updated his in 2 weeks. And then number 3 is expecting 325, which I believe is the highest estimate. This is for Friday. This is for the non-farm payrolls. Tomorrow, we will be getting jobless claims, but nobody gives a shit, especially with non-farms on Friday. Oscar is for the CPI. Oscar is CPI. Non-farms Oscar is not really as good. Mike Lee. What's up, baby? Hey, man. Hey, man. Since I joined the cult, I re-examined my faith, and now I'm closer to God than ever. Amen. It's a constant journey. Keep doing it. And amen. All it takes. All you got to do is hear something one day. It's crazy. ADP came in hot today, but then again, ADP has no reference to non-farms, especially after last month. So last month, ADP came in at 100,000, and they revised it to 120. But even then, ADP came in at 100, which was slightly hotter last time, but barely. And then the jobs came in 500,000 above, 400,000 above. So there's nothing really, nothing there. I think the claims might move it, but realistically, I mean, I think the market can move on anything right now, especially with the where the Fed futures are. But realistically, just like, you know, the real party is on Friday with the non-farms, and the non-farms is heavier. It's a way heavier data set with way more monetary policy implications, whereas jobless claims are weekly, and you've already had 3 other jobless claims in the last 3 weeks. So, and we've seen the market kind of ignore it. But granted, I mean, people will be jumping ahead of non-farms, and then Fed futures are still saying that we need to price in death and destruction. Earnings preview for MDB. Well, listen, Edgar, if you would like an earnings preview, I would say I have to charge you for it, but since you've been such a leader here, it's my pleasure. I am honored, actually, to be able to give you something, Edgar. God bless you, my friend. Mr. Granados, he wants the earnings preview. He's going to get the earnings preview. Okay? Y'all better say thank you to Edgar. Half of your memberships are there. So, amen. Amen. For Mongo, can I call it MongoDB? I don't even know how to say it. Mongo. Adjusted EPS estimate is 7 cents. Revenue is $336.4 million. Guidance estimate is to be 13 cents for the first quarter. Revenue $351, and then yearly 64 cents a share, and revenue estimate of 1.5. They have 24 buy targets, 5 holds, and 0 sells. Average price target is $265.95. 18% upside from the current price. Implied one-day share move is 17%, which is huge. And then adjusted EPS has beaten 12 of the last 12 quarters, and shares are down 19% in the last year versus the S&P index down 4.5%. So that's it. There's no other analyst comments, even though there's a lot of analyst coverage, 29 analysts, 24 buys, 5 holds, a lot of upside on the price target, and they are trailing the S&P by about 20%. Everybody use MongoDB. Walgreens urged by senators to clarify decision on mifepristone. I think that's the abortion drug. That was for MongoDB. Is it, what's the ticker? MDB, right? Bro, it's pricing in 17%. That's like massive. So most people are bullish. It has a lot of upside. I mean, where are they? That could actually be a decent play. It sucks that it's leading right now. You're getting that run up there. But it's, I mean, that's a pretty dude, 17% on a $200 stock. That means we're talking like almost $40 a share. Low key. That was for MDB, Mongo. Is it Mongoob? Mongoob, that's how I call it. Not MongoDB. Mongoob. You see how it looked like Mongoob? Because that D looked like an O, so it looked like Mongoob. It's fun to say. You should try it. Yeah, Powell spoke for 3 hours, and we got to listen to all of it. It was quite a joy. You said it. Was it fun? Was the drop before and after earnings? Yeah, but a couple of earnings, man. We've been getting like it's still kind of hard to tell which ones are going to hold. Like even Crowdbase was up 7% today, or CrowdStrike, then they dropped, then they went up, and then you see like SE and Dick's Sporting Goods going crazy. So the earnings reactions have been, even if they do good, you've had some very interesting responses. You need NVIDIA to die. I mean, I do have a short, but I don't need it to die. I mean, I'm pretty patient, man. I've been holding like a Qualcomm short for like 6 months now. Like low key. Western Union I like, but that yield, I mean, I'm still worried about it. Is it like Western Union and even what's the other one? There's one more, but actually they have been getting killed. So someone brought this up, and I even said they brought this up to me at like $13. So I'm glad it's dying a little bit harder. But I'd say it has to either give me like a fat yield. Otherwise, I would rather go for quality. Because I do think Western Union will be around, but I need to look more into their debt, their payout ratio. I mean, it's still $4 billion. So in a weird way, like they're still valued more than Redfin, I think. %8 yield, maybe a little higher though. Yeah, my McDonald's revenge trade is teasing me. He's like, come on, short me while I'm down another 1% so I can rip your face off. I'm like, no, please don't. IRM, that one's great. But we can't buy that till it gets a lot cheaper. It's up so much. It don't even go down. It's crazy, man. It's crazy. Oh, yeah, ads. My bad. My bad, bro. Yeah, it's okay. You'll make it through, bro. You're going to come out stronger. You're going to come out more appreciative, more grateful. You're going to be humbled by it. So don't even fight it too hard. You know what I'm saying? It's okay. You're going to be good. You're going to be good. That's good for it, man. Twitch chats don't know what ads are? Really? Does that work? Oh, it says unrecognized command. No, yeah, you guys are good. You made it through the ad, I'm glad. That's good, man. That's a good sign. Character development. All right, I'm going to go to the bathroom. Follow me on Instagram at The Trading Fraternity. I love you. God bless you. And then that's it. Amen.
What exactly are kids doing
What is
on Roblox?
Kids on Roblox aren't just
this is a commercial.
playing.
A little bit of a tweak, and we'll talk about Jay Powell in just a moment. In the meantime, as markets kind of search for direction here, I do feel like you see some clear direction when it comes to the semiconductor space once again. So let's bring it up for everybody. If you take a look at the stocks, you've got that index, the Philadelphia Semiconductor Index, up about 2%. On semi, one of the standouts, it is up almost 5% in today's session. BofA raising its price target to $100 from $90 a share. Right now, the stock at 82 and change. And you've also got AMD continuing to move higher. It's up about 3.5%. And NVIDIA, it's been on a tear. It's up another 3% among some of the names that are topped in the major indexes. And this, Mike, even as the investment firm Cleveland Research highlighted recent pricing weakness from memory. So a little bit of research clatter today, but or chatter, I should say. But nonetheless, the group is up.
Yeah, absolutely. And as you mentioned earlier, Carol, that yield curve is still inverting the difference between the 2-year 2-year yield and the 10-year yield. Now the 2 years almost 110 basis points above the 10-year. That's the widest since 1981. Good column from my colleague Cameron Christ today pointing out that, look, everyone obsesses over that Fed dot plot when the peak rate will be, but he says keep an eye on that long-term neutral rate, Romaine, because it's stuck at 2.5%, and he thinks that is what's suppressing the longer end of the Treasury curve.
And of course, that's having ramifications here for the broader equity market, that remains in a bit of stasis, down about 0.2% on the S&P, 0.5 on the Dow Jones Industrial Average. Similar moves down on the Russell 2000 and the Nasdaq. The bright spot, it is up a tenth of a percent.
I thought this isn't supposed to happen.
It's basically.
I don't know. Was there a rule that the Nasdaq?
Well, higher rate environment, right?
Okay.
We've talked about this in valuations.
Do I
need to bring out the textbooks for you?
It works until it doesn't work, right?
Yeah.
Let's take a look at the sector performance.
Are these
this
picture
year.
books?
Energy stocks, if you want a picture to go with that, just look at oil prices and where they're headed, which is down. So you have energy stocks losing ground as well, 1.7% lower. Financials taking a hit. Dick Beauvais over at Odeon Capital Group downgrading Bank of America, talking about how higher interest rates is going to put pressure on the net interest income. On the upside,
that was the daily Bostic Riz session. So there you go. Bax is on the high. And Okta again. Baxta. And then y'all know today is, I didn't know March 8th. Today is International Women's Day. I don't know how it differs from Mother's Day, but I think ladies out there, happy International Women's Day. Do I need to get my girlfriend a gift? Or is that, I don't know how this works. No, seriously, though. Yeah, you said it to my girl. You say, all right, happy International Women's Day. I didn't tell my girlfriend that yet. Get her some flowers? We're going to set a high trend there. That's it. And I didn't even know it was International Women's Day. It is International Women's Day, yeah. Do you get anything for International Men's Day? Is there International Men's Day? Honestly, that don't even sound as cool, to be honest with you. Like, as a man, I feel like I could get behind International Women's Day better than International Man's Day, because I don't know what that would entail. But then again, I don't know what International Women's Day entails either. Yeah, there could be a lot of possibilities. JPM is dumping 1.2, bro. Banks are getting smashed. I've said that's 3 days in a row. Dude, another 1.5 on Bank of America. How is this even possible? Well, I know how it's possible, but still. Oh, where's transports? Where's good old IYT? Remember we hit him back in August, September. We hit it high. It was like 240s. And then SPY's coming down here. You've been working your way down for the last like 15, 20 minutes. ACAM on the low. So you're dumping SPY's matched up with the yen. And then bonds have kind of rebounded. Stocks have been moving more than anything. How about shout out all the women, especially those who are part of the code. Let's go. Don't forget Edgar, Raul, and the Kings. And the hairlines, baby. I posted mine today. I might post it on Instagram. Some of y'all are asking for the Instagram one. I got you, baby. God bless you. God bless you. Wow. Bless the bottle. Hey, Josh, what's up, Reza? How you living, man? Good afternoon. Oh, my gosh, Chad. Oh, my gosh. Chad. Do y'all realize what just happened? I didn't even realize it. Dude, it's power hour. No way. No way. Bro, it's fully power hour right now. Oh, there it is. There it is. You don't listen to me like my girlfriend? Okay. Bad. That seems like an at-home problem. I don't know. I don't know how you brought me into this. I think y'all need to sit down and talk. Even then, my expectation, I don't even think you're supposed to listen to me like that, or like I'm supposed to listen to you. I don't know what sort of dynamic you got. But I feel you, dog. Not really, but yeah, could have been worse. Could have been. Thank you. Thank you for that one. There you go. Could have been worse. Could have been worse. Hey, man. See, that's my problem. I talk too much sometimes when I just need to just straight fall back on that, bro. That's it. Amen. It could have been worse, man. It could have been worse. You're getting married, Austin Powers? Bro, it was like 12 months ago. You were like, I met a girl on Bumble, and she tried to steal my catalytic converter. That was a trip, bro. So I'm proud of you if you're getting married. But then again, I'm like, did you have time to heal from that? Because it's only been like 12 months or less, sir. So make sure you take it. Just make sure you make it the right decision. Maybe she's the one. I don't know, but I definitely to go from like some random girl is about to steal my catalytic converter to I'm about to get married to another girl. That's a short timeline that I can remember. So I don't know what happened. That definitely was him. I do remember. The environment needs more healing than myself. Amen, bro. Amen. Amen. Greta would love you. Josh, marriage counselor. Nah. Sometimes y'all ask me for some advice on that shit, but like you guys are like purposely choosing the worst person. That's it, man. This is like the most stable relationship I've had in like years. So I'm not the one to ask, bro. That's it. I'm just not the one to ask. But if you would like my awful advice, just like anybody with awful advice, I'm willing to tell you. I could let it fly. But hey, it could have been worse. Could have been worse. Amen. Yeah, NVIDIA hates us all. Spy coming down here again, too. Watch out. Build-A-Bear earnings? Man, why do we still have earnings? It's over. Let's see if I can get you one. They already had their earnings. They raised full-year guidance pre-market. So Build-A-Bear already had that report. Is that dollar volume? NVIDIA is just on fire. I don't think anything could bring it down. Still reacting to the earnings. Follow-on offerings didn't hurt it. Chip China issues didn't hurt it. China did help with some of the other updates. Like, I remember it was like a week ago, something with the China chips. But other than that, I think it's just kind of buy-side imbalance. I could bring it down. I have to buy it, and there she goes. I feel you. I should have bought it and then shorted it. That could have helped me out. Hey, Josh, I looked at Coinbase. If you put money into ETH and stake it to ETH2, you get 4% as well. Do you want me to slap you now or later? You metaphorium, after you even said thank you for the bill, and then you sent me the dono, bro. And now you were like, I'm doing my cash management, my spot gains, and now it's been 20 minutes, dog. You already on Coinbase, fucking looking into staking now. I know somebody's out there like, haha, what a schmuck. I got like 17% on mine. But then Ethereum was at like $4,000. Okay, never. I don't. Fuck this shit, man. No Ethereum. I think you should own Ethereum. I'm not a fan of staking. I'm just not, especially with everything else now. I'm not a fan of staking. I've never been a fan of staking. Y'all hated me for it. Good times, man. Good times. I don't know what made you guys more mad. Me telling you I wouldn't. I don't know. Something about this 19% yield across the board and these companies offering me quarters of millions of dollars to promote for this crazy. I was like, something about this does not seem legit. And y'all got more mad than you got just as mad as the ads, bro. So I don't know, man. I was serious. So I don't know. That 3-year badge, you should have probably heard some of it, but I would be careful with staking. That's all. I'm just not, like I've told you, like I even showed you here with the ETFs in like certain areas. You know where you're getting your money from. The Ethereum, I mean, I do like Ethereum a lot better, but just the whole idea of staking, it's too new for me. So that's something I could balance out my comments with it. You know what I'm saying? Is very, very simple. I am not fully against staking, and I actually think DeFi is very, very cool. And I think DeFi can change a lot of the world in finance. However, it is still way too new. So right now, I really wouldn't be staking anything. And why? Because I could get more money for my United States dollar. But in the future, maybe with more history, and once we see where ETH 2.0 goes, and once we see, more of everything, fleshed out with the legislation, we'll be able to go from there. But as of now, I would stay away from it. That's me personally, and I've been staying away from it for a very long time. $39.73. Yeah, you're coming down there. That was a pretty big one. I mean, part of it's liquidity. Like, even like Bill, like I'm telling you, it's better. It's easier than Treasury Direct. You could get your money out quickly. But like with Ethereum, your liquidity is tied up. So don't underestimate. You are paying a price to not move your money around. And I think people really learned that lesson when crypto moved violently and a lot of shit was staked. Because it's like, yeah, like it's good when things are chill, you know what I'm saying? But then like you got to think about it. If something happens, if there's another Sam Bankman, if there's another issue, who knows what happens with the economy? It's like having your money and having it, access to be able to move it. That is very, very important. And that right there can change a lot. So that has a price tag. So you stake with the Treasury Department, pretty much. I'm chill with that. Bonds are like staking. And yes, the Treasury Department is who I trust. Even though it's run by Janet Yellen, which is very ironic to me that I actually trust the institution with my dollar while fucking Jigglypuff is running the show. It's a pretty trippy concept, honestly. I don't want to think about it, so God forbid you even bringing that up. Oh, Metamorphium. There you go. Staking with the chat. I'm okay with staking the chat, baby. Oscar Toe. We need one of these today. Earn. Amen. Stake with the bank that's with the biggest military industrial complex on earth, indeed. And I like that, what's his name, Peter Zeihan, what he said about it. It's just like, it doesn't even have to do with military anymore. And I really, really agree with that point, just in the sense that, dude, the whole world is addicted to dollars. That's it. Nothing is going to replace it. It sucks, man, because, like, if you told this to, like, 2015 Josh would have said you're an idiot. Go buy more Bitcoin, get more gold. You're insane. The dollar's going to crumble. Like, there's no way it lasts. And then the OPEC and then the dollar. You know about the petrodollar. Like, believe me, you told me this almost 10 years ago. I would have had a way different response. But after what I've seen, even another 10 years on top of whatever I put into the game, it's just like, dude, the whole world is addicted to the dollar. And I don't think they're getting away from that. Yeah, we went over Mongo, and there's no analyst comments, but it's pricing 17%. Thank you for the gift, Metamorphium. Yeah, dollar nihilist punch in the air right now. I know, I'm sorry. I'm putting my life savings into the dollar. Stop. Stop with the foolish comment. You know why? Your money's already in the dollar. That's why. What are you saying? If I told you right now, would you work for me if I paid you $1,000 an hour? I'll give you a job $1,000 an hour. Would you take it? Think about it. You're already working. We're addicted. Get away from the dollar. I'll give you $1. If you could get away from the dollar, I will give you $1. You should try that. You guys want? I'll send you guys some foreign money. I'm gonna send you some what's it called? I'm gonna send you like some of the Syrian. I'm gonna send you Syrian dollars. Okay, and I want you to live one day off of a Syrian dollar. Fuck, I'll give you €1, and I want you to live off of €1 without exchanging it. And tell me how far you get. I do got Swiss francs. I love their money. It's nice. It's like Canadian money. Bro, the first Canadian to give me Canadian dollar bills, you know how much, bro, I spent a good 30 minutes trying to rip it in half, and it wouldn't work. I was like, this is crazy. I was like, it's plastic. And then I was like, I wonder if I could I tried to make a house out of it. I started doing a lot of weird shit, bro. Canadian money's dope. And it all look all beautiful and shit. Look like a bouquet of flowers. I have a little bit of gold and silver. It's definitely not like a big portion, but I have a decent amount. I mean, I got enough to keep it on me. Like, you know what I'm saying? Keep it on me. Always keep an ounce of silver on you. You know the sad part is one day that joke is not going to be funny. Like one day, bro, somebody is going to come in here and be like, yo, Josh, man, you know that thing you said about always keeping an ounce of silver on you? Well, that really helped me in this very extreme situation. And honestly, I don't know where I'd be right now if I didn't have that silver on me. And I'll be like, that could have been worse. Are we convinced to keep? You know, I think today's going to be a cuck day. I think right after Powell's if comment, all I was thinking, I was like, oh, today's going to be a cuck. If him saying if and taking a second to reiterate his comment moved us up here, but I think it's downside pressure because of jobs report. Otherwise, we do nothing. I'm tilted downwards, though, for today. Yeah, someone's gonna be like, I told you, Josh. I told you should always keep that silver on you. I lost 50% on my savings on Tesla weekly calls, but I made 30% back holding next week puts. Man, you sound like me justifying stupid purchases just so I could get the credit card points. I feel. That's what I be doing. If I go to the casino, I'm like, I just spent $1,000 on dinner, but I got 100 points in slot play. So it evens out. It evens out. Wait, what? This makes no sense, sir. Oh, I do need a what's it called? We have Vegas people in here. I need plugs in Vegas. I need restaurant plugs, and then anybody else in Vegas. I need who's gonna help me in Vegas. I need something, actually. And then this is not. I'm not calling out the drug dealers. I'll be more specific for you. Just anybody who could get into restaurants. Where are my promoters at? I need my promoters. That's it. Half of the drug dealers were like, hey, Josh, I got you. No, I'll let you know, man. Thank you. But no. Just talking to the promoters right now. Looks like I'm not invited. It's okay. I'm short on the video. I had shorted it yesterday, and then I added to it today. The Pepper Club? No, I've been to Pepper Mill. Pepper Mill's dope. How long are you going for? I might go, but I have a friend who needs me. He's like, yo, can you hook me up? I'm like, I get hooked up because I gambled there, but I'm like, I don't know if I could do that for you. And then I told him to go to Carbone, and he can't get a reservation. Then he was like, how do I get a table at a club? And I was like, you don't have any girls? And then he was like, nah, man. And then I was like, well, maybe you should work on that and stop wasting your money in Vegas, sir. So then, but I was like, I'll see, man. I was like, I know Chaz. That's about it. I'm sure, like, Chad is very well connected. Sadly, I say it sadly because it's true. I feel like you could get anything from the Chad. Like, if you're like, I need somebody who could fix a pipe in Antarctica, there'll be a Chad who works on that. You'd be like, I need you to get me into a very special museum event where they have rocks. And then you could get that, yeah. Access. Yeah, hit me up. Email or Instagram. Email, sadly, is what I'm better at. I think the Chad could get you a kidney, sadly. Again, I say that because, like, that's some, like, China shit. But, you know, they could pull it off. Tesla's been dying all day. Again, the Model Y steering wheel had an investigation as well as a downgrade with people saying there's more downside than upside. I'm welding a pipe as we speak. Yeah, that's where. That's the crazy part. I'll sell my kidney for $50,000. Listen, man, today's Wednesday, cold real estate. Like, if I were you, I would just be a real estate agent. You know what I'm saying? It's way less effort than selling a kidney. And, like, you get one, like, $1.5 million property. That's 50 grand right there, bro. That's 50 grand right there. So just, you know, I think you can simplify it. Like, I would just get into real estate at that point. Airbnb just hit the low. Ads, they should be coming in like 2 minutes. I can't believe it's already. This is power hour right now. Do you guys believe that? This feels very slow for a power hour. And we've been borderline selling 30 minutes before. Power hour just continued it down. And now we're just like slowly running into the low. I feel like quitting computer science and math minor to do real estate. Nah, do both. I think you could easily do both. I mean, I did real estate in college, and then I got a degree in political science and philosophy. But at least computer science, I'm sure you'll have a lot of things. But you could easily do both. I mean, I think Sam is a great example. Shout out Midwest Finest Realty, baby. You know, I was watching him work, go to school, and do real estate, and he was working with real estate companies, and he became an agent. He was doing all of it. I thought you meant Sam Bankman. No. I really think Sam Bankman is like, I think he is intellectually inferior. Like, I think, like, on a scale of, like, intellect, Sam Bankman would be, like, next to a chihuahua. Like, I've really realized it. I've already told you this theory. So, no, I'm not talking about Sam Bankman. 100%. Again, just a lot of things just stuck out. If you guys don't want ads, Chrome and Brave have plugins to block them. Am I going to get banned for saying that? Does Google get mad if I say that? They get mad if they tell you to, like, you're not supposed to tell people to, like, click on the ads and then charge all those stock people money. They're not allowed to say that, but I don't know if you're allowed to advocate for ad block, but I'm just reading your comments, so I don't know. You graduate making $90K from my room, computer science, just at home. That's nice. So you're telling me somehow you could get my mom's chihuahua in MIT? Listen, man. If Elle Woods could do it, so could you. That was a very niche joke. And honestly, I think only the old married guys are going to laugh at that because their wife made them watch it. Oh, you guys got to add too, so damn, only a portion of you even got that joke. I thought it was good, man. I thought that was a good joke. Oh yeah, she went to Harvard. Yeah, still, you see the concept. We were in the vicinity. We were in the neighborhood. You know what I'm saying? Your ad was to travel to Israel. What else were your guys' ads? Tell me your ads and I can tell you a lot about you. So you've been planning a trip to Israel, or you've been researching the motherland? Somebody said they got a Mercedes ad. They were probably looking to buy a BMW. That's it. Or they started looking at the Kias that look like a Benz, and they're like, shit, why don't I just get a Kia? Stock ad, you're just a degenerate gambler. That's why they keep spending that much money to show you that. You got a Red Bull ad, you're a crackhead. That's insane. Progressive ad, you probably just got in a car accident or you're about to, and the predictive AI knows that you're a threat to the road, so be careful out there. Yeah, stock market ad, you guys are just degenerates. You probably just closed out of an AMC trade a couple days ago and didn't tell me. You got an ad for lube. It's because your girlfriend doesn't love you. Sorry. She said, don't joke around with me, man. You might get a joke back you don't like, and it might make you think about it for a little bit. Grant Cardone, it's because you're interested in real estate, but you're too hesitant to take a step. So that's why you got Grant Cardone trying to middleman you in there to syndicate a deal. It happens, bro. You got a PayPal ad because you're a business owner, or you've been buying drugs on the internet. Jewelry. Wow. I don't know. Jewelry. You just trying to flex. You probably spent over $500 on apparel purchases in the last 30 days. Mattress ad, that's my fault. Amen. But you're looking to make good decisions in your life. That one's good. Therapy ad. You've probably been looking up a lot of psychological trading videos, and then the market's been getting wild. Online, yeah, Betterment ads. The Betterment ads, they get me too. I get them on TV, though. I don't get them on YouTube, so it's not as targeted. Hair loss ad, you already know the vibes. You got an ad for a Glock because you're probably in Antifa. Okay, now you're on a watch list. You got a farmers only ad. Is that like OnlyFans for farmers? That's weird. Car rental ads. You've been moving drugs in and out the state, probably in Atlanta. My Pillow ad. Yeah, you've been looking into beds, but you want to keep it affordable, and then you have a slight tilted towards Trump, so that's why they showed you that. Blue Chew ad. You don't have a girlfriend, but you'd be looking at too much sketchy content. That's why they keep showing you that. It's okay. Got an ad for my mom. Nah, because it would have came out the screen and beat your disrespectful ass. So, nah, that wasn't my mom. Could have been yours. Watch out. Capital One saving ad is because you Googled Bill and SGov trying to figure this out, and you're like, wait a minute, is TD really only paying me 0.35? City investor presentation. That's another one. Same thing happened at Total Energies today. Adobe Acrobat ad. It's because you're an aspiring content creator, and before you make $1 on content, they want to take $50 a month for you to make your thumbnails. I feel you, man. I feel you. You got the weird phone game ads. It's because they just thought you simple AF. That's it. They're like, we can't sell him anything. Just get him some like quick dopamine releases. Maybe he'll want to play My Tower or whatever that game's called. Yeah, they got you. Meta pop. Meta into the close. Yeah, Raid Shadow Legends. Bro, you know how many times they've asked me? They've asked me to promote Raid Shadow Legends. I kind of want to do it because it's fun, but that's it. They're like, hey, can you make a sponsor video for this new game? And I'm like, why? Like, what? I'm like, hey, guys, I know I just told you about these short-term treasury ETFs, but in the meantime, if you're interested in a new, fun, exciting game, I got something for you. This is a very odd power hour, but at least, I mean, you I don't know if you realized that you just got the 3:30 ramp. So 3:30 on the dot. We're probably just going to cuck around here unless we get the last minute candle. But a lot of things are moving up here. MDB earnings, after hours, Meta's moving. I mean, Amazon and Meta are up. I think TAP is going up. You should run it up. We don't care about that. I feel you, but it's just a slippery slope. Like, I know myself. Like, fuck it, man. You guys just watch out, because the minute I do start selling out, if I sell out, I don't want to say the minute I do. I'm going to go crazy. You know, first it starts with the Raid Shadow League ad, and then before you know it, bro, I'm going to turn this whole stream into idiocracy, man. You're going to have like 15 different boxes all flashing at you like, yo, buy a hair loss pill, want to get taller, and then boom, now I have a OnlyFans. I'm like, how did this happen? How did this happen? Either way, sign up if you want to know how it happened. What? Oh, NVIDIA, 240. Is it just official news on the... Yeah, Meta's going crazy now. We have a long way to go, man. Yesterday we were up at 190. So if it is going to rip off of that, it should go a lot higher. Star Tribune must face suit over alleged Facebook data sharing. Barron's article. Oh, that was recent. That was 10 minutes ago. Barron's. They said buy Meta. Layoffs will juice profits. I think that's it. Because Barron's is big. But I think that could be it. They said Jeffries is optimistic. They just reiterated Jeffries. And then Barron said, we believe the risk to reward is attractive. So pretty much same news as yesterday that got sold off. But the stock was at 190 last time. 189 yesterday. GATX outlook remains stable by Moody's. I think I'm still short on that with 25 shares. Oh, NVIDIA. Damn, SPY's already at VWAP? That was dude, that 330 ramp was actually massive. Hold on. That was like an extra 5 points from when I was just last looking at it. So now you're back up to the low end of today. It's going to be a full cuck. I mean, if you could close above 4,000, that'd be great, but I don't know if I'm asking for too much. Something just turned on. That one's big. Yes, NVIDIA. Apple not as much. Right, Amazon. Even Apple's still kind of dead. 0 day, yikes. It could be covering, but I don't know. That was just, it started out of nowhere. The sad part is it's a fast acceleration to nowhere. Like, sadly, all today is showing you is mother effers who just speed up to a red light. That's all today is. Sadly. That's why I'm like, it's really fast, bro. It's really impressive. If you could get like 4 more green lights in a row, you're going somewhere. But if that shit turned red, I mean, you just went 0 to 60 to stop the vehicle all of a sudden. So that's literally all day today. Are the CFTC commitments, are they live now? I'm getting an update on CFTC numbers for wheat futures, platinum, coffee, gold, all that. Yeah, bro, today was a hideous day for the 0 days. They both, calls and puts at the money, they both got destroyed. I think today they cleared today was like rolling a 7. They just cleared the whole board. Tomorrow is bearish, then Friday is bullish. Sadly, that would be a repeat of last week. It's open MES short 39.87 right at VWAP. The rally this spring is going to be epic. These down moves have no follow through. I agree with you as long as rates don't go up to 6. Then we will have to deal with it. And then we go up eventually. But either way, my cash will pay me. My cash, very good cash investment. Mason investment dialogue pipeline is down. Gunver says they're still hedging U.S. natural gas. What time is it? Dude, 12:42. Only 20 minutes left. 18 minutes, man. 18 minutes. And then right to VWAP. If you could get above here, it could be decent. But so far, last 10 minutes, was already large. I don't know what price we're at, actually. 39.86. I mean, where is this? Oh, did I not? Did I save it? I hope I did. Yeah, 39. This is a March 7th, yesterday's close. That's it. So you're right at break even. NASDAQ is up. 3994 is the 50-day. And then getting above 399, that'll be the good one. I think the CFTC, I've been seeing some updates the last couple of days. So there is a possibility. And then Fed futures back to 78. Okay, this one's moving. NVIDIA's going nuts. 30, again, I'd watch for what, 38.94 or whatever. I think that'll be the next one. Damn it, I closed out of that one already. If non-farm come in line, that'll be considered bullish. I think so. If it's slightly in line, that'll be the first time. I mean, to give you an update or a fun fact, the non-farm payrolls for 10 months in a row, and that hasn't happened many times in history. For 10 months in a row, the non-farm payrolls have came in higher than estimates. Dude, what the hell is this? Bro, this is 330 vertical ramp capital. Yo, what is this? It could be the semiconductors helping out a lot, but yo, this just got really big. Bro, that's 39.70 to 39.90 in 15 minutes. Yo, so you're getting back to the if candle. So now you're getting to the first candle where Powell said if. Apple was just leading the day. I think NVIDIA, that's a solid one, and then with Meta now playing along, if that could lift it up, it's still a mixed bag. Discretionaries, financials, healthcare, and energy are still negative. No, but that got big out of nowhere. Mm-hmm. No news. That's it, dude. That was 330 ramp capital out of nowhere. I mean, the latest update we got was probably what? I think Meta, but it's moving like Bostic, but without any of the Bostic news. The 0-day strike again. It was just right on 330. And then now you're above the 50-day moving average. So this is a little test, but you're leading futures to 4,000 now. 25-point pump off of that. That's crazy. GPS, WWE's on the high, FedEx. Bro, the low ticker just died, and high ticker, 30-second, 1 minute, everything. No news. No news at all. The only thing was the Facebook little buy recommendation, and then before that, we were just reacting. We just started shitting the bed from here on the bond auction, and then right when we broke past that point, we rallied into it, and now we're rallying. You're getting a little bit of that was 15 minutes of straight green. You had one baby red candle, so now you're calming down at the 50-day moving average here. But man. I mean, it looks big, but when it's all said and done, I mean, all this did was just cuck everybody. So I don't know how to, I wouldn't give it too much weighting. I mean, tomorrow will be an interesting day, given that it's not going to be the important data set. But as of now, I just, this just stopped you from going lower, but it's not as if this, you didn't really make an advance. I mean, NASDAQ is the one doing good today. Cut ES? Nah, you're at the same price as yesterday. So there's no point. We just got a free day. That's it. You were down a little bit more here today, but if you were down here and didn't want to cut the ES, I would cut the ES around here, 40.30. It's still like a $1,800 loss on it. That's kind of where I'd be there. WWE is in talks with state gambling regulators to legalize betting on scripted match results. Oh my god, dude, we fully hit idiocracy now. Oh my god, I'm glad I still got those WWE shares, but holy shit. That's a new level. That's a new level, man. You know that, right? That's that's the newest level of like degeneracy I've ever seen. What if we let a bet on a match that's scripted? And y'all over here complaining about the algorithms. Yes, it's like actually rigged, and they're like, yo, what if we let you bet on it? That'd be great. That makes the littlest sense possible. I love that the stock's reacting to it though. You already can bet on the NFL. Ah! He said NFL's rigged. Ah! Yeah, you actually can. So that's cool. I didn't win my Super Bowl bets though. I thought I would get one for $20,000, but no. It's okay. That's why I don't sport bet. Oh. Is that 10-minute rig? Yeah, I was like, why is it tweaking out? 10-minute rig, Chatadonia. Here it is. 3 at the 100 day, or at the 50 day for the futures, and then SPX is right there below it. 3992. This is near the highs of the day in that first opening candle, and again, the 50-day moving average. Volume's coming in. I think today's volume was a little light, though. Yeah, 63 million. It'll be like the day before near the highs. Do I wear Nike Jordan sneakers? I'm not going to tell you that because you sound like a narc. That's all I'm saying. Only person who calls them Nike Jordan sneakers are my dad. So unless you are my father, you should know that question. But I don't know why you phrased it like that. We have way too many brands, and then you call them sneakers. He said the Nike Jordan sneaker. I don't trust you, sir. No, I'm playing with, I don't know. I haven't worn a pair of Jordans in a while. Day 2. Powell, I mean, we're right at the candle of him saying if, or emphasizing if. Be careful with Raul. I'm telling you, my paranoia from last week when we had that 1 minute candle at the end, that's the only, I haven't seen that in a minute, so I would be worried about that. Now, I had Jordans in high school, but I was more of an Air Force One guy. But then I moved on to Sperry's in college. I haven't wore the Sperry's since, though. Right when I left college, I had like a year of Sperry's, and then I quickly got over it. Honestly, I got over wearing shoes without socks. It's disgusting. What's wrong with you? I was no longer, I had to retire my frat boots. All right, 8 more minutes though, Chad. Let's see if you could get above here. I mean, you're very close to closing at 4,000. That's it. It's either going to flush and die, or you make one final push, and then that will get everybody feeling some type of way today. And at least only Dow. Small caps are at break even. But you're still not above the 50-day, so maybe one step at a time. That closing energy is here, baby. It's here. what's wrong with NVIDIA. Nothing's wrong with it. It just keeps going up. I think maybe that's what's wrong. FedEx is on the high too. WWE, they want to rig gambling. That was a crazy piece of news. Meta's still going up. Kodak on the high. PH. Recession is over. There's that comment. There you go. We needed that one. Yeah, Ulta after the bell, that could be good. The 50-day crossed the two. I don't think so. The 200 days at like 39.40, and then the 50 days at 3994. Are we rocketing because of 0 days? I mean, that would be a good place to blame, but I think I think the market's cucking us. I think the uncertainty after today, and then Powell gave you a little bit of an olive branch. The jobs data was slightly bad or worse than expected, and then now we're still anticipating the next couple of days with the rate hike odds still maintaining well above 75%, if not 80. It's fluctuating within 2% every time I check. Powell just reiterated that if the data was hotter, he would go higher. This was 3:30. That's it. You hit 3:30, and then it's like they turned on something, but there was no news or anything else. So final 5 in 20 seconds. Let's see. It seems like you're struggling with the 50-day, though. That's where we're at right now. Oh, big volume already leading into final 5. Get ready. 5, 4, 3, 2, 1. Ding. Final 5. It looks kind of small for now. Oh, they're not clearing the orders. That's big volume here, actually. But it's not like dancing around too much. Jeez. 2,700 contracts. 2,800 contracts. 2,840. 27. I'm still holding CYTK, yeah. I do want to get out of that one. But I mean, there was even good news on one of the biotechs applying for resubmission. And they've been dancing all over the place. Then EBS has a biotech, and then ACAD. Next week, we might want to play that one, but we'll see. Citi CFO ends comments at investor conference. Bro, did it really not move then? Final 5. I mean, you had a lot of transactions. You're barely working your way up, but we still haven't moved yet. Because, again, the next move takes you to 4,000 on the futures. There's a little tick up right there, and you have not much time left. SPY, that run-up was nothing. I wish we had a reason for you. 78% odds. Meta, NVIDIA. Nah, you'll get Friday, we'll get a big move, and then Tuesday. You don't have to wait till next week, or you don't have to wait till March. Is that WM, Waste Management, on the high? Waste Management kind of popping into here. Big money selling their calls is hard. I mean, you have two types of, it's not even big money or little money right now. You just have cautious players versus not cautious. That's it. Anybody who's conservative, they're going to say, fuck this, I'm waiting until the data. Anybody not conservative and anybody confident in up or down, they're going to try to front run any of this. So it's like if you see downside and you think the jobs and everything's going to come in good, you're buying the dip out of everything loading up, and then vice versa. If you're like, oh no point of waiting for the data, it's going to confirm negative, you're going ahead. But I wouldn't underestimate the amount of people who are kind of just on the fence. So I don't even think it's big money, little money. I just think it's conservative versus non-conservative players right now. Oh, we got to bring her in. All right, ladies and gentlemen, We're making our final approach. As we make our final approach, we're going to be landing here into the second link terminal. Second link terminal in description. That's going to be your nightly watch list and main channel layover around 4 p.m. Pacific time. Then we're going to be taking off promptly around 6 a.m. out of sunny San Diego, California. So we make this final approach into San Diego International Airport. It's about 57 degrees and sunny, looking like a beautiful day, unless you thought Powell's words meant anything and you thought the market would continue a trend, because that did not happen. But we are no longer under COVID guidelines, so no masks are required, but we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate you guys' business. If you're interested in your Call Rapid Awards program card, please flag down your flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the coat, and hopefully have a wonderful evening. Let's go, baby. 1 minute. Go, 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 go. Ladies and gentlemen, boys and girls, you have less than 30 seconds remaining. Today had a lot of Powell, a lot of movement, only to barely move. You don't have much data tomorrow, but you get a little bit. And then Friday is the main event, and we are right at the levels coming into close. And you got a couple of earnings. You got less than 15 seconds. Better finalizer plays. Make sure it's either shares or options. Know what each one is going to get you, but you got to bring it home, Chad. Less than 10 seconds. Oh, my gosh. 5, 4, 3, 2, 1. Ding 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 ding. Oh no, let's go, baby. Wow, we did it, we made it, we did it, we made it. Let's go, baby. I need that GG. It don't matter if you made money or lost money. I know you learned something. Everybody who kept their head in the game, everybody playing. You made it through January, made it through February. Welcome to March and good game. All my laggers, all my lurkers, all my lovers, why you being shy? I need that GG at the bell. Let's go. All the members, all the stream alerts, all the non-members. God bless you and thank you. Let's go. Let's go. You made it to the bell. That ding ding was glorious. It's a ding ding ding. Oh, good game. That's what I'm talking about. That's how you play. That's how you fucking play. Let's go. Let's go, baby. I see you, Twitch. That's what I'm talking about. Good game. Bear, bull, it don't matter. Good game. You made it to the bell. GG. That's what I'm talking about, Chad. Let's go. You ready for Friday? You ready for Friday, Junior?
Everyone got like opinions and thoughts, why they don't mean a lot. Man, my money on stocks, I can show you the top. Every bottom I bought, both the key and the lock. Don't believe me, just watch. Use my freedom a lot.
I need me to rock. You won't see me a lot. Monday through Friday, you need me, let's talk. Oh, whoa, what's this? Uber said to be considering spinning off freight for IPO or sale. Said not to be imminent. Oh, that sounds very good. Are we about to get free Uber freight shares? Fuck yeah, bro. Oh, let's go. Oh, MDB too. Oh, yeah, I forgot about that. That's big news for Uber. No, that's huge. That's huge. Uber wants, they said it's not imminent, but they plan to spin off or weigh an IPO for the freight logistics unit. That is actually pretty big. How is that good? Because either investors are going to get money or they sell it off and then it'll change the structure with their profitability. So then that way now it'll just be a separate company. So any money that they're earning off of Postmates or the transport business, mobility, it's not going to go into spending money on another unit. And then they could separate the profits and then you could analyze the businesses a lot better. Not to mention if it has any sort of investment value gained for the company and then shareholders and whatever they get off of it. So it's actually very, very crazy. And they get to raise more money. Did Mongo come out? MongoDB. And then Biden budget would save millions in lowering drug prices, says Wall Street Journal. Mongo's not out yet. Hold up. Mongo's not even out yet. But that doesn't benefit shareholders. It depends. So if they spin off and you get shares in that company, and then you get them at a better price, I mean, that's one way, and that's the easy way. But if you really want the technical way, where again, it's easy to get mad at companies, but you got to realize it. If you spin off a division, what fundamentally happens? If you can now get rid of something that you're spending money on and that has not yet made you as much money as your other segments, what is the immediate response? There's one thing that happens as a shareholder that you would like. Something fundamentally changes about the value of your shares. Anybody know? Your EPS. So right off the bat, your earnings per share goes up. As simple as that, they're going to spin it off now, and then however much they're earning, and then the debt load is just instantly, if now they're already making money in mobility and everything else, it has a good chance to improve your EPS just naturally. So kind of a little bit of accounting tricks, but it just depends. I mean, I would, before I could give you the final answer, I would have to go look at really what they've done with freight, but you could run a quick check on it and just see how much of a liability it has been, how much they've spent, how much they've made on it, all of that stuff. So there it is. But Chattadonia, you got a couple of earnings on the way. You're already having it after hours. Today was a crazy day, but that's it, man. God bless you. We made it, man. Honestly, I had a lot of excitement at that bell. I don't know, man. I feel like it's a blessing that we make it to the bell every day, bro. You know how awesome that is, the bell? Oh, we did 2.4 thousand likes, baby. God bless you. Oh, no. God bless the chat. Hey, man. That's what I'm talking about. So thank you guys, for real. If you took any moment of your time today, for real, I want to tell you how grateful I am to have this opportunity and to be surrounded by such amazing people, and I hope we see you here in the future. But if you gave us a minute of your time today, you liked that video, you shared the stream, you were part of what we got going on here. I love and appreciate you, and thank you. And now, hold on, Mongo. Oh, they lowered guidance. They lowered adjusted EPS for the full year. EPS came in 57 cents on fourth quarter. They lost $64 million on $361 million in revenue. So revenue came in higher, EPS came in higher, but then guidance came in lower. And then I think full year adjusted EPS dropped. Oh, Mongob, that's big. 7%? No, there's no way. Damn, that's off of full-year guidance EPS. There's no way. Yeah, they see full 2024 revenue 1.48 to 1.51, and then adjusted EPS 96 cents to 110. Previous estimate was 64. I don't think it's that bad. Let's see. Bro, it's down 12%. 13. All right, I bought 12 shares. 12 shares at 198.43. Keep it small. It'll be $200 top to bottom, unless it moves another 10% down. Yeah, I grabbed down MDB. I'm going to try to flip that here. I don't think I'm going to hold that for too long. I just think that the guidance was bad. Forecast disappointed, but it definitely could have been worse in other areas. And then I think they raised their range on there. So let's see. But Chad, I love you. God bless you. So for real, man, thank you guys for being here. Everybody who held it down and contributed, thank you guys as always, man. I hope you're ready for more. We just made a little after hours play there, but it's beautiful. It's beautiful. But Chad, I hope you're ready for the rest of this month, man. The rest of the week, we got a lot. We have a lot of data on the way. I'm sure we're going to be dealing with a lot more stuff too, man. So for real, thank you guys for holding it down. Thank you guys for always supporting in the chat, supporting each other, making this a fun place, man, and always just having good conversations with me day in and day out, man. I really do appreciate it, and I am honored to be surrounded by a lot of y'all in here. So thank you. God bless you. We love you, and that is the day, man. So check out all the links. First link for the Scream Alerts Bootcamp and Real Estate course. Second link for the Nightly Watchlist and main channel. If you ever get confused on what we're holding, the plays, what we're going to do, this is definitely a good place to be looking. I'm sure you'll get some stuff out of it. Third link for that membership badge, baby. Shout out to all of the members. Amen, members. We wouldn't be here without y'all. And shout out to anybody gifting members too. Edgar, Metamorphium, you better not stake that Ethereum. Okay, but seriously, Chad, we love you guys, and God bless you. And big shout-outs to the members, man. I hope when you guys see those badges, you understand that that's people supporting, man, and it's beautiful to see the level of people that we have here and how we've had it for a lot of years, man. So God bless you all, and thank you. Fourth link for the merch. Maybe you want some breathable merchandise. I don't know what you're into, but if you're into breathable merchandise, I mean, can't really go wrong here, man. Can't really go wrong here. It's always beautiful to see. So check that out. Check out the other channels, Co-Real Estate Tonight. I've been telling y'all all day about it, man. Some of y'all were like, I'm going to go sell a kidney. I'm like, just get into real estate, bro. Make life easier, okay? So make sure you get into that. Check that one out there tonight at 6 p.m. Free real estate call. Hopefully we see you there. Check out the other channels. Follow me on Instagram at The Trading Fraternity. It's the one that's private, okay? So don't get scammed by any fake Joshes out there. Don't let them try to play you. Don't let them scam you. You know what I'm saying? Don't let them hit you like that. You know what I'm saying? Don't let them do that. Don't let them play you like that. So God bless you and thank you. Uber again on more freight news. We'll find out. But follow me on Instagram. My Snapchat. I posted my hairline too today. If you want to see that, maybe I'll post it on my Instagram. I don't know. I don't know. We'll find out. It just depends. It depends. Here, let me see. All right. 207. All right, I sold out of Mongob. $100 on that. That was nice. There you go. I made my 110. There you go. I was like, woo. I could have flipped the other tap earlier, but we'll take it. But check that one out. Check out all the channels. Follow me on Instagram. How to find 1,000% gainers. That's beautiful, man. That's beautiful. Amen. It's beautiful, bro. It's beautiful. It's beautiful, man. It's beautiful. You know that I love it. It's beautiful, man. 1,000% gainers. How to get that long term. Make sure you get that one there too. And then finally, the prayer request wall, baby. Amen. Amen. Me and my mom, we pray for y'all. A lot of Chads in here pray for other Chads. If you ever want to do anything for me, man, you pray for me. It's very, very simple, but the way we get down here, man, if it can't flow through you, it won't flow to you. We want blessings for everybody, man. That's why we always praying for every single one of y'all. So thank you for always holding it down, and I hope you guys are always growing and learning, and I hope you always got love for your fellow brothers and sisters. Amen? Amen. I could have made another $10 a share on that. Wow, that's crazy. Mongob's crazy, but shout out the prayer request wall. Finger to the sky, baby. If you know, you know. But Chatadonia. That's the day, bro. That's the day. You know that? That's the day. It's over. How do you feel, man? That's it. The day is gone. That's it. We're done, man. We're done. You know that? We finished it, man. That's it. Your only opportunity now is called real estate at 6 p.m. That's about it. That's about it. Otherwise, you got to wait till the morning or the watch list. You got 2 more, I guess, 4 p.m. and 6 p.m. You got some opportunities. I don't know how motivated you are, though. That's an individual, personal thing. You know what I'm saying? So I hope so. But, Chad, I love you. God bless you. Thank you again for being here. And that's the day. Go read the books, Richest Man of Babylon, Proverbs, New Living Translation, and The Strangest Secret in the World. And I hope you know you're blessed. And I'm going to go to the bathroom real quick, and then we'll wrap up today. Amen? Amen. Yeah. Cool music. Hey, uncle.
Benny, yo, Benny, you bullish. But baby, I'm not from Chicago. Heard me talking about Ivy and dripping in bad. They thought that I came from the hospital. No, I just came back from trading. Chest to the sun, no vacations. I'm really not trying to be flagrant when I tell you that most of my calls will be naked. Funny when I make a bad play, I get a standing ovation. It's like I'm addicted to antibiotics to try to get rid of this clap. But fuck it, I always come back in the AM. To the GG, what's that stand for? I am not a drug dealer, I'm a landlord. On my Tennessee the roof, that Mercedes-Benz don't need one. I went from Bailey to Bel Air, from the slums to the Ville to the top of the hill to a street where you can't park a car without parking pass. I'm trying to chill with my boys in the island off the coast, bar hopping like it's Alcatraz. Watching make moves like a salsa class. Plus I got so many bars like the 1 minute chart. I already know you can't handle it. You ain't making moves, you a mannequin. You ain't got that flame, that candlestick.
They ain't got that flame. Tell them it's a cold, not a game. Walk through the mud and the rain, just bring a little hope to the people in pain. I
I don't want lies, I want honesty. Negative vibes bother me. Stay up on your grind until you make it out of poverty. You ready? I'm ready. Let's get it, my bag on heavy. I'm zoom to Fetty. My pockets look full, not empty. You loaded, I'm loaded. We never gon' fold, you know it. That's fast right there, go quote it. It's coke, we goated. Different level, it's level, untold. They watching, we popping like options. You know, it's real, it's really real. Like PHILO time. Cause you can't help but make a meal if your people blind. Restless, cause I've been up grinding, I just want the Lexus. Cooking up like I'm making breakfast. Oh, I'm eating good, but you know I had to bless it. Looked inside the mirror, told my demons hit the exit.
That was Benny, that was level. Fuck the demons, fuck the devil. Throw the pebble, be successful. You can't tell me code ain't special. I got rich, I made a stencil like a chair. It's really simple, the framework is intellectual. Ay, like Curry on the chain, my brother, you know, wait, I know you know name. You ain't never seen my face, probably watch us in the game. Did it with a couple plays, let me kick a little lesson. You ain't never get a chase. What's yours, you always get what I'm really trying to say. Longer that you in the stock, more that's getting safe. You ain't like to shit I say, I ain't trying to make it stay. Hey, I'm hitting plays, I'm hitting weights. Your portfolio all day, mine's filled with mostly grace. Apple, Amazon, and Facebook. You probably know the names, you probably thought that you should wait, then went and bought a course to trade. Benny, get some clothes and buy to close this shit. Clap them if they talking on some hopeless shit. Cause I've been there and going back. I told y'all that I'm focusing. I know they getting mad. The news is fair as well as motivating. Let's go and a shout out to the vets. Hit the players, then we sending in the jets. Don't be shy, you could send a pray request. And the list got everything you missed. I love y'all, baby. It's a cup. 2020. Talk to me in 2030.
You know what it is, baby. Cold music, 2020, we coming. Watch out, on the radar. Tell them I just want the Lexus. We out here making moves, baby. Let's go.
Ooh. Chatadonia. Oh, Chatadonia. It is time. Y'all been getting a lot of PHILO, huh? A lot of PHILO. I like this PHILO. You know why? Because, like, I accidentally talked about it with y'all today. I was just joking around. You know that? Like, I don't know if you remember, just not too long ago, you know, Boomer was like, yo, man, just like, why don't, if you do this, you sell this, you could do this. And we got in a little rant. And that's actually the PHILO I wanted to give you today. So here's the deal. What I'm about to tell you can spur a lot of anxiety, okay? And I hope you do not let this PHILO confuse you. I hope you do not let this PHILO be a seed that plants confusion in your heart. And I hope you watch your heart. I don't know. Can I give you all that reminder too? That's definitely been something that's been on my mind lately as well. Just make sure, well, guide your heart. Remember, that's where everything comes from. You know what I'm saying? The good, the bad, the ugly, it's all deep down in there. You know what I'm saying? Don't be afraid to fuck it up. You know, you're full, undivided, pure, and peaceful. You forgot about that? Oh. So that's the disclaimer for today's PHILO. So do you guys all accept the disclaimer? Will you approach this with pondering and maturity? And will you allow this to help you grow and to not hold you back? That's the terms and conditions of today's PHILO. Is that you guys with me? Is everybody on the same page? Absolutely. Accepted. Cool. Stick around if you're down. Otherwise, you got to get going right now. You feel it. Amen. PHILO. It's beautiful. So here's the PHILO. Watch what it leads to. I'm going to say it again. Today's PHILO is watch what it leads to. Oh, I hope you feel me, Chatadonia. I hope you feel me. This goes hand in hand with the habits. You know that? Because that's what I was saying. We were talking about it. Oh, but it's the most serious thing ever. Even if we were joking with it, I really hope you guys get it. For real, the one thing that I get worried about And that's why I'm saying this could make you overthink some things. I'm never really worried about one event. Oh, I don't know if you feel. I'm not worried about one mistake. I'm not worried about one success. Chad, do you feel me on? That's the beauty here, because somebody out here, one of y'all just made, y'all be like slipping up tiny. I don't know what part of your life you're dealing with, but then you letting one little mistake get, no. I'm not worried. That one mistake does not matter. That one success does not matter. Like, do you get what I'm telling you right now? What matters is what it leads to. And you really, really got to think about this. This is why the habits are so important. It's what is this one thing going to lead to? It's not about that you slipped up. It's not about that you went and you spent a lot of money. Oh, you had bad financial management. Is no. Does that bad financial management lead to a series of bad financial steps? It's not that you made one bad trade. Does it lead to 15 other bad trades? It's not that, oh man, I was mean to somebody. It's like, no, did that start the habit of leading into being mean to a lot of people? Oh, I was greedy. Oh, was it? Or what did it lead to more? Oh, man. So, Chad, it's very simple. It's a small PHILO. Watch what it leads to. And I really want you to think about, when you're weighing your decisions, is asking yourself, what does it actually lead to? This thing that I'm stressing about, this thing that I'm actually doing, okay, I want to do this. I have multiple options here. Like, you know what I'm saying? But are you taking the moment in time to ponder it and actually say, well, is it really about this one thing that I'm doing, or is it really about kind of the message that I'm sending to myself and the doors that I'm opening? Because that's the beauty of it, man. This is for both success and failure. Because, right, when one thing, that's the thing I'm very concerned with. And that's the beauty, too, because when you do build up consistent habits, man, that's like, like I said, I've been praying for a lot of y'all, man. I've been reading the prayer requests. I've been going through a lot of them. And even then, it's like, it's so interesting how we all have our own challenges. But it's like, when you really, really think about it, it's like, if you're leading about what the next thing leads to, this might give you a little bit of peace. You may be able to really realize here, it's like, okay, if I am able to calm down here a little bit and realize that, hey, if I stick with what I do know, and I do go with something I know is true and good, and you stick to that, man, it's not about, it's easy to reap what you sow when you're really focusing on what's next rather than, or what it leads to, rather than focusing on, this is it, one thing is going to define it, one is this, one is that. Nah, because that's not really the case. So, Chad, I hope you feel me on this. And like I told you in the beginning, I hope this doesn't confuse you, because speaking from experience, the problem with this logic is that this could turn into a very big fear of yours, because I've seen this be a fear in my life where now I'm thinking way too far ahead on things. I love the future. I love the long term. But then I start having these problems where I'm like, okay, well then, oh, wait, but if I do this, then that could lead to that. It's like, oh, I just drank a sip of a soda, and now the soda, and now, boom, it's going to lead to, it's like, you know what I'm saying? You got to find your balance. And I really hope you do find your balance. But this is funny because we talked about it in a joking manner today. But it's like, I hope you realize this is the real worry. And this is the real thing that will get you your success. This is the real thing that will help lead you to that road of peace and understanding everything in life as a whole. And what does this actually lead to? And then also being able to fight back against any bad habits. Oh, check. Amen. I don't know if y'all feel me. I don't care if you get anything about this that leads you forward, okay? I don't care. I don't care if you can't use this PHILO, to advance you, at the very least, I know this PHILO will help you defend. Oh, come on. At the very least, I know this PHILO will help you defend, and this is what is going to defend against any bad habits. I could tell you that right off the bat. It's okay. And go ahead. Fall back into the bad habit trap. That's why it's a habit. The chances are you're probably going to repeat something that's even bothering you. You know that. That's the irony of being a human. We all know something that will bother us, and we will do it tomorrow. Y'all don't feel me, man. So I hope this line of logic could help you defend against that and saying, well, what is the problem? Well, maybe there isn't a problem. Maybe I don't need to stress, but maybe I should consider what this could lead to. And maybe I should consider that, yes, maybe this one bad decision and maybe veering from small good decisions, maybe it's not going to kill me now, but what does this actually lead to? What is this door actually going to open up to? And that is what you should be worried about. I'm not worried about what you do today. That's the irony of it. You know that what you do today is really meaningless. Oh, I hope you seize the day, and I hope you do a lot about it. But what you do in these moments that lead to the next, that's what's really going to define it. Where are your habits when things are not looking good? That's going to define it. Where are your habits when things are good and easy? That is going to define it. Isn't it funny? Because a lot of that's like in the moment, and you don't really know that moment, even if you're in the moment, because then the moment is very fleeting. But then when it passes, it leads to the next step. So I hope you're thinking about this, Chad. And I hope you're asking yourself what this will lead to. And once you could kind of figure that out a little bit, oh, it's going to be either defensive or maybe it could be offensive. But I'm going to leave that one up to you, Chad. So I hope you take that to the bank. But that is your philosophy, ladies and gentlemen. Make sure you subscribe. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video, okay? Amen, man. Amen. Amen, bro. Amen. What will it lead to, bro? What will it lead to? So please, just don't hype yourself up too much on it. Like I'm saying, I say that to you as something that I have had to deal with, like straight up, because I love thinking like this, and I love, it's helped me out a lot in my life, being able to think ahead and to be able to encourage myself at many, many times. But also at the same time, I understand this is a double-edged sword. So I really hope you approach it with the maturity needed, and I hope you do understand. I mean, at the very least, right now, it doesn't really matter as much. But just don't beat yourself up over thinking about this, and do not let this lead you into paralysis by overthinking what this will lead to. But, an awareness of this and an acknowledgement can go a very, very long way. You feel me, Chad? You feel me. They feel me. Let's go. But Chadadonia, that is the day. I love you all. God bless you guys. Thank you again for being here. Thank you for holding it down. Thank you for allowing me to even share a PHILO with y'all and for receiving it. You know what I'm saying? That's amazing in and of itself. That's its own little blessing. So, Chad, God bless you. Thank you all again. But that is our day. So we got to get going. I'm going to see you on the watch list tonight, and we'll see you on Co-Real Estate. But either way, we're going to get our moment again in the morning too, I hope, God willing. But that is it. Go read the books. I already told you that. And just don't forget why we're here and why we thinking about the future. We thinking about our destiny. Why we keeping that faith, hope, love, and persistence all in check. And understand it. Love above all else, baby. And why we got to keep in the game, stay in the game, and work hard, because we will reap what we sow, baby. Why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. 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 I'll take it. I'll take it, Chad. Let's go. So, Chad, I love you. Have a wonderful, beautiful, glorious day. Enjoy the rest of your day. Give it 20,000%. You know what I'm saying? That's it, man. You got to do it. You got to do it. You got to give it 120%. You still got a lot of time. Hit that gym up, too. Okay? All my late waking bakers. You better come on. It's too late right now. So, we'll see. We'll see. But, Chad, I love you. Have a great day. And peace. Yeah, you guys, I didn't talk. You didn't hear me the other day. Yeah, I got to talk right now, huh? And what's up? I didn't come out of anywhere. I was able to come through. And it's just we're excited to be here. Listen, I mean it seriously. It's not hyperbole. Well, you should be worried about what's next. Come on, I feel like Drake, huh? You know, he said, what did Draymond Green or Drake? Drake said it. He said, let's see what's about to happen next, okay? Okay, I love you. All right, I gotta go. Good morning. Hello.